know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Ooh, Merry Christmas, Vanetta. Look at you.
It says Merry Swiftmas.
Oh, she knows. I was gonna see if I was gonna be able to get through this segment without hearing about this, but go ahead. What happened to you last night that was special, Vanetta?
What?
Oh my God, you don't know?
No, I do know. I do know. How do you know?
Oh my God. My dad said before you got on, he was like, okay, did you see the news? And I was like, what? He's like, Taylor Swift, Travis Kelce, they announced the wedding date. Don't say anything. We won't be able to stop Vanetta. It'll be the whole show.
Yeah,
Don't
but you
say
know
anything.
that's not the date. Like his team still has practice. Like he's whatever. But like
It's not
it's not?
June 13th?
No, because they have OTAs that day, and he'd want his teammates to be there. So, I mean, I love that. That's for the general public. When Tom says you're so public, when it comes to T Swift news, you're so public. But
Oh, yeah.
I knew I was going to get backhandedly slapped somehow. I was trying to be so nice, Nick. I try. I really try.
no,
I
I
just
thought
thought
you. I do have news though. I was like, how did you know? Because I was just chilling in my house last night. I get a text from my dad. And he's like, turn on ABC. And I'm like, what? I was like, I was like, okay, fine. And I had just missed it. But apparently on a random side quest, my aunt was in the audience of the Celebrity Family Feud holiday special that aired last night. And she won $5,000.
Oh, how
Wow.
sweet.
If you've been to any of our Atlanta shows, you might have seen my aunt. She's a huge fan.
Oh, that's awesome. I always thought those shows were fake. Like they didn't give the money. Like when we would do our stuff, anybody that gave away, like all those, like that car we gave away in California, that was one of us. Come on, you know that was fake. You know that. So she really won $5,000. That's awesome.
Yeah, she gave a mysterious text to the group family chat, but then we had to watch and find out.
That's awesome.
That's awesome.
Very nice.
How was your evening?
Good. I mean,
Not as good as yours.
You didn't win $5,000.
No, didn't win $5,000. Did not win $5,000. So, Nick, did you win anything? Last time football on. Did you win anything with football?
Yeah, no, I channeled my inner Robin Maria, and I took the under on the 54 points on, what is an astronomical number for a Thursday night primetime game. Two great offenses, and you take the under 54 and a half. You feel like you're a genius, and they come out and score 74 points. So it wasn't exactly the right play for the night.
Wait, who won that game?
Detroit.
Lions.
Oh, the Lions won. Oh, that's exciting.
Must win. I mean, the NFC North is absolutely rocking right now. It's going to be a wild little end of the season here. A couple games. I mean, they needed to win that game to get to have a chance to get into the playoffs. Now they need a couple things to happen. I mean, this Bears-Packers game is crucial. It's a huge game. Yeah. It's a huge game. Huge game for the Bears, more so for the Packers, but it's a big game.
You're not kidding, and I don't want to put any I don't want to shed too much light on this because the kids are real nervous, but in JV hockey we got 3 games this weekend. We got to win 2 out of 3 to stay higher in the rankings than being the bottom of the division. So we got a very tight race there too. Very tight race. 1 point.
I don't know. You got to look out for Crystal Lake. I don't know.
Got to watch out for St. Viator and the Carmel. I think the Corsairs, I believe they are the Carmel Corsairs.
Yeah, the teams you really got to worry about are like when you get up north, you get to like the Wisconsin teams, the Minnesota teams, the Michigan teams.
We don't get that far, son.
You don't go that far because those are the teams.
We get knocked out by Lake Forest. That's about as far north as we can go.
That's fine. That's fine. I feel like he did have some of those games
Oh,
before.
we did. We did. Sometimes we get good enough to start playing those teams, and we go to Minnesota, something like that. But
Yeah.
it'll be tough this year. We'll see. We'll see.
Those Minnesota kids are built different.
Oh yeah.
They
Oh
are.
yeah.
They are. They
I
got
like the hockey flow videos, the Minnesota hockey hair 2025 video. I'm looking forward to that.
The lettuce.
Oh, yeah.
The lettuce.
Yes.
Yeah. Yeah.
How was your evening, Nikki?
It was good. That was it for me. Football Thursday.
I thought, wait, you don't have another soup in the hopper?
No soup. No.
Did
soup.
you buy
chicken
a ladle?
piccata? I made a little chicken piccata. That was my dinner for the night. It's one of my favorite. One of my go-to. Very.
Chicken piccata?
Yeah. Lemon, capers, beautiful.
Very nice. Look at
Yes.
you. Very domesticated.
Yeah, I'm not yet on like the TikTok cooking videos yet. You know, that's not my level. I do have the setup now that I have all the lights and stuff set up in here. That could be my next thing. I might have that as my side hustle, you know?
I mean, all the chefs I follow on TikTok, they don't have shirts on.
I could do that. It won't be, I don't think I will compete with that. I don't know yet. I got to work on that. I got to work on that a little bit.
The OnlyFans chef or something like that.
Yes.
You could be. That would be fun. You should
Did
try
you
it.
ever buy a ladle?
No, that's still on my list. I forgot about that. It's one of those tools, you know, one of those things that you just forget about until you need it. And now I need to get one.
So
I
what do
sold
you,
my
what do you
plastic
use? Like a big serving spoon or something like that?
No, I got a plastic one, but it's not good. It's not big enough. It's not like.
Yeah, that's what she said.
I need like a big one.
Yeah.
Yeah.
I got
It is the first weekend in December. How many weekends is it going to take you guys to start your holiday shopping?
Oh, I started already for the loved one, for the missus. Oh yeah, I've got a few coming already, probably this week.
You know, you can't just put a bow down there.
No, you're supposed to put it inside the box. You cut a
That's
little
not.
box.
You can't.
I'm
I
sorry.
remember Saturday Night Live. Yeah.
Yeah, that's Saturday night.
So good.
Yeah.
No, but have you started your shopping, Nikki?
Yeah. I got a little something in Arizona. Good one. Slippers.
I'm looking forward to that, son. Thank you. I knew you were thinking about me, but I didn't know you were thinking about me that hard. That's awesome.
Yeah. No, we all the kids, the 15 of us basically that are in the Batista household. We've done a handshake agreement of no more presents.
Yeah, so that's the way to go. Or you get one, or you do like a Secret Santa thing.
Yes,
For one,
yes, we did that one year. That was
Because back in the day, you would all just get presents for Vinny, but now he's a man.
Yeah, he's out of the present zone. I mean, he'll get like, you know.
Don't worry, he's sending you his Christmas list.
Yeah.
Just in
He's
case
getting an $8,000 pair of skis. He'll be fine.
Right, in case you feel the love warming your heart, the closer you get to Christmas, he'll send you. He already sent. If he hasn't sent it, he'll send it soon.
Yeah.
You can chip in to his BMW X5 fund.
Oh, he's looking into that. But the Audi might go.
You got to get him something that can handle the weather, though. You know.
I know. We always talk about that. You know. I know.
Yeah.
I agree with you. I agree.
Yeah.
I think it's all-wheel drive. He reminds me. The Audi is all-wheel drive.
Oh,
It does remind me of that.
it's an upgrade. It's an upgrade for the all-wheel drive.
Yes.
Is your Christmas bat gonna be like one of those commercials with just the car in the driveway with the massive bow?
He did that for me, but it was a 1988 Mercedes Benz.
I did. It's
Yeah.
But it wasn't 1988.
No.
No. It was
2008.
2008. It was about 2 decades too far.
Yeah.
But he put a big bow on it, though?
Yeah.
Oh, that's cool.
Yeah.
Aw.
Yeah.
We try.
See, Nikki, he does love you.
Yes.
I'm already getting the emails. Do not get him a new Audi.
Or the BMW. The BMW, the fixing it is going to be just.
Yeah, no. We're going. I think that I really want to get him I think a Ford Explorer is where I want to go.
Nice.
Yeah, I think that's the I think that's the way. A used Ford Explorer.
Oh,
Yeah, that's gonna have some maintenance issues, but you do you.
yeah. Go with a Toyota. Something like
Well,
Yeah. We've looked at the 4Runner a little bit. I mean, looked at. I mean, I just
that's too big. Get the RAV4.
yeah, RAV4, something like that.
RAV4 is a lot of his friends have a RAV4. That I don't want to.
I'm an adult woman with a mortgage. I have a RAV4.
Yeah.
He says it's Dad, don't make me drive around in that. Is what he says. So.
Yeah, it got to be something cooler than that.
Yeah.
Tell him I don't spend a lot of money on gas.
True. But bless his heart, he wants a Camaro. I finally got my Brooklyn son that I've always wanted. He wants a Camaro. He can't get it. Not going to have it, but that's what he wants. I got the one son who wears the gold chain with the horn on it. Bless his heart. And then I've got the other one who wants a Camaro. I think my genes have passed on pretty good.
You just need another son to go into waste management.
Yeah. No more sons, no more daughters, please. I'm all good.
Maybe the grandsons.
Maybe the grandson.
They'll open a dry cleaner.
It runs in the blood.
It does run in the family, yeah.
Dry cleaners are good. Yeah.
Well, we are delighted that you are joining us on this fantastic Friday. We hope you are warm and cuddly wherever you are as we round out the week here of Tasty Live programming. Had a lot of really good segments, some really good research insights. If you missed any of it, check out our website, because what else are you going to do this weekend? But in the meantime and in between time on this morning show, we got the weekend stocks at the top of the 8 o'clock hour. Jamal in the house. Please ask Jamal about his random side quests. He went to talk to a bunch of kids. Jamal's always out talking to kids. I love that he gives back. He gave them all Julia's book.
Awesome.
But yeah, ask him about that. It's on his LinkedIn. So he does good stuff. Talks to him about finance. So that's awesome. And then it's Friday, so it's hashtag Fan Friday. So we got Fast Market. I don't know what that accent was. I'm sorry. Fast Market is where viewers write in with their trade ideas. I'm having a stroke. And we're going to see how many trades get done. How did your Johnny trades go yesterday, Nikki?
It was good. We did 5 trades. We did Lululemon. We did gold. We did SPY. We did ETH. I think we had one other that I might be forgetting.
Okay.
But we got a handful of trades on very quick. It was good. Walk through the thought process. Talked about Tesla, broken live,
which was great.
Yep. So we'll continue to do it.
Gold. I think you did gold, Tesla,
SPY,
Lulu, ETHA, and maybe even oil.
No, that was from
before. I'm sorry. No, just those 5. I'm sorry. Gold, Tesla, SPY, Lulu, and ETHA.
Yes.
Perfect. Well, we're going to hopefully get even more trades. Markets move in a little bit this morning. So that's going to come out at 8:40 for Fast Market and then 9 o'clock for the market measures. Why the same premium doesn't mean the same risk. Oh.
Ooh.
Oh.
Yeah, it should be a good one. It's a follow-up to what we did yesterday. And we're going to be just looking at strangles and 25 delta puts. And we're looking at the last 5 years. So, you've had some big moves to the downside, but it's been mostly up. So you'll see that the puts have obviously performed very well. But just looking at kind of quantifying risk.
Interesting. It's like if Liz and I try to wear the same short top, on me, it's fine, but on her, more risk. She's 6 feet tall.
Yes.
You're right.
And then finally, we got live from the trade desk. We got Quentin in the house. He's counting down all the top trending tickers over at Tasty Trade. So that is always delightful. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, across the wire. Our leading story, top story, jump in.
In today's headlines,
Breaking news.
All right. All right, everybody. Today's a fantastic Friday. It's December the 5th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Good news. We're getting government data today. Bad news. It's a little bit stale. It's from September. It'd be all right. We dust it off. But we're getting PCE. Yeah, you know me. Investors see Friday's inflation report as a gut check of vibes on the economy. We have the Fed Fed meeting next week coming out, and we're going to have PCE. What are you looking to do this morning?
I hope we get some sort of movement. That's what I'm hoping. But I think we're kind of stuck in the mud until the Fed has their big day. I mean, yesterday was a grind until the end of the day. Today, I mean, if you've been watching futures, they've been up between 5 and 12 for the last, since basically the open yesterday at like 5 o'clock. So I'm hoping this brings some volatility in, but I'm not playing for that. I don't think it's going to happen.
Yeah, very tight move last night. 15 handles top to bottom, basically on the EMS. You do have bonds under 116, 115.30. They got down to 115.25. That's about as low as they've been since October or so. So I know we sold some puts in there. Maybe we'll see some more action in bonds today.
Yeah.
Numbers should come out in about 15 minutes or so. So we'll just let that percolate while we do a couple more stories.
Bonds are down 3. Even the S&Ps are up 12 prior to the number.
Yeah.
Silver extends its retreat from record highs as traders continue to book profits. Hi-ho silver fell below $57 an ounce, having lost more than 2% in the previous session to snap an 8-day winning streak. Well, we had a good run. What do you guys?
No, it's back. It's back. Silver's
All right, I pulled this last night. I'm so sorry.
Silver's up almost 2%, 1.75%, up almost $1.97 back to 58.5. It traded up to 59 and change. So buy the dip in silver seems to be alive and well. It is at the highest end of its range.
Yeah, we had a moment yesterday where that gold silver ratio it moved in our favor. We took some profits on that trade, but it's kind of reversed that entire thing again today. It's in the low 70s, very, very low relative to the last like 5 or 6 years, and even going back further than that. The 70 range is certainly a low range for that. All
right, so that begs to ask the question. Yesterday when you covered it, you were like, "Oh man, I covered it. I mean, I covered it a little bit too early. It went a couple of ticks more in your favor after you covered it. Now it's all the way back to where you put it on the first time.
Yeah.
You do it again.
I think we do.
There you go.
He's doing it. He's locked in. He's got that 1,000-yard stare.
I knew I could talk you into this.
What you don't like it? I mean, come on.
I do like
so
it.
The gold silver rate, it's down 1% today. So, and that's just looking at gold
the percentages on gold, right? Yeah, the gold is up, let's call it 1/3 of a percentage point, and silver is up over 1.75%. You're doing 2 gold, so all he's saying is, 1/3 of a percent, 1/3 of a percent is 2/3 of a percent, and silver is up almost 2%. So it's moved back in the favor that we like to do it. You sold silver first. That's usually the harder one to.
Yeah, I did the wrong.
You did the big one.
I did the big one.
Uh-oh.
That I'm going to reverse that.
Abort.
It must be the chair. Everybody.
I know. Don't put that one through.
Everybody who sits in the chair does it wrong.
I closed it out.
Yes, I got it.
I don't think
you want to trade the micros.
Yes.
Pull up. You're too low.
All right, I'm in the gold.
You bought gold. You didn't sell your silver yet.
I got to get filled on it. Still working here.
Yeah, silver's usually the harder of the two to trade. That's why I said you would do that one first, but you don't.
I routed it and didn't.
You don't have to listen to me. It's okay.
Oh, whatever.
So you would route silver first because it's hard. Oh, okay, that makes sense.
Sure. You always want to do the one that's less liquid.
Yes. All right, so I'm in. Short 1 of the SIL contracts, long 2 of the micro gold.
Very good, sir. Very good.
And I get 10% of the proceeds of these profits.
Absolutely not. I mean, Tom used to say when I would give him grief for his positions, you can't spend my profits and you don't take my losses.
Yeah, but I give you these ideas.
No, doesn't matter. Doesn't matter.
In other commodity news, oil heads for a 2% weekly gain as Fed hopes boost market and Venezuela tensions loom. What are you doing in crude oil?
Crude's been choppy here. I mean, we've been sitting around the 60 handle for the last couple of weeks here. I know it bounced off of like the mid 50s. We played it to the upside. We had short puts there, which was a good trade for the move. And then we put on an iron condor for what's your assumption the other day. So we are flat delta in crude, short some volatility. Volatility has come in. IV rank was like 24, 25 when we put the trade on. It's now 17-ish. So that's, that spread has come in 50, 60 bucks, which is 5 or 6 ticks.
Okay. So we're probably not going to add anything there.
I don't think so. No. Yeah.
In other news, Bank of America will begin allowing its wealth advisors to recommend allocations to crypto in client portfolios starting next month, the U.S. lending giant said. It's a landmark moment for the digital assets sector. Welcome to the party, Bank of America.
This was about time because you had Vanguard the other day. So now they can all get into it.
It can all be happy now. Yeah. You get a little piece. You get a little piece.
Yeah.
We'll roll up. Yeah. Yep. That's right. Bank of America basically unchanged this morning, maybe down 20 cents or something, but it's just off of all-time highs. IV rank only 5, and bank stocks aren't very compelling to sell premium in, at least.
Yeah.
Bank of America, all-time highs.
The CFTC said yesterday that spot crypto asset contracts will begin trading for the first time on futures exchanges that are registered to the agency. The move, which was first hinted at in August, is another effort by the Trump administration to weave digital assets into mainstream finance. Let's check on our friends at iBit and Coinbase, I guess. I don't know.
We can do that. If you look at Bitcoin itself, it looks like it's trading around 91,000 and change. That's down about $1,500. Trying to not go under 90,000 again. Coin is 272 and a half or so, down about $1.50. So both are a little bit weak this morning. That's the red you see on the screen this morning. A little bit in the bonds and a little bit in crypto. Everything else seems to be slightly green.
Mm-hmm.
On my futures watch list, at least.
Yeah.
Hey, earnings from last night. DocuSign lifts its sales view as subscriptions continue to grow. The digital document signing company raised its full-year outlook for revenue to around $3.21 billion. Did you do anything in DocuSign?
We did, right? You did a little bit of an upside play, right? The stock.
Yeah. Neutral to upside was kind of the play. Small trade, but it
looked right after DocuSign came out, it was only down about $1 or $2, which would be perfect for what you did. Long back month, short front month on a ratio. Down $5, you'll have a call spread. You'll probably end up with some sort of call spread that'll be small loss, small profit, depending on where the stock goes. Yeah. A non-event is what it's going to be.
Okay. Mm-hmm. In other news, I know it is not liquid, but it is very near and dear to me. Ulta shares popped because she is that girl. As the beauty retailer was like, look, these women are using cosmetics to keep from stabbing people, and they're doing it in numbers, baby. They hiked their sales and earnings outlook for the second straight quarter. They're like, I want to give a shout out to my girl Velo, holding it down in Chicago. Consumers have kept spending on beauty, even as they watch their dollars in other discretionary categories. Ulta brought in revenue $2.86 billion. So good job, Ulta.
Isn't that the recession indicator? It
is the lipstick index. You're right.
Yeah, the lipstick index. Yeah. So this is your indication that things are getting bad.
I still got to moisturize.
Yeah, it's true. You're not, even in a recession, you're not going to give that up.
No
way. No way.
We don't give that up. You don't give that up. We don't give up drinking. Everybody's fine.
Yeah. Fine. Perfect.
Although I did read an article about drinking, like something like 50 or 60% of the population doesn't drink as much as they used to, or something like that. I don't know. They're probably doing other stuff. Anyway, Ulta up $35. It was untradeable though, for on an option side.
Right.
Yeah.
Right. And I knew that. So, okay. Hey, in other news, U.S. senators, a bipartisan group of U.S. senators, unveiled a bill that would block the Trump administration from loosening rules that restrict Beijing's access to AI chips, especially from companies like AMD and NVIDIA, for 2.5 years. The bill, known as the Safe Chips Act, would require the Commerce Department to deny any license requests for buyers in China, Russia, Iran, or North Korea to receive U.S. AI chips. What are you doing in NVIDIA?
NVIDIA IV rank is 10, so you're going to be a little bit more directional in there than anything else. NVIDIA is kind of at the lower end of its middle range. NVIDIA is unchanged, maybe up 50 cents this morning.
Yeah.
Well, its partner, AMD, the big boss there, Lisa Su, says the company is ready to pay a 15% tax on AI chip shipments to China. What is AMD doing?
Similar to NVIDIA, lower end of its most recent range, which is just off its highs. I mean, what did it get up to? Around 260 or so. It's trading around 217. It's up $1 this morning. Remember, AMD had that big move back in October where it was around, I don't know, like 165, and within a month or so it was 265. So
it got added to the government portfolio.
Yeah. So it's absorbing all of that.
What are you doing in chip stocks, Nikki?
NVIDIA has been an interesting trade. I mean, it's been staying around this like 180 range. Unfortunately, you don't really have that high of implied volatility, but if you get kind of outside that range, it's been a pretty tradable range between 170, 190-ish has kind of been its spot. So it seems like it found kind of its range there. AMD, I have a little bit of long delta. I sold puts there in January as well for What's Your Assumption the other day. So I got some long delta there. I'm neutral / long NVIDIA with a call diagonal spread. I've been kind of selling volatility around that 95 to 200 range, buying it, kind of around this 185 range with call diagonal spreads.
And the diagonal spread, again, you're getting a little directional. If it's a call diagonal, you're going to typically be long delta. If it's a put diagonal, you're typically going to be short delta. Really works in these, like a stock like NVIDIA that has relatively low implied volatility relative. The IV rank is only 10. But the monthly implied volatility, there's usually a good differential between the front and the back. And you're selling the front, which is higher, and buying the back. So it's the strategy to use in this type of environment that we have.
Yeah.
Okay. Very good.
All I got to add.
Massive move by Meta yesterday. The stock popped 3% on a report that the company's going to make cuts to its metaverse and shift those funds to their AI endeavors. The budget cuts could be as high as 30% for the unit. No more weird little legless Mark Zuckerberg metaverse weird. That thing freaks me out. What do you make of this move in Meta?
It's about time.
Nikki's laughing so hard.
No, that was good because it was the goofiest when they came out with that, and it looked like Roblox. Like it was like the goofiest thing ever. It's like adults don't want this. This is what children. I mean, you could do this in Roblox. That's what it is.
Yeah.
But it was funny because that presentation was very dystopian. That I hope I'm not plugged into this metaverse. I hope it's a little more interesting.
Meta catching another bid up around $2.5, $3. The stock has had a really nice run since the middle of November till now. You look at like under 600 to 664 where it sits right now. So
Meta and Amazon are both the kind of dogs of the Mag 7. They have not performed in the same way. So I think if you are bullish into year end, there might be a little bit of catch up there.
Yeah, and if you've been a little bit of a contrarian, you've caught it nicely.
Yes.
Took a little heat, like you always do, right? I mean, you never catch the bottom. I always say that. I'm never going to catch the bottom. I'm never going to catch the top. But there's been some money to be made in between.
Yep.
I'm never gonna catch a tiger by the toe. I was just trying to wait for the number, and is it out?
I mean, the market's not really moving. Gold and silver getting bid a little bit, both of them.
Yeah, silver actually caught a bit. It's trading closer to its highs now. It's up 2.25%. But like you said, gold is actually up 0.5% too. So they're both moving pretty equally. Even the S&Ps didn't move 9. They're up 9.
If the number's worth 1 point on the E-minis, I would say
We could do it out the numbers.
it does.
Well, they're so stale. Like it's from September. So again, I don't know what it's showing us.
I don't know what it shows you when it shows you something. So don't.
Yeah.
Bonds didn't move either. Well, maybe they're down 6 ticks closer to their lows. I don't know.
Yeah.
Non-event, nothing burger. Happy Friday.
Oh,
Happy Friday.
You can't make the chat drink this early.
Oh, sorry.
Gave him a nothing burger. You gotta wait.
Oh, I didn't know that was, I forgot.
Yeah, my guy Andrew in the YouTube chat, he takes shots every time we say nothing burger. So he's getting started early.
Andrew,
sorry.
please get help.
I didn't mean to sabotage his weekend.
Microsoft is increasing prices for various office productivity software subscriptions for commercial consumers on July 1st. The cost of a low-priced offering for frontline workers will jump 33%. If you remember putting 2 and 2 together, yesterday I reported that they are lowering the quotas for their AI software because nobody wants that. So what they are going to do, because they got you by the short hairs, they're going to raise the price of their productivity software.
Makes sense. But, listen, you talk about the Max 7. There's another one that's underperformed. We're just a skosh off of all-time highs, as Mr. Tim Knight would say. And you've got the popular Microsoft, Google, Microsoft Meta, not really participating in this rally. If they catch a little bit of a bid, as Nick kind of alluded to, you might have a push going into the end of the year.
Mm-hmm.
Push.
Mm-hmm.
This is crazy. Apple's executive shakeup continues. Look at this. So just this week alone, Apple's top AI boss left. Apple's head of interface design left. He's going to Meta. Apple's chief policy executive just stepped down. And then Apple's top lawyer, the general counsel of all of Apple, that bitch was getting paid. She just left. What is going on? Literally just this week.
Everybody's replaceable, Vanetta. Look at what happened.
That's right.
Here. I mean, Apple loses 5 or 6 of their top guys, and Apple stock is right at all-time highs. Really no downtick. Not unlike what's happened to tastytrade when we did just the opposite. We got rid of our albatross and replaced them with somebody who's been really banging it out real nice for everybody. And here we are at viewerships at all-time highs. So I love it.
Good luck with your emails then the rest of the day.
Yeah. You just you can't.
Hey, I love him too. I mean, I saw him for Thanksgiving. He ruined my Thanksgiving by ruining my pies. I mean, he kept his streak alive. He's fine.
What are we doing in Apple's stock? Any opportunity here?
Ivy rank of 5, hit 280, basically unchanged. The highs are closer to 287. Recent lows, which were just about a week or so ago, were down under 270 or so. So at 280 here, sitting in the middle of its range for the last couple of weeks.
Okay. Are you doing anything in Apple, Nikki, or no?
Not yet. I mean, we're waiting for some volatility. It's tough. You got to be a little bit more directional at this point. So with an Ivy rank of 5, it's not it's a tough one.
Yeah.
Bat, yesterday for your Option Trades Today podcast, you put on a little position in Oklo, and then Oklo promptly announced a $1.5 billion equity distribution.
Which is going to knock the stock down, right? And this was a small.
You would think so. It's only down 4 or 5. That can reverse quick. So be careful.
Oh, it absolutely can. I mean, I'm looking for volatility to crush on the upside because I basically, bought 1 call, sold 2 calls. It's really it's a directional play, maybe a little slightly short, but omnidirectional. I make the most money to the upside. But really what it is a volatility play, and this should knock down volatility, but we'll we'll see in there. The move lower is going to help the position on its own. Believe me, if I knew they were going to do this, I would have played it a different way than just doing a 1x2 call spread in OKLO. But OKLO, like you said, down $5.
Should
I
help.
thought it'd be down a lot more.
Yeah.
Okay. In other news, SoFi stock also dropped because they're also offering $1.5 billion share announcement. Twins. I don't know.
Twinning.
SoFi, though, has been great for options traders. It seems to always be in our top, 15, 20 tickers at tastytrade. So the share sale comes after the fintech company market cap has almost doubled so far in 2025. What are you doing in SoFi?
Have you done it so far, son?
Yeah, so I've had a position going back to the start of the year. It's a position that I've had basically on the whole year. Mike and I did a year-long trade. He's been using iBit. I was using SoFi. And I was long stock and I was selling calls against it. So I'm long stock at like 16, but I've been selling calls against it, and the stock has gone straight up. And so I've been just kind of rolling up these calls. It's been one of those when covered calls go wrong, and by going wrong, still a profitable position, but you don't make as much as you watch the stock move higher. And so I'm actually like 27-ish is where my calls are at 27. I also sold the 26 puts. So I'm long stock, short put with 2 calls at 27. So I've basically got a straddle at 27 after 11 months of rolling the calls.
And the stock was 29.5, so it's outside your 27-ish range. You'd like it closer to 27. It's 27.5 this morning. So now you need it to sit for a minute or two.
Yes, we
It's
stay
like
right
literally
here
playing roulette, Nikki. You just need that ball to drop into the.
That's right.
I've been waiting 11 months. Hopefully the 12th month will be my spot where I finally hit the roulette wheel.
You're gonna miss this position when it's gone. You know that, right?
I know.
It's one of your longest relationships.
Yeah, and I might just keep it going.
Bat, have you ever traded SoFi?
Yes, but not for a long time. It's not on my radar. I don't usually look at it. 20 some odd dollar stock with it does have good monthly implied volatility. I probably should look at it more.
I pulled this for you, Bat, and as you are seeking to find a suitable vehicle for the Prince, Vinny, Consumer Reports came out with their 2026 auto brand rankings, and Tesla did make strides. It jumped up to number 10 from number 18, but overall, Subaru topped the 2026 brand list, followed by BMW, then Porsche, then Honda and Toyota. So
please don't give him a Subaru, Ted. Please don't do that to him.
If you
let him be the glorious.
Maybe I'll threaten him with that. You don't score a goal this weekend, we're going out and buying a Subaru.
Yeah, let him be the glorious lesbian that he wants to be.
Oh, that's good. That's good. Well, I mean, I gotta tell you, if you like Teslas, I mean, I don't know how I feel about electric vehicles. I don't think the infrastructure is there quite yet. But for a person like him who's travels, basically, just around the neighborhood, it's a great cheap vehicle these days. Tesla's
it's not, but you don't want a 16-year-old kid going from 0 to 60 in 3 seconds, my guy.
Yeah, I know. It's bad enough they could do it in 6 seconds or whatever. What's a normal car? 8 seconds? It's hard enough. Yeah, believe me. In January, February, watch the roads, ladies and gentlemen. Be careful.
What's the best car you've ever owned?
Ooh, you know what? My wife asked me this just the other day. Like, what car did I like the most? You know what? I think so. I told her the Porsche that I have right now is my favorite car, but I don't drive it a lot. When Nikki was growing up, I had a little CL 500 Mercedes, 2-seater Mercedes that I absolutely loved, and I had a back seat built for it so that the kids could fit in it because they were basically Dr. Jim size. They were very small, and they could fit in the back of the car the seats that I made back there. I've had a lot of good ones, but I think my 12. Now that I think about it, I had a 12-cylinder, 2-seater Jaguar convertible when I was in my 20s that I thought was that was probably it. That was probably it.
Mm.
It was just my first real car I ever bought with money that I made. I think that was probably it.
Nikki, what was the best car you've ever owned?
I mean, my Jeep Wrangler was the best.
Oh,
Yeah,
okay.
that thing got stolen.
Yeah, it got stolen.
I'm
Yeah.
sorry.
gone
I
one
remember
day.
when that happened. Yeah.
Yeah.
Oh my God, he cried.
Really
He
sad.
cried, worse than that girl in 5th grade when she broke up with him.
That was my baby.
Yeah, that sucks, man. People, that
it's
sucks, man.
Sorry.
I've had one car stolen in my lifetime. You've had one car stolen in your lifetime.
It's just not practical. It's not a practical car
For
Not in
Chicago.
Chicago. Right.
Yeah.
Right.
This is a crazy story that is unfolding. On Tuesday of this week, a tweet from a New York-based Meta software engineer basically lit the fuse under Polymarket. A senior software engineer at Meta basically posted a bunch of screenshots that showed a Google insider basically profited $1 million in a single day betting on the Google search markets. So at the end of the year, everyone comes out with like, oh, this is the top, celebrity search, the top musician search, like yada, yada, yada. So this guy from Meta was like, look, there's this person who works at Google who knows what all the answers are going to be. And then it's just laying out over 92 bets on Polymarket. Of course, they all cash, and he won $1 million.
I'd like to interview him because I'd like to see if he got paid.
I mean, I would think so. I mean, they had Brian Armstrong, the Coinbase CEO, who was looking at prediction markets to see what people were betting on him to say. And then at the end of the conference call, he just rambled off all those words.
I remember. Yeah, that was wild.
So, I mean, like, this is what...
Hey! Most of this stuff is rigged against us anyway, which we found out with all these athletes, kind of rigging the games in every sport. It seems they're doing.
Why did the Buffalo player run out of bounds?
Yeah,
that was weird too.
That was weird.
That was weird.
That was weird.
Yeah.
That was weird. He looked back to make believe the guy was on top of near him. He was near him.
But as all of these prediction markets take over industries and stuff, and then people will have inside knowledge, like what are the protection, like, I don't know.
Yeah.
It seems rife for fraud, but
yeah,
it's a great question.
But in other news, I guess Polymarket is looking to partner with a market maker. So we had talked about that yesterday. Yep. So it looks like they're trying to have someone that's making markets in there, but I don't know. But the whole thing's it's a scam. What's Google doing?
Google, I just looked a second ago. I apologize. Google, 318 and change, up around $1. Even the S&Ps are down 3 now after being up 9 or 12 just a moment ago. Small move. Anyway, Google up $1. So you're gonna have a mixed market all around today. So
I pulled this story for Beth, so I hope she hears it wherever she is. Mattel's highly anticipated K-pop Demon Hunter doll 3-pack was available for pre-order in November and sold out instantly. The dolls were $150, and it's no longer available for pre-order. The viral Netflix sensation is sweeping the nation, but I guess there are other K-pop Demon Hunter toys available this holiday season. There's a new Monopoly K-pop Demon Hunters card game, and that's available at Walmart and Target. And there's a couple of other Funko Pops that are available in the K-pop Demon Hunters.
Listen, I stopped chasing these things with the Labubu. So I can't help her anymore with this. So no K-pop Demon Hunters for me.
My dad will still tell you battle stories of when he had to secure a Cabbage Patch doll for me.
The Furbies was my generation.
Oh, the Furby?
And let's not forget the Beanie Babies. I mean,
the Tickle Me Elmo.
Yeah. But they weren't $150 a pop.
No, they were $5. I mean, that's how they hooked us. They hooked that generation with the $5 Beanie Baby. Now that generation that loved the $5 Beanie Baby has to get bamboozled for $150 K-pop Demon Hunter. That's how it works. It's like anything. It's like a drug dealer on a corner. They just give you the first joint for free, and before you know it, 2 weeks later you're doing H. You know how it goes.
Are you okay? Wild.
You're chasing the dragon.
Yeah. Jeez. Wow. Oh.
Like the next thing you know, you're on your knees in a Tulsa truck stop. What the hell, dude?
Next thing you know, you're searching construction sites. You get the money.
What?
Oh my.
I've lost all. I only had one story left, and I can't. Okay. The Athletics are on track to open their approximately $2 billion Las Vegas stadium on time. Wow. That's according to the Las Vegas Stadium Authority. The A's, who are scheduled to move to Vegas before the 2028 season, met their year-end goals of beginning the concrete phase. It looks beautiful. It looks cool. I think it's going to be hot as hell. But good job to the Las Vegas Athletic. I don't know what their team is called.
I don't know, but the rendition of it looks awesome.
Yeah.
How are they going to keep it open like that? Because, I mean, it's hotter than Hades. I know.
And then in other sports news, just real fast, if you care, FIFA, I guess they're doing the drawing, the pairs for the World Cup, which will take place this summer in North America if we can act right. But the men's national team has been performing pretty well, but trying to see like what group they're going to be in. So if you care about that, that's today. So,
cool.
Nice.
Finally today for my viral video of the day. Every Friday I like to do a little something I like to call Trader Taste Test, where I scour the internet for food for fat traders. And today, from your Genesis, Tony, from Brooklyn, Brooklyn, New York, bringing in the Brooklyn, but also for you, Nikki, because you love the soup.
Mm-hmm.
But I also love the pizza. Watch this. Well, Trader Taste Test.
Tomato soup pizza with tiny little grilled cheese on top. Oh, you want tomato soup pizza with tiny little grilled cheese sandwiches on top? Yeah, we got tomato soup pizza with tiny little grilled cheese sandwiches on top. Tiny little grilled cheese sandwiches. Tomato soup pizza with tiny grilled cheese sandwiches, baby. You know we got it for the wintertime. It's all cold outside. Get a nice thick pan pizza here. Tiny little grilled cheese sandwiches, grilled to perfection. Why do they call it grilled cheese? There's no grills involved. But you can take it, you can dip it, baby. It's the best part. My globe. That ain't over at Vinny's, where the pizza's so good and everybody likes it because it tastes so nice.
Thank you, John. I love whatever is wrong with these dudes.
Yeah, they went down the same dark rabbit hole that my dad went down over there, and the last little segment, they might be on some stuff over there.
It's called Vinny's Brooklyn. Get it, Vinny's Brooklyn. The super SOUPER super slice. So if you're in New York, go to Vinny's in Brooklyn. There you go.
I love it.
Would you guys eat it?
Oh yes.
Yeah. That sounds pretty good. I see what they did there. I'm surprised nobody's done it ahead of time. I am not a yellow cheese fan on pizza, which some places will do, which is horrible. But I like what they're doing there. It looks cute. We're going to take a quick 90-second break as even the S&Ps reach about as low as I've seen them all night, down around $6 or so, $7 now. We'll take a quick 90-second break and come back. We got more Tasty Live after this with confirm and send. We'll be back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer emails and answer those questions. But before we get to that, let's take a quick look at the market. If we had done this about 15 minutes ago, I would have said even the S&Ps are up $8.75, but now they're down $8.75. A pretty tight range last night, top to bottom. We just made a new low, so we got about 20 handle move from top to bottom. It was about 15 handle move all night last night. NASDAQ down 27, Russell down 5, and the Dow down 81. All down just a skosh. They were all up just a little bit a moment ago. Volatility basically unchanged at lows that we have not seen in months and months at 1763. They are up around 5 or 8 cents right now. Bonds near the lower end of their range too, which we haven't seen in months and months, not since early September or October when we got down to right around here. 115.28, they got down to 115.25. We have a little bit of long delta in bonds. Notes are doing the same thing, not to the same magnitude of the move. As you can see, notes were closer to we're closer to 112. They're 112.22, about 22 ticks away from that. Bitcoin down almost $2,000, under 91 on its lows so far for the pre-market session. We'll open the markets in about a half hour, 35 minutes. Ethereum, equity markets. Ethereum down 36 on a percentage basis, about 1% versus Bitcoin's 2%, both to the downside. Oil down 11 cents. Gold is a bucker for everything I just said right now. Everything's been down. Gold is up $22, trading at 64. That's about as high. That's 42.64. It's about as high as it's been for its overnight session. Silver doing the same, about as high, almost as high as it's been. It's been over 59. It's right there at 58.85 right now. You could see here what we were talking about when we were putting this trade on with Vanetta. Since you buy 2 gold, if you're doing it our way, we're buying gold, selling silver. If you look at it, you buy 2 gold, so that's gold is up 1%. You sell 1 silver. Silver is up 2.25% now, so that's moved 1.25%. That's what Nick was looking at when he quoted it for you. Net gas up 20 cents. It's a big move in net gas on a percentage basis. The biggest mover on the board, up 20 cents because it's 13 degrees in Chicago. I have to mention one stock. I hope it hasn't ruined its parade already. It's only up $4 right now. Oracle, your big horse, was up $6 just a moment ago, but it's up $4 to $218. I knew it was going to catch a bid.
You might get your out today.
I don't think so, but
yeah, you'll be close. I mean, it should probably come in another $1, maybe a little bit more. if it stays right here.
Yeah, yeah.
You only got 2 weeks until expiration, so
I only got 2 weeks to expiration, and you only got 5 days till earnings. So earnings is really keeping.
oh yeah, I didn't realize it had earnings.
Yeah, if this was a normal stock without earnings, those puts would be winners right now. But because of earnings,
Yeah.
get the direction wrong, really smush these puts. I
Yeah.
mean, really raise the volatility of them and hurt me on these puts.
Yeah, I'd like to see a little bit of a sell off today, pop in volatility, tiny little bit of volatility.
You mean in the market?
Yeah, give me something to do today.
Yeah.
I mean, I have a feeling though it's going to be E-minis in a 10-point range all day today.
Yeah, that's death for new positions, good for existing positions that are short premium. Yeah. All right, my friend, you ready to do a little confirm and send?
Let's do it.
All right, let's do it.
Friday, December 5th.
It is.
Chugging along.
First question. All right, you ready, son? In the past, now we're going, the past is just a small period of time. We don't have to go all the way back to high school or anything like that. But in the past, when selling strangles, you have talked about using 30, 20, and 16 delta. Well, for crying out loud, which one is most preferred? That's really what it said. I just ad-libbed it here when we put it in.
I think I lean mostly towards the 20 delta. If I do a defined risk position, so an iron condor, put spread, call spread, I usually lean towards the 30 delta for the short option. Mm-hmm. So I like to go to the 20 delta. It gives you a little bit more premium. I'm okay with the risk. That's kind of my spot. The difference between a 20 and a 16 delta strangle, it's not much. I mean, you're right there. It's kind of the same thing.
Yeah, I totally agree with you. My answer would be exactly the same. If you want to elaborate just a little bit more, let's put a little time factor in there. If you're 45 to 60 days out, because we do have those 4 times a year, or is it 4 times a year? I think it's 4 times a year when you have a 5-week expiration, or 3 times a year. I think it's 4 times. 4 times a year when you have a 5-week expiration, you'll be rolling into positions that have 50, 60-ish days. You can go a little bit further out because you collect a little bit more because you got time on your side. You might be closer to 16 delta. If you're, 45-day time frame has kind of passed you by and you're in that no man's land of around 35-ish days, you might not get enough from the 20-ish delta. You might default closer to 30-ish deltas. But for a blanket sentence and a blanket answer, yeah, 20-ish delta, not too hot, not too cold. This porridge is just right. 20.
Yes, well said.
Yep. I mean, nothing we do is set in stone, right? Everything is kind of, hey, this is where you should look. Make it real.
But I think that's the hardest thing for people to kind of come to grips with in trading is the variable that we all deal with, which is just the unknown and the constant variable of stocks moving randomly on a day-to-day basis and not knowing the future. I mean, you got to have a little bit of flexibility here. And like I said, the 20 to 16 delta, it's the same thing. You're talking about a probability that's somewhere between 70 and 80%. It's not a huge difference.
Yeah, it's good and better.
Yes.
Next question, please.
As the end of the year is approaching, I'm thinking about goals for next year. Do you set goals with respect to returns?
It's funny. This must be somebody who hasn't watched for that long because we talk about this just about every year. I mean, I don't set any goals. I do my best, or I try to do my best every day. I don't always succeed. And I know that going into the year that I'm not going to always succeed. Maybe at the end of the year, I'll look back and see how much money I made, or God forbid, now that I got rid of Tom, lost in the market.
Or you could look at specific underlyings, what you made money, what worked, The
answer is always the same. If you sold premium and premium contracted, I don't care what stock it is, you typically did well. If you were directionally bullish in a stock and it went higher, you did well. I mean, the stock has to cooperate with your strategy. That's how it works. And if the market went nowhere all year long, two-sided action, two-sided spreads are going to work best for you. If the market was straight up as it was basically since April in this market, anything that had any upside risk probably didn't do well. I mean, I can tell you if you're using only one strategy, how you did at the end of the year just by what the market did. Anybody can. It's not being special. But to set goals, I mean, why put a ceiling on it? I expect to overperform every year, whatever that means.
Yeah, I think when people are setting goals, they're usually too lofty. I think realistic expectations is something that you gotta kind of have here. A lot of people, and as you do this for a longer period of time, that becomes more easy to understand. People just starting out, they're looking for the 50, 100, 200, 300. How do I double my account every
Well,
month?
you know what? If you have a for argument's sake, let's just use round numbers. If you have $100,000 account and you use leverage, like you want to know what's your goal for the year. Tell me what your risk is for the year. If you can tell me what your risk is for the year, I can tell you what your goal could be for the year. If you're going to risk, 3-4 times your account size, every month on your positions, then you should make 10, 20, 30, 40, 50, 100% on your money. If you're going to risk 1/10 or 1/20th or 1/30th of your money, you can't make those kind of returns. You should be thinking about, I don't want to say beating the market, but you should think about, overperforming what the market brings by 1 or 2 multiples, not 10 multiples.
For sure. Well said.
Next question, please. Recently, I am into a situation where I sold an out-of-the-money put spread. Okay, in this market, that would typically be good, but maybe something happened here. As the underlying went up, I was unable to close the spread because the long leg had no bid. Because of that, I just closed the short leg. Did I do the right thing, or should I have kept playing around with price until I could get closed, so I could close the entire spread? So obviously a little bit of a newer trader here. What are you gonna tell them?
Yeah, I mean, this is the right move. The short leg is your risk on a spread position. So when you close that short leg, you don't have any more risk on the table relative to the opening position. So that's a closed position. That long option being far out of the money, having no bid, it's worthless. It might be marked at a value, so you might see a 0 bid at a 50-cent ask, and that option will show a value of 25 cents because that's the mid price. That's the mark price of the option, is just the middle price between the bid and the ask spread. But in all intents and purposes, it's a worthless option. That's just wide bid ask spread. So after you close the short, you're out of the position. The position's done with, it's closed.
All your buying power is freed up when you close that short option for pennies. The play worked. Pat yourself on the back. You now have a lottery ticket with this long option, whether it be a call or put, doesn't matter. It's a lottery ticket. Only good things can happen. Nothing bad can happen by holding that option. And good on you for realizing that the computer can't sell something for 0.
Yes.
Right. Like, a matter of fact, that spread could have been offered at let's say 3 cents or something like that. And you went in to buy it at 3 cents. You don't get filled, or 4 cents. You don't get filled because the market can't sell that option that you're long at 0. So just go in and buy that naked option and be done with it. So
and you can put an order in to close that long option, and maybe you get filled on a down tick, or
or you put it. It costs you nothing in commission to put a nickel offer in after you buy your long your short option back. Put a nickel offer in for your long option, or 2 cent, whatever you want, for it, or just keep it. Like I said, lottery ticket.
Yep.
Next one, please.
Do you think we'll ever see listed products and futures go to 24/7 trading to compete with crypto, and really prediction markets too? You could put that in there too. What do you think?
I don't know. I mean, I guess if I was making a predicted market and I was betting on this, I would, since it's into perpetuity and there's no time frame on this, I would say yes. It's definitely going to happen. But I've been in the business a long time, since 1980. And they've been talking about 24/7 trading, or at least extended hours trading across the whole board, meaning all the markets, just like we have right now, since the late 80s, maybe even before the 87 crash, if I remember correctly. So they've been talking about this for
the tech hasn't been there though. That's the problem.
No, the tech hasn't been there. The amount of liquidity hasn't been there. But I mean, they've been talking about it for 35 years, maybe more.
I think you'll see it with stocks. I mean, we're moving to 24-hour stocks.
The problem's going to be settlement, son. So that's the whole problem. Like, do we change settlement, meaning the time frame when something settles, when options settle to stock, when futures settle? Do we change all that? I mean, that would take a firm like
stock doesn't have that issue.
Say again? Stock
doesn't have that issue. There is no settlement. It's just
there is settlement. I mean, it takes 3 days to settle stock. Now you could do it in 1 day. They have to have the instant settlement, meaning like the money on the back end would have to settle, intraday, pretty much. And then you have option settlement to stock. When does that happen? When we zeroed, it would be it's a bigger lift than what people think. I'm going to say it happens now that we have, crypto and blockchain. So maybe they'll be able to do something there where like 0-day options in a stock doesn't expire to stock, it expires to the blockchain, and we get up there. Like, I way above my pay grade, and I'm probably making a lot of mistakes with this. But the technology, as you pointed to, probably is there to accommodate it. I don't know if the big firms have the resources. Well, I guess they certainly have the money, but I don't know if they have the resources to get it done. I know the brokerage firms would be nimble enough because, listen, I mean, we get paid on commission, right? We don't take any risk. It's the liquidity providers that the brokerage firm doesn't take any risk. Liquidity providers take all the risk. I mean, OCC has to match up all these. It's a lot bigger than, hey, just turn those machines back on.
I think overall the serious.
I'm talking myself out of 24/7 trading, by the way, right now. Okay.
Well, we know markets are not going to be nearly as tight as they are during normal market hours, and so from a liquidity standpoint and from a trader perspective, if you're trading, I don't think this is like a big deal for you or something that really adds to your trading. If you're, just buying 1 or 2 shares here and there whenever you want, and you're talking to a buddy out at a bar and you want to buy a share or two, this is probably a cool thing for you. I don't think this comes into play as like
that now.
I know that I agree, but
futures. I mean, they do trade basically 24/7. I know 24/5, but I mean that is the market. I know you want individual stocks, but I don't know. I talked myself out of it. Never going to happen. Not in my lifetime.
I think it will.
All right. Well, there we go. We got a two-sided market. We're going to take a quick 90-second break and come back. We got more Tasty Live with a this week in stocks, my man Jamal. We'll be back in 90 seconds. We're going to bring him in. This is going to be awesome.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with this man, Jamal, this week in stocks. Jamal, this week was not like last week.
This week was not like a lot of weeks in a long time. I just looked at the range on the week. About 84 points. I mean, you got to go back to July to get a smaller week. The week before was 238 points in range in the S&P 500. So fairly quiet week, as you would imagine. I mean, not a whole lot of things to discuss, but I got some stats for you.
Okay.
S&P 500 increased 8 of the last 9 trading days. I mean, it's not stuff that you don't know. It's just, I think it's been a couple of weeks here where things were a little quiet the week before, at least quiet as far as not a whole lot trading. Volume's a little lower, but still 8 out of the last 9 trading days were higher here. The S&P 500, Russell 2000 has outperformed more recently, as you've noticed, and a lot of that is probably due to the sentiment around rate cuts as of right now. Technology sector,
and a little bit of catch up in the indice itself relative to the E-mini S&Ps and the Nasdaq, right? It was kind of the lagger the weeks prior.
Yeah, for sure. And you could see that for sure. Yeah. The technology sector, XLK, and transports, for whatever reason, they both have 9 consecutive days of advance. And natural gas is at 3-year highs now. Last time we saw it, this high was I think September 2022, but last time it was above 5. It's been a while here. So yeah, I mean, just a few things moving to the upside pretty big. But for the most part, man, it's lower volumes. We look every day around like noon to see where S&P 500 futures are as far as volume trading. And on most days, it really hasn't reached 1 million more recently this week. So it's been kind of quiet. And so everybody, you feel like, what are we waiting on here? Are we waiting on something? What's happening? Is the Santa Claus rally going to be the thing? I don't know the answer, but it seems as though we've been waiting on this PCE number to some degree. I mean, it's been that, right? It's been what's going on with inflation, what's going on with jobs, and how's that going to affect rate cut stuff, right? We haven't gotten any jobs numbers, but we have gotten the jobless claims. I guess people are paying attention to those now since there's no real job numbers coming out. And the one that came out yesterday looked pretty good. So it seems like it's full steam ahead on the cuts because it's about an 89% chance of the rate cut coming up.
Yeah, bonds are going lower, right? Trading just at 116 right now. The low end of the range for a couple of months, definitely low end of the range for the last couple of weeks for sure. You mentioned everybody waiting on numbers. I can tell you the one big number that everybody's waiting with that the people that I'm around most of the day, and that's high schoolers, and they've only got like 10 more days of school until winter break. So Santa is coming early here. So that's what they're waiting for. That's the number they're waiting for. 10 more days. They can do it.
Yeah, I'm sure, man. I mean, it's coming up for them. We've I've been hanging out with the younger crowd, even younger, Tony, the middle schoolers, who I've been hanging out with, and my kid's playing basketball right now, and it's just been real. It's been fun. It's the first time he's been on a school team, And so far, we're handling business. We're 4-0, man. We'll see what's up. We got a big test next week, though.
Good. Do they play over the winter break, or do they stop for that?
Nah, they stopped for that. Yeah, it's just I think they
just conditioning, right? Just conditioning.
We'll keep them going. Yeah, exactly. We'll keep it going somehow. Did you guys see the Netflix deal today? Netflix is finally buying WBD.
Somebody just sent that to me. I think Vanetta or somebody just sent that to me. Time Warner. Netflix is no threat to media companies, and now they just Netflix is acquiring Warner Brothers. Like 3 days, 2 days. One said the headline, they're not a threat to us, and then obviously they were talking because no deal gets done in a month or 48 hours or something like that. Next day, Netflix to acquire Warner Brothers following the separation of Discovery Global for a total enterprising value of $82 billion. I don't know.
Is it 82? Oh, okay.
I don't know. I'm looking, it might be old. I didn't research it. I'm just reading what I have here. So
Netflix is down. Pre-market.
It is down. Yeah, it's down. What's $4 billion between a couple of friends? Look, the interesting thing about it is this. I'm sure Vanetta mentioned this several times in her piece in recent weeks. I did too on This Week in Stocks. That's why it's funny that they were acting like this wasn't going to happen. It seemed like Netflix was the most likely suitor for a while. But dude, here's the crazy thing about it. We all know Netflix. It's not like Netflix has been around. This thing is something that's new in our lifetime. Sure. You really got to put this in context. Warner Brothers is 100 something, 1909? That this company is from. This is really kind of a new age deal. This is really kind of a big deal for a lot of people that are not really thinking about it. When you think about this is such a newer company buying this old company with thousands and thousands, probably millions of titles and movies and content and all of that. And this is unusual for Netflix. They usually don't buy companies. They usually create content. As a matter of fact, if you looked at their recent earnings, 63% of their content is stuff that's original titles, honestly, and no one title represents more than 1% of their revenue. So this is really kind of an interesting deal when you look at it. Clearly, shareholders don't like it. Like you just mentioned, Nikki, stock's down $4. It's not really good. I actually just put on a bullish trade in there earlier this week, so it kind of sucks.
Me too. I'm short the 100 strike puts, so I'm with you. I got cover call now. Isn't there still an antitrust piece to this, or is that got resolved? Because I know Paramount was kind of arguing that this was monopoly type thing, it's too big, Netflix being too big to take this on as well. They would have too much market share. Is that done with too? Is that the antitrust part still?
I'm sure. Obviously, every deal is up for regulatory approval. And of course, Paramount is saying that because they wanted to buy Warner Brothers. So of course they were making that argument. I bet it's going to take, we'll see if this actually ends up going through. Right. And I wouldn't be surprised if there's possibly more bids, although I'm not really sure how any of those dudes can outbid Netflix. Netflix is $430 billion market cap. You figure they're buying let's just call it $80 billion company. They certainly have enough to absorb it. I'm not sure. I thought I saw maybe they have to do a little, they're not have to, but they're going to do some debt with this deal. I'm not exactly sure how they're funding the deal, but so what?
Don't get them started. It's a cat. We'll go with the cat. That's
Nikki asked me if it was a hairless kitty, but it's not, as you could tell.
Yeah,
I didn't really get to see it. No, now we're talking about it. You got to pull it back up now. Let's see it.
She'll come back. Come on, get over.
That's your grand cat.
My grand kitty.
Right? Yeah.
And it's so funny because every time I talk to him, he's like, "No more animals. We're never having any more animals. When these two are gone, I'm never getting any more animals. Don't want to clean up poop. Don't want to feed them. Don't want to do any of that stuff again." He loves this cat.
I'm older. I'm different. Hey, listen, let's get back to Netflix and Warner here for a minute. There's no antitrust. What does Time Warner have? Game of Thrones, it's over. What's it known for? Friends? Is there any more Big Bang Theory?
You got
Warner Brothers?
Yeah, you got Batman and all those big ones.
Dude.
Superman,
yeah, they got that.
They got what? What did you say?
Let me pull it up now.
Batman.
Yeah, they own Warner Brothers owns Batman, I believe. Yep.
Yeah,
and
big
Superman.
Deal. Come on. I mean, what's Batman?
No, that's automatic.
Years old?
That's all. It doesn't matter. That's automatic money, bro. Like in 10 years, they can make a new Batman, and that's easily $1 billion, probably.
Yeah, you can make a new Batman every couple years. I mean,
yeah, for sure.
Yeah, Batgirl.
I'm trying to see what else I got. I just saw it earlier. I got it.
Buffy the Vampire Slayer.
Well, you know what's interesting? They mentioned the big things that could potentially be movies. These are easily things that eventually could pretend some big stuff. So they got Harry Potter. I mean, I'm sure you could probably come out with another Harry Potter once upon a time. That means a lot to a lot of people. So let's just call it DC in general, right? That includes Batman, Superman, whatever else.
Yeah,
Marvel, DC Comics.
Make a go of it. Why? What makes you think Netflix is going to make a go of it? I mean, I don't see it. Oh, HBO Max too.
Yeah, you get
HBO Max too. Yeah, the whole thing
on HBO.
Yeah,
but see, I'm looking at it from the standpoint of like these are things like. Look, I know I'm going to say this out loud. You're not going to like it. I'm just talking out loud. A Sopranos movie, right? Like at some point or another, if you want to make a Sopranos movie, you can do that because you own the content. Right. Game of Thrones or whatever. You own the content, so you can create a movie or something. I mean, that's how I look at it. Because you own these things now, and then again, Netflix stuff is Stranger Things, Wednesday, Bridgerton. I mean, and they just still have that on their own. If they want to eventually do like movies or whatever else, they can because they own it, right? It's like, I think that's the interesting thing. Mm-hmm. Some big titles when you think about it.
Yeah, I guess.
Well, we'll see how the options will tell us how likely this is to go through when the market opens. We'll look at those options in Warner Brothers and just see. It'll probably take a couple hours for it to tighten up a little bit, but you'll see if it's likely to happen. You'll see basically all the options marked at basically zero. So
yeah, to your point, I feel like it might not be like that. I feel like there might be a little bit to the upside stuff, right?
Sure.
Because it's been a while since I've seen a deal where everything went to zero immediately. Like in this case, when there were multiple suitors. So, but again, I don't know. I think the only way Netflix loses is if, like you said, if it's ruled that it's a monopoly. Otherwise, they can certainly buy it. Nobody can outbid them, I don't think.
Yeah.
I don't think Paramount can outbid them or whoever the other people are. There's not many of them left. But look, this is the consolidation I think we've been expecting for some time when you talk about streaming stuff, right? It seems like it was bound to come.
They've been talking about this since AOL monopolies. When AOL went into the S&P 500, then AOL went away. I mean, I was an AOL market maker. I'm familiar with it. It was the 2000s, early 2000s. I mean, 1999 to 2000. This is.
But look how big they were. Look how many things they owned.
The whole AT&T merger. I mean, this is all. Let it happen. It doesn't matter.
Didn't AOL eventually spin stuff off, right? I assume. I don't even remember, but you traded it. I know you. They probably spun a bunch of things because they probably owned like back then, man. Right? Like case in point. I know I found this out recently. Six Flags, obviously, and they're having issues as far as going bankrupt or whatever. But that once upon a time was owned by Marriott, like a conglomerate of like a Marriott, Amex, whoever else, like 3 or 4 people. It was so crazy when you look back then that a lot of companies just decided to diversify and do things that they thought made sense. And then eventually they were like, well, this doesn't really fit our portfolio. And now we have companies doing the way they do now, where they really invest in things that they really understand. They don't try to buy. They're not a hotel company trying to buy a amusement park because they figure it's going to work in their portfolio. They don't do that kind of thing anymore. Now it's just more targeted, a lot more focused.
Yep.
And then we end up hearing, oh, it's antitrust because you get too big. Well, what are you supposed to do?
Right. That's right. That's right. Yeah,
the big question is what's the Netflix HBO package going to cost? What do you guys think? Is it going to be the Netflix price? Like, is this does everybody save $15? I think HBO is like $10 or $12, something like that.
Something like that. Yeah.
Does that just get cut and it just gets added to Netflix and you get that for free, or is that
hell no?
Or is Netflix is now like a $40 bundle?
They'll cut it in half. So if it's $12, it'll be only $6 more. So you'll save money initially, and within 2 years, it'll be $112.
Yeah, exactly. It's the Uber model, baby.
Because you don't quit. You don't drop out. They'll just raise it and raise it and raise it, and then loan you. That's it.
Yeah, it'll be back to where we need. But just the last thing here, just to round it out. Yeah, volatility's been kind of quiet. Also as well, we've seen that come in markedly over the last couple of weeks here, but we're still hanging out in the front month VIX, still a 17 and change, but big difference between Z contract and F contract and VIX right now. So strong contango.
Awesome. Good job out of you. And we should have perfect weather for the Bears-Packer game this weekend. It'll be bear weather, so hopefully they'll pull one out. We're going to take a quick 90-second break. Good work to you, Jamal. We'll take a quick 90-second break and come back. We got the opening bell next. We're back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with the opening bell in just under 3 minutes here. Even the S&Ps are up $5.75. I think that Netflix selling off a little bit on that news of the takeover with Warner Brothers. Netflix back to 98. It got down to about 97-ish or so. I think I saw it down at 97, 98, 99 right now. I think that's what took the market a little bit lower when we were doing the segment just a moment ago. NASDAQ's now up 53. Russell's down 4. Dow is up 12. Basically an unchanged market here. You can see on a percentage basis, they're all up or down around the same. Volatility now in by around 9 cents. Bonds are down 1 tick to 116. Do we call that the middle of the range? Almost the middle of the range. 1601 getting a lot closer to the middle of the range. Bitcoin is lower, under 91, 90,700, just about as low as it's been all night long. Same thing with Ethereum, just about $20 off of its lows. Oil down $6. Nat gas is doing exactly the opposite. Nat gas is up huge, almost a 5% move in nat gas, up 23.5 cents. Gold is up $20. It's had a $50 range top to bottom, just under $50 range, $45 range top to bottom. Gold has had a little bit of a play to the upside the last few days. Seems to be continuing its winning ways. DocuSign was the earnings du jour. We actually need it to be unchanged or higher. It's actually lower by about $5 or $6 now to 64.70. You're going to have probably a $100 loss on your spread, and you'll have a some sort of call spread that you'll be left with, I would imagine.
Yeah, we'll see what happens here on the open. But looking like it's going to be a choppy day. I will say Bitcoin was overnight was basically unchanged, and it's been moving with the Nasdaq, but with the market as a whole. So a little bit of it perks my interest that Bitcoin is down, pretty sizably right now with the market basically unchanged. Maybe there's a little bit of weakness in the market here once we open.
To nibble on Bitcoin or to
oh, maybe take a little short delta, like maybe short a little Nasdaq here.
Got it. Oof. Well, this is wash your mouth out with soap.
What, you don't like that?
No, I'm just teasing you. Maybe not at this. Oh, there you go.
Yeah.
Maybe right at this time. No, I think volatility is still in by 10 cents.
You got no volatility. I mean, volatility is dead.
Yeah, I mean, it's not percolating. So I think you got a little bit to go, but it's a good shot. I mean, it's small enough. You'll be able to do it a couple of times today. You'll be happy.
Start one here.
Gold silver ratio is hanging out right there. Gold is up just under 0.5%, and silver's up just over 2%. It really hasn't moved too much. Let's take a look at some of the other movers real quickly in the market here. When we look to the downside, you got DocuSign for earnings down $6 and change, almost $7 now. Coin down 6.5. OKLO, which was my trade from Option Trades Today that put me a little bit omnidirectional, slightly short OKLO, needed this move lower. Remember, OKLO was up around $17 yesterday after they're now floating, I think $1.5 billion. I think that's what I read.
Yeah.
Yeah, good on them. I would float some money too if I was them. Netflix down 4-ish and change, almost 5 now, 98 and change. Snow down 4, MSTR down 4, Hood down 2 and change. Your beloved BE down almost $3 or $3 right now. BMNR down $1 and change. IBIT down small too. Let's see what the upside's bringing us. Let's take
AVGO
up $11, AppLovin up $9, CRM up $7, Meta up $5, Caterpillar up, Oracle. Get on your horse up. Let's round up and say $4 because I need it higher. I've heard a couple of dings from you already. You're closing your DocuSign.
Yeah, I got short another Nasdaq too.
I told you you'd be able to do that.
Yeah, you were right. About 30 points higher.
Yeah. So you sold some NASDAQ a few times. You did the gold silver spread. You covered your NASDAQ out of the money options, free up the buying power, but you haven't.
DocuSign.
What did I say?
NASDAQ. Short NASDAQ here.
Yeah. You covered your DocuSign. I apologize. Options out of the money.
Yeah, it was just a junky little penny.
Yeah, it frees up the buying power. And now you're free to sell a call or do something against that long call that you have. It really is a defined risk trade. I think you had $3.50 worth of risk in it.
So your Oracle position, it's moved like $100 today. It's marked at $6 here. What are you thinking there? Is that a roll? Is it a close? Is it a hold?
Well, let's take a look at it. December with 14 days. I'd hate to be this tight. I am short the 200 puts somewhere around $4 if my memory serves me right.
Yeah.
They got probably closer to $14 at one point. So there's no harm in buying them back outright and just taking the $2 or $3 loss if that's what you want to do. I've been looking to roll it from October to January. This is going to show you a good on what volatility does to options. You'll notice that there's 20-point vol differential between front and back, and I would be buying back this 80 vol and selling this 60 vol. If I do it on the 200 strike, it's been trading around $3.50, $3.75 when the stock was under $200 or right around $200. It's now trading for $285. So the roll would have saved me about 60, 70 cents. But I'd be in the trade for another 42 days. And I thought that wasn't, and I think it came to fruition, wasn't a good roll. So now I made a nice play, got the directional bias that I wanted. So now I have to say to myself, well, do I wait the next 5 days for earnings to try to bail me out, or do I roll or close? I don't think I would roll. I could roll down to, like, say something like the, I don't know, 185s probably. No.
I mean, I think you told the story right there of just the roll. You're not getting paid to roll this out another 40 days. And if you get kind of a sideways or up move on earnings, this option you're going to make $3-4 back on this option. Whereas the one that's in January, you might only make 50 cents or $1. Like, I'm with you. I think you hold it.
I'm going to hold it, although Oracle isn't holding its head up right now. It's only up $2. Bad Oracle.
Bad.
I could roll down to 195, roll one strike for a credit. I'm not interested. I'm staying in Oracle. I'm staying the course.
I like it. I am putting in a couple closing orders here. I sold puts in Amazon the 210 strike in January. I sold them yesterday at $3.15. They're marked at 220. So I put in an order to close that at 215, try and get $100 out of that one. I was looking at doing the same thing in AMD. So AMD, I sold the 190 puts yesterday, or I think it was 2 days ago that I did this for what's your assumption? I sold those out at 475. I'm going to try and close them at 375. So I got those orders in. I also put an order to sell a put in Coinbase, which I had to put, close it into the up move. You're now getting a 6 or 7, and I just got filled on it for $7. So I actually closed out of the 240 strike put in January for $7.50. I closed out of that on the 4th. I just sold the 230 puts at $7. So basically about the same amount of premium here. 10 points out of the money further than what I'd had just a couple days ago. So kind of not selling the same option, but selling the same amount of premium given the strike or given the move in the stock. It's a further out of the money strike. So I'm even more comfortable with that strike relative to the 240. So just looking for things that are kind of moving here today.
Yeah, I listen, it's called trading, right? I mean, that's really what you're trying to do. We've been in a tight, as Jamal pointed out on the last segment, and we've been pointing out, all day, all week. It's been a choppy market. It's what you expected. You got lucky enough, because nobody knows the future, to get what you expected. You played for what you expected, and you benefit from what you expected. I mean, you're going to get it wrong too, but this time you got it right. So good on you.
And to put context to that too, the close, sometimes you look at it and you're like, oh, why do I close that option? I could have made more. Well, that option, I made $200 on that option. I closed it. I freed up that buying power. If you're limited with buying power, that allows you to go do something else with that trade. That wasn't the issue that I had, but just for context of everyone else out there. So you take the profits on that, and then into the down move. Now I have a further out of the money strike for the same amount of premium. Had I done nothing, I would have lost the $200 that I had on the table, and I would have been a scratch at this point. It's not like I would have been. It would have been a horrible situation, but now you got a better entry here into this move, and stocks.
No, you're 100%. You're 100% correct. I mean, a lot of people sometimes get pigeonholed into trying to make money just in, like you just said. I've been in this product for a year or 11 months. Maybe I have a chance to get out here. Maybe I'll stay in it. And I know you were joking and having fun with it, but a lot of times people will just kind of stay. Like, I have to make the money back in ABC stock. Yes. You don't have to make the money back in ABC stock. You can go anywhere. You go where the opportunity is. That's the great thing about being able to trade on any exchange, anytime, anywhere, instantaneously. So don't get stuck someplace like Nick is right now, like with
the NASDAQ,
selling more NASDAQ futures.
I just got filled on Amazon too. I don't know. I mean, you're getting a nice little bounce here. You got the NASDAQ's basically at highs of the session, highs of the week. It's been a really tight week. I figure maybe you kind of end this week as basically flat. If you give up 100 points here, the NASDAQ basically goes nowhere for the whole week. Mm-hmm. I figure that's kind of in the cards today. And I'm taking off a bunch of long delta as well, just via the Amazon position. I'm routing that order for AMD. So if the market continues higher, some of those will come off the table as well. So I'll be booking profits there that, can go towards more short positions.
Okay, LO down around $8.5, taking back about half of its move from yesterday. Still better, probably down what you would expect on a floating of stock than the $4 it originally opened.
Yeah.
All right, awesome. Are you ready?
Yeah. Oh, we have trade ideas coming up, so that's good. Because
we got fast market. We got 10 trade ideas for you coming up immediately.
Let me scoopy.
Sold off about 30 handles.
I was just gonna say, can you push that one through real quick before we go? Just that's just one. We're gonna start with one, and we'll go from there.
When you're all filled, then we'll talk. Right now.
Well, yeah. Well, we're just scalping. This is a little something.
Understood. Remember, nobody wants you to do better than nobody wants you to do better than me. Only a father wants their son to do better than them. So remember that.
Thank you.
You're welcome.
Thank you.
Let's take a quick 90-second break and come back. We got more.
I'll take one more here too.
That'll clean you up around 50%. That'll actually get you in positive territory for your scalps now, I think. Correct?
Yes, but I did it in the big boy.
You did it wrong. Yes, yeah, you did it. You're you know what it is? Because you're looking at. You should change.
Yeah.
You should change your watch list to the micros.
Yeah.
Instead of looking at ES, you should look at or have it underneath one underneath each other.
All right, I got it.
Costing you money about. See, listen. This is what happens when you pat yourself on the back too much.
It's okay.
Yeah, the role here is I'll pat you on the back. You just sit back, all right? Enjoy yourself. Take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next? Fast market. We'll be back next time.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with Fast Market. There we go, my son. I was early, you were late. Oh, Lulu, what are you doing there?
Close out of that put. We sold that the other day. I mean, we had a nice little move higher. I think it's got earnings coming up in the middle of next week.
Lulu, I can check that out for you right now. You played it directionally. Stock's up $4.50. So you got direction right, sold puts. Might as well get out of it, right? I mean, who cares about Lulu?
We'll look at it next week.
Earnings are December 11th, right after Oracle's.
Yeah. So it took a couple bucks out of that. Oh.
Sweet. Very nice.
Quick one.
Quickie.
Yeah. Let's get to some trade ideas. I need them.
Yes, you do. Yes, you do.
All right. Ooh.
/MCL, which is crude oil. Let's see what they're doing here. They're neutral. They thinking crude oil is going to stay in a range, but want to potentially catch a spike. I think a spike higher, maybe. Do the bat wings work here? So Adam is asking. He's neutral, doesn't really have a directional bias, so he wants to do what seems to be a bat wing trade, which is a double ratio spread.
So we have an iron condor already, so we're kind of in a similar position.
You agree on the directional bias, right, of it meandering around?
Yeah, the MCL, the options aren't horrible. They're not great. Mm-hmm. I think, obviously going to CL is a lot bigger. You'd have to do butterflies, broken wing butterflies on both sides.
Uh-huh.
But I mean, I like it. You think you get long oil here at 60? It's been meandering at 60.
Yeah, it hasn't. It really is in no man's land when you look at this. I mean, it's right in the middle of its range here, from a tight range from 61 down to around 57 or so.
Yeah, I'm going to stick with what we got. We've got a very similar position. I sold another NASDAQ here.
I see that at 42. And you used the right product this time, so that was good.
I did. It didn't cost me any money on this one.
Good.
My net with my fat finger is going to be a tough. I'm going to have to really.
You're gonna have to divorce yourself from that fat finger.
Yeah, I'm gonna have to do some good scalping today with the micros to make up for the couple contracts on the NASDAQ.
Yeah,
that's okay though.
You have two micros out there now.
Two,
or just one? Two.
Oh. Two. Yeah. So MCL, I like the idea. I'm in it already with the crude futures, the big contracts with a kind of neutral iron condor here. So I'm with you. I'm not going to add to the position.
And we would agree with your trade. Yes. Can put that type of trade on for sure.
Yes. Yeah. I like it, Adam.
Mm-hmm. Yeah, I get people writing in now that they've done the same mistake as you, Nick. We've all done the same mistake. Trade the big future instead of the small future, future instead of the big future. NASDAQ gets big in a hurry, they said.
It does. And I see some people in the chat talking about it for sure. It happens all the time. And when I do those, I just close out of the position. Like I've gotten emails where it's like, oh, I did, a $5 wide instead of a $2 wide or a $10. Yeah. Just close the position. It happens from time to time. You lose, sometimes you lose a couple dollars because you got to get out of the position at a worse price. Sometimes you make a couple dollars, but you don't have to sit there and just hold the position because you have it on. Just close it out and move on. And you know what? It's
some good fatherly advice there from a youngin'. I agree with you.
Yes. All right, Josh and Boulder, looking at ETH and IBIT, market overacted these past month. Fear still here, which is great for premium sellers. IVR looks good, selling the 20 Delta Strangle in January. I like it. If I didn't already have tons of positions on, I'm pretty locked and loaded here in ETH and IBIT. I'm actually kind of neutral with the option positions that I had. I added some call ratio spreads on top of the long stock that I have. So I'm long stock in both these with call ratio spreads wrapped around where we are right here. Actually, this move today kind of helps my option positions, but my heavier delta is just long the stock. So
You
I'm
want
with
it higher.
yeah, I want it higher for sure. But I like it. If you don't have a position on here, we did one in the Johnny Trader account. So we sold a put spread in ETH in the Johnny Trader account. You could definitely, if you can afford the buying power, I think these are certainly interesting here. I say go for it, but I'm already in and I'm pretty set with my position here.
Did you happen to hear my ding before in gold? I closed my option trades today podcast from just like 3 days ago or something like that. Tuesday, I guess.
Very nice. Very nice.
50% of profit received, of credit received. That's all I can do, son.
Some would say you are gifted.
We are not those someones, but sure. All right, so you can abstain, Josh, here, but you have similar positions on, correct?
I'm with you, Josh. I have this on. I like it. I think it's if you don't have something on here, definitely worth a look.
Very good. Very good. Next one, please. Riot. Ooh, here's a name from the past. Jan 14 puts for $1. They are bullish, so they're selling puts. That would be the way that we would do it. Let's take a look at Riot. IB rank of 28. Okay, and this environment's not great, not bad. Stock has had a rally from 12 to where it is now, around 15 and change. I think it got above 16 for a moment. What do you think about this one?
Yeah, I kind of like this.
Jan 14 puts, that's the 30-ish delta. Here's an example where we talk about, like, do you go 30 delta or 20-ish delta? The 25 delta, the markets are a little bit wide here, right? So you want to kind of go in at your price. Stock's a little bit weaker this morning. Maybe they're going to bid for puts a little bit. If you look at the markets here on the 20-ish delta, you're only getting around 80-ish cents. On the 30-ish delta option, you're going to get more than $1 or so. I would probably go with the 14 puts also. I would probably better the bid. You better the offer you did. You went in at 118.
Yeah, now I'm at 116. I'm in.
Man, oh man, you just got to sit.
I'm 0 for 2. I'm 0 for 2 on trades, although I already have them on. So
you just sometimes you got to sit, son. You got to show a little patience. Let them help you. It's actually fun when you nickel and dime them.
I see it. I want in. I want in. The penny, take it.
Okay.
All right, I'm in. I'm with you.
We agree. Next one, please.
Costco, cautiously bullish. This is Alex in Savannah. Selling an unbalanced iron condor January. You're looking at the 860, 830 put spread and the 960, 980 call spread. So I was actually looking at this the other day. Was this yesterday? The days are blending together.
A lot of bad headlines on Costco. They're really poo-pooing Costco. I think it might catch it's up $8 already. I was gonna say I think it's gonna catch a bid. I haven't looked at it.
Yeah, so I actually put on a put spread yesterday. So I have the 850. I have the 850, 825. I also have a diagonal spread here with some upside to the upside. But the 850, 825, so I'm 25 points wide. You're looking 30 points wide on the put side and then 20 points wide on the call side. I'm going to just add the call spread, and we're going to do this 25 points wide. So I'll just have a neutral delta iron condor, kind of at advantageous prices, given that the stock is up today and I sold the put spread yesterday. So I'm making a couple bucks here. I'm kind of legging into it, but I'm going to leg into the position it's a very similar position. I'm going to do the 975, 1000 strike call spread. I'm looking at that at like, these markets just move.
Now you can sell your NASDAQ where you sold it, even higher than the third time.
Oh, was that a little slight at me?
A little bit, yeah.
I mean, with my scalps, I'm flat here. What I should have done is held the fat finger mistake. That was 100 points.
Yep. Woulda, shoulda, coulda.
Yeah, there you go.
Now you're talking about holding them. Unbelievable.
No, I'm not.
Just told everybody not to hold your mistakes. Now you're talking about holding your mistakes. Wow.
I'm playing it to the downside today. I think we get some chop back and forth. All right. Costco, the spreads just moved. I'm gonna try and put this in at like $4, and we'll see if we get filled.
Okie dokie.
I don't think we will, but I will put this in at $4 if we get a little bit of a bid here.
Okay.
Is that like 375? I mean, these markets are $2 wide.
Yeah, they're not great.
We'll try this at 375 and sit there. So I'm with you, Alex. I'm going to try and leg into that call side here.
Very nice.
Cool.
Next one, please. QS. I don't know if I've traded QS.
We traded this the other week. I don't know if it was the same person, but they were looking at somebody was looking at puts here. And the last time I traded this was when it like first SPAC'd in the early 2020 time frame, when you had all these like energy companies, all these crazy, SPACs that came out, and the stock went to like 50, 60, and now it's back down to,
it's in the teens. It's like 12. You traded it back on 11.19, and then you bought them back on 12.02. You sold some puts. You are correct. Good. The 12 puts. So you're probably right where we were back then. When you did this trade.
Okay, so I had the December 12 puts.
You sold originally the December 12 puts. That is correct. If you're looking at the Jan 12 puts in QS, those are trading for around $1.03 to $1.13. What do you think here? Ivy rank of 38, good-ish. Stocks had a little bit of a rally last, from 11 on to up to 12. I don't know. Seems like a okay play. It is down 17 cents, which is 1%.
All right, let's sell the 12 strike January puts.
I think you're stuck. I mean, you look at the 11 puts; they're 60.
Yeah.
Now you go in at your price, son.
I did 110.
All right, good job out of you.
I know you got
They just sit. They just sit and say, "Come for me, Johnny."
Yeah, come get me. You can push through that NASDAQ. That's about 20, 30 handles.
Yeah, thank you, Dad, for pointing that out for me. I really appreciate it. You're welcome, son.
You were making fun of me. You were like, "Oh, you're gonna
no,
this Johnny."
Not that time.
Okay.
I made fun of you the other two times.
Yeah, that's all right.
Good job out of you.
Next one, please.
Next one, please, is right.
All right, H. Montero, my guy, Smoky Mid Pot, New York. QQQ, Bat Jr. has been doing such a good job. Thank you, brother. I already forgot about that Tim fellow. I like that. Forgot his name too.
Tim who?
Yeah, who? Anywho, is your Santa hat on? Mine is. After the January 6th, so you're looking January 6th, December, 610, 635, call diagonal spread. Buy them before you miss them.
All right. What does that mean?
Okay, I like this. I kind of have this on already. So I'm long the 600 in January. I'm short maybe 3 of the December 625s. So so you're looking at the 610, 635. So you're in the money. So this is like a poor man's covered call type thing.
Uh-huh.
All right, let's do January. I'll add a little bit here. I'll do the 630. I usually like to go somewhere around the 40 delta. I'll meet you halfway and do kind of like a 43-ish. We'll do the 635 in January, and then I'll sell the December 645, and nets me about 20 deltas. It's a $10 diagonal spread. It kind of plays into what I have here of like neutral, slightly bullish from this point forward, but I'm going to adjust the strikes a little and get in with you, H. Montero.
Okay.
In solidarity. I'm putting it in at 10:05. I'm gonna let that position come to me as well.
See, you're learning, son. You're learning.
Took me 10 years. Finally got it.
Bat the mechanic. Look at you. SPX, another inside day. 8 days out of the last 9. We need a massive move for new highs. Thinking we just range here for now. So they'll talk about range bound. It's just about 9 o'clock. I haven't honestly kind of forgot to look at what's been going on. Even the S&P's expected range is around $23, maybe just a little bit less than that. What do you think about a trade in SPX?
Oh, shoot. I just missed my NASDAQ. It's got up to 25.8. What do you think at SPX? What are you thinking?
I just spoke to my putty cat here. She doesn't hate it.
Okay.
Doesn't hate it.
What do you think about leaning slightly? That's the Qs.
Nice. Look at that. Filled at your price.
Yeah. What do you think about leaning slightly short delta? We'll go to both the round numbers, 6,900, 6,910. We'll go $10 wide, 68.50, 68.40 on the downside. Trades at like 325, 330.
Sure, it fits your assumption. Go for it.
And we'll do another try and get like $50 out of it.
Sure.
All right, I put it in at 330. We'll see if we get filled. It's got a little bit of short delta. It actually doesn't really have much short delta. There's a little bit of
5 short delta, 4 or 5 short delta, but it really, if you put this on equal distance, it'll probably have 2, 3 short deltas. So it doesn't really have that much short delta. And
I'm going to try it at 325 and see if we get filled.
Yeah. Okay. Sounds good.
All right. QS.
Look at you getting filled at your price. You know, when a product is going in the opposite direction that you want it to go in, but you're looking.
SPX 325.
Dude, getting filled there at 325. I mean, when the product's going the opposite direction, you're going at your price, son.
Yeah. It's good. I like it.
All right. Beautiful.
Good learning. I'm finally learning.
We're in.
All right, we're in.
Beautiful.
Netflix. Okay.
Netflix.
So Jeff in Miami, how about a 96 115 strangle in January? I kind of like this. I have stock's up 102 now.
Wow.
All right, so I'm short the 100 strike puts already. I sold those at $3. They're only at 320-ish right now.
Mm-hmm.
You know, stock has been.
Netflix traded down at $97, 97 and 97.74, up to almost 103 where it is right now. That's near its highs of the day, down 50 cents.
I like this, Jeff.
So I guess they like the deal now. They hated the deal before.
Maybe
like it now.
96 115.
Okay.
I put it at 314. We'll sit there for a second.
Mm-hmm.
I put another NASDAQ on. All right, so I'm in on that Netflix straight. Did I get filled on that? Let me get filled on that. Can we give up the penny there? Are you okay with that?
Sure.
Venmo? You want me to?
Sure. Go ahead.
All right, I'm gonna try 312 and see if we get filled here.
Okay.
We'll let that sit. It was marked around there just a moment ago. It's got a little bit of long delta here, so with the stock rallying, you need kind of a down tick here to get filled on this one.
Uh-huh.
Cool. Thank you, Jeff. I like it. I have your rank at 24. I mean, it's one of the higher ones on the board.
Yep. Totally agree.
Next one, please. Oh, now you got Bitcoin rallying. That's what's happening.
That's the last part of the equation for today. I mean, you got gold rallying, You got oil up small. You got the Nasdaq up large relative to the rest of the market.
Yeah, one of these is lying. It's either the Nasdaq or Bitcoin. And Bitcoin has been the one that hasn't really lied.
That's true. That's true.
HIMS. Okay. So we actually I closed out of a position in HIMS. I think it was another fast market or what's your assumption trade from a couple weeks back. We sold the put, bought the call spread. So it was a Super Bowl, aka the stupid. So we
not because it's bullish or bearish, just because it's all one directional.
Yes, exactly. It's double directional because you're selling the put and then you're buying the call spread. So both of them lose to the downside.
Which has been a beautiful play in SPY.
It has been. It's worked for quite some time. But we just closed that out yesterday. I scalped out of the puts and then the stock was randomly up like $2 or $3 throughout the rest of the day. I closed out the call spread. So I don't currently have a position on in HIMS. So Jack is looking at buying the February at the money call, selling the January 47 call. Let's take a look at this. February, January. So you got a lot of duration here. So you're looking at like the 40 call is at the money in February. And then you go to January, you sell the 47. Do they have a price on this? No, they didn't give us a price. Trades at like
AMD, buying back some putties.
Yeah. Okay, so this is kind of like a poor man's cover call / diagonal spread. There's a lot of time on this trade, so you're going to be holding this for a couple weeks, if not the next 30 or 40 days.
Sure.
I don't hate it. It's a small trade. I'm going to try at 405, a couple pennies off the mid price here, and see if we get filled there. So I'm gonna keep that one in for a moment and see if we get filled.
Okie dokie.
Cool. E-mini's up 34. Nasdaq up 200. A little bit of a rally here. 6,900 on the dot.
6,900 on the E-mini S&Ps, and flirting with 26,000. About 170 handles away from that. No reversal Friday. Everybody knows that.
Not yet. You still got time.
Next one, please. Last one. Take him out of his misery here.
Oh, God. Natty Gas.
Well, if you want to be bearish, I hope you waited to see what we would say. And we would say that today is a much better day to put on any type of trade with short delta than yesterday. You can see this big move in Nat Gas. It's almost a 6% move in Nat Gas. I'm going to abstain from this. If you wanted to go to UNG, it's a $16 product. You could try and trade that. You can go out to January. I think you just, if you're going to be bearish, I think you just buy a put spread or something like that. There's really no premium to sell here, even though the IV rank is 63. Expected move is around $2.50, a little bit more. I think you just, if you want to do something in Nat Gas, you buy a put spread in UNG. What do you think?
I was going to look at like a call spread on the upside.
You want to buy a call spread?
No, selling a call spread.
Oh, I think
trading at bearish. You don't like that?
Well, what?
I was looking at like
futures options.
Yeah, I was looking at like the 596 in December. Okay. Just like just something to have on so that I can watch Natty Gas, because I don't trade a lot of Natty Gas. It's a one-off trade. It's obviously had a huge move. Keep it small and just kind of put a little engagement trade on. Trades at $200.
Okay. I don't hate it.
Dude.
No, I don't hate it. I don't hate it.
We'll put it in at 2 and see if we get filled. These markets are like 5-6 ticks wide. If you get a little bit of a continuation to the upside here, you might get filled on this. So I'll put it in. I'll entertain this one. I think the put spread makes sense too. If you want to, buy the put spread and not have that upside risk, you do it right at the money. You were probably looking at this the other day when it was trading, around this price. So it's up another 6% today. So you got a better entry if you waited.
Very nice. Good job out of you. How many we get there? Do we have a little list there? I know we've got some honorable mentions in there too, right?
Yes.
Look, if they say you're almost 10 for 10, and Nat Gas, we got something working, that's for sure. But I think you did all the rest, correct?
Yeah, I didn't get filled in Costco, even though its stock is up. So you got volatility coming in there.
Yeah, and Costco markets are a little less than desirable.
Yeah, I'm gonna leave that one in, but I'm with you there. But yeah, we got pretty much everything else on. Do we have any other working orders? The Netflix strangle is moving too. I'm gonna move that down to 310.
Okie dokie.
Yeah, Netflix now up on the day.
Unbelievable. Isn't that crazy? Like, announce a deal, it goes lower, and the stock goes higher or unchanged pretty much. OKLO is down $6.50 too. So everything catching a small little bit here.
Yeah.
Cool. All right, my son, we're going to take a quick 90-second break. Great job out of you. We're going to take a quick 90-second break. We'll take a quick look at the market before we do that. Even the S&P is trading near their highs now, up 32. We traded over 69. We're just under 69 at 68.99, up 32 handles or more. NASDAQ up 200 and change. That's your lead in the clubhouse.
Natty Gas.
Oh, Natty Gas. Okay, beautiful. So you did all 10 now.
Yeah.
Very nice. NASDAQ up 212, Russell up 2, Russell the weakest of the group, obviously. Dow up 217, volatility in by 25 cents, anemic at 1730. Bonds are down 7 ticks back near their lows, 115.26. Bitcoin trying to catch a bid over 91,000, 91.3, not near its highs of 93,000, about $1,500 to go from there. Ethereum almost unchanged, down 4. Ethereum fearing better than Bitcoin right now. Oil up 38 cents. Gold up $26. Been catching a little bit of a bid all day long. Silver's definitely catching a bid, up almost 3%, 2.75%. That's moved about a 0.5 percentage point against you now, being long gold 2 times, short 1 silver. Net gas is up 30 cents. And that's all I got on the future side. On the upside here, what's bringing us to the promised land? App 11 up 15. ADBE been strong all day, up 14. CRM up around 10. AVGO up around 10. Crowd up around 9 and change, and your Costco up 8 and change. On the downside, let's take a look at that real quick, and then we'll go. OKLO down almost $7. DocuSound down 4 and change. Hood down 4 and change with crypto lower. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. Back in 90 seconds, Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus 1. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Why do you want high Ivy rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since Ivy rank measures today's Ivy against where it's been in the past, high Ivy rank tells you if people want to throw more money at you now. So look for high Ivy rank when you sell options. Pretty simple.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with this market measure. Let's take a quick look at the market. Really not too much happened over that short little break, but we are still up 34 handles. What would appear to be pretty close to all-time highs here. I know closing highs are closer to 69 and change. We're right there at 69.02. NASDAQ up 232, further off of its all-time highs of above 26,000. Russell only up $2.60, but you can see here the Russell has really taken the market on its back this week and had a much larger rally relative to everything else. Dow up 216, volatility in by 20 cents at 17.35, and bonds are down 6 ticks. Nat gas still rallying up 34 cents. You can see here at the high end of its range. That's all I got for you right now. We got a market measure for you.
Yeah, they are absolutely killing volatility. I mean, we put a bunch of those orders in the morning, and we've had a little bit of a bounce in the market, obviously, but a lot of those puts that we sold in the last couple days came in 20 to 50% already.
Right.
And we've talked about that before of just, that's way ahead of the decay curve that you can expect. I mean, you usually expect to get, 20% over a week or 2 weeks would be, normal. 2 weeks probably be like your normal range. You're getting it in 2 days. I mean, that's
correct. You're 100% correct.
It's good, but the caveat is that once you close those, now you got no.
Now what do you do? It's good for existing.
Now what do you do? Yeah.
Now what do you do? Right.
Exactly.
Yeah.
Anyway, let's get into it. So we got a market measure here. Why the same premium doesn't mean the same risk. So this is sponsored by the SIBO, of course, and is a follow-up to what we talked about yesterday.
Yep.
So let's do it. So yesterday we discussed how much premium we receive on average relative to the stock price. So, and we looked at kind of how you can determine that. So we looked at basically premium over the stock price, or the stock price over premium, I should say, and how much additional premium we receive when we sell in different periods of volatility and how often those occur. There's the cat again. There we go. And so really what
every home should have a little bit of
don't go there. Don't go there. So yesterday's segment was basically, the takeaways and thought process there was that, periods of very high volatility don't come very often. You kind of have to have a range of volatility, and that 30 to 60 IV rank range being kind of the spot that's kind of the nirvana spot. You don't want volatility too low, too high. You don't want it too low. You want it just right. So that 30 to 60 range kind of being the just right range. So here we're going to look at the difference between a 16 delta strangle and a short put where the same premium is being sold. So a lot of questions we get around premium are like, should I sell the same premium option? Should I look for the same amount on an iron condor in stock XYZ versus another one? That's kind of where we're going here with looking at the premium itself, the same amount of premium.
Okie dokie.
So what we're looking at here is in the 30 to 60 day time window, the put that has the same premium as the 16 delta strangle, and that puts you at roughly the 25 to 30 delta put. So what that means is if you're looking at just doing one side, so you want to sell the put, you're going to sell about the same amount of premium as you would be selling the one standard deviation strangle in SPY. And so it makes sense because when you add up the deltas of a 16 delta put, 16 delta call, you have 30 total deltas there. They offset each other because they're on different sides, but it makes sense that you'd have kind of a similar amount of value in those two options. So the combined credit of the 16 delta put and the 16 delta call is approximately equal to selling a single put at a 25 to 30 delta. That's kind of your premium range where they're equal. So we're going to take a look at those two trades here.
Okie dokie.
Do I scoopy one of those MNQs?
This is your party. Sold them at 57 and trading around 40.
I just had them at 37. All right, we're gonna hold.
Put a bid in.
Okay, so SPY 45 days, and we're doing this from 2020 to 2025. So that's our study. We're looking at the 16 delta strangle, the 25 delta put. So this is roughly the same amount of premium. And we're going to manage these trades at 21 days. We recorded the average P&L, the average standard deviation with standard deviation of risk, our CVAR, and P&L for both the strategies. What do you think is going to work best in this time frame?
And it's a typical time frame for us, right? We always look at this 45-day time frame, 16 delta strangle.
No, I mean from 2020 to 2025.
Right. I mean, the one that has the more delta to it is the one that's going to more bullish delta to it is gonna be the one that works, I would imagine. Right.
Yeah. Well, it's been a mostly up market, so that'll obviously influence it too. But I think we'll see kind of a mixed bag here as there always is. Next slide here. So splitting the premium between the put and the call actually tightens the risk profile. Obviously you have, this goes to our guy AZ, who emails us all the time about one standard deviation representing both sides. So when we say one standard deviation put, we look at it from a delta perspective, but from a probability perspective, if you move it to the 30 delta, that actually gives you that's the same probability. It's a 70% probability of profit. So anyway, so looking at these, splitting the premium between the put and the call actually tightens the risk profile because you have risk on the upside. Even when premium is the same, the 25 delta put offers 75% higher median profit. And that's because we've had kind of the data set here of the last 5 years has been mostly bullish, 8% higher win rate and 22% better profit factor, but at a cost of 34% higher volatility. This should not be a shock to you. When you are only trading on one side of the market, your volatility at any point is going to be way wider because you don't have those occurrences where market goes down and you have value that comes out of your calls. You're just on the long side here. So, you have that kind of worse tail risk, and that's also because your put is closer at the money. So you have 41% worse tail risk and a 14% larger worst case loss compared to the 16 delta strangle. So, it's a double-edged sword, right? I mean, you're going to make more on the moves up, and it has been a upside market. The market has gone up. But when you have those moves to the downside, you're going to also have bigger tail risk. That just comes with being directional versus non-directional. And we're just looking at Coinbase.
Coinbase, that's correct.
You sold that for $7. What? 35 minutes ago?
Yeah, when we did the segment, nice little scalpy out of you.
Yeah, I just put that in at 6 and didn't think we would get it, but so ultimately, like, we're looking at one position set, and what this should tell you is that you need to diversify not only strategy but directional assumptions across your portfolio, because you don't want your whole portfolio to just be short puts. You want to have that two-sided trade and limit some of that tail risk that you have here.
Very good. Even the S&Ps are still up 35. NASDAQ still up 228. Hasn't moved that much.
Where's our SPX at?
Oh, your SPX spread's got to be a debacle. Let's take a look at that for you.
No, we're right there. SPX, we're still out of
430. You're out of buck.
430.
Mm-hmm.
I figured maybe you get a little bit of a vol crush here. I mean, because you got volatility down 20.
Yeah, but you got to define risk trade. You're in it for the duration now.
Yeah. In market downturns, the story becomes even more convincing. We computed the average results for these major downturns. And so we're looking at from February to March of 2020, that was kind of the COVID craziness. And then from January to October of 2022, and then the major and secondary drawdowns. So like these are some of the kind of lesser moves to the downside that we had as well throughout this 5-year period to kind of look at those stats as well. So getting on to the next slide here, the difference becomes even more clear in the severe market conditions. With similar initial credits, the 25 delta put delivers a 25 or a 26% higher median profit, but it also comes with much more P&L volatility. You have 34% more volatility and 34% worse tail risk and a 14% larger max loss. So, again, we're cherry picking these stats, but we're showing you that it's not always, roses, right? You sell the puts and it's great, but you have to be able to, and this comes with sizing and managing winning trades and all that good stuff. You have to be able to withstand when things don't go your way. I mean, it has been mostly free money to sell SPX 0-day put spreads, but occasionally you're going to take that max loss and you're going to have those sort of drawdowns. So you can see here, you have much wider CVAR and much wider peak to trough P&L when you're just doing one side of the trade. The 16 delta strangle, and this has the same amount of premium, holds up far better under stress, posting a 4-point higher win rate, a 23% stronger profit factor, and reduced risk by 25%. That's not a shock because you're selling some short delta, and we're looking at downside moves here. So even though the market has gone mostly up, the strangle has still been.
We're at all-time highs. Yeah, sure, it's gone mostly up, right?
Yes. Well, over this 5-year period.
Right.
Mostly up. Overall, I think what this tells you is that you need to, you can't just be on one side of the market.
This is true.
So last slide here. In the long run, it generally does not pay to replace the call. So I scalped out of one of the micros there at 30.
Nice.
Yeah, so it got me a couple bucks back.
Mm-hmm.
Even with the same starting credit, short puts consistently show higher volatility, worse tail risk, and larger max loss than comparable strangles of the same initial premium. And we're just looking at the market as a whole, SPY here. That's our study here. The in market downturns, the difference becomes even more pronounced. Short puts can carry 30 to 40% more volatility and worse tails than the strangles, the further out of the money strangles for the same amount of premium. So from a risk perspective, this kind of answers the question of like, what's more risky, the 30 delta put or the 16 delta strangle? Most people think because you have the upside risk, the strangle is more risky. It really is the downside risk of just the put and not having that short delta that is the higher risk here. So overall, both have worked over the last 5 years, but in terms of tail risk, you have a little bit more with just trading one side, which shouldn't be a shock to you.
Very good. Great job out of you. Great job by the team outlining that. Nice being nimble on your futures here and not getting too stubborn too. Good job on you in closing a bunch of trades. I mean, you already made, 30 trades today. So we had a busy day on what seems like a really nothing one-sided move in the market. Yeah, you.
Bless you.
Thank you. We got something we haven't done in a long time. We got phone lines open, 855-238-2789 or 855-BE-TASTY.
You chat them in on the YouTube chat too. I'll be watching that as well.
Yes, please. We are YouTube chat friendly now.
Yes, we are.
The prior administration is gone, which did not allow us to engage with the YouTube chat. Now we are engaged with it. But the number will be below in a minute, 855-238-2789 or 855-BE-TASTY. Give us a buzz. I do have to do a little public service announcement for our friend Dr. Jim. The last live show of the year, if we could put that up, is in Tampa. Thank you so much, everybody. Options Crash Course Live with Dr. Jim. He's at the theater at Amateur Works, believe it or not. Tampa, December 7th at 5 p.m. Show starts at 6. Dr. Jim is very generous with his time there, an hour before, pretty much an hour after. We'd love to see you. Seats are available. Please sign up at tastylive.com/events. That's this weekend. Doors open at 5 in Tampa. So please come out. 855-238-2789 or 855-BE-TASTY. We're going to come back with Q, your phone calls, and maybe even a little YouTube chat. Immediately found these messages. Let's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear 145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Nicky, we are back, son. And you know what that means. We go to our trade desk. But before we do that, let me give you one more. We've got our phone lines open. So give us a buzz, 855-238-2789 or 855-BE-TASTY. That phone number will be below in just a moment. 855-238-2789 or 855-BE-TASTY. As soon as you call in, I'll interrupt this next guy who's coming on. Give me some ditty deets. Live, not Memorex. Do you even know what Memorex is, Q?
No.
I figured I'm dating myself here.
Memorex, those were the little floppy disks. The disks and the CD-ROMs, right?
Close. Those were the little like cassette tapes that you would stick in like a boom box when you would hear a song on a radio. You would record it, and then you would have this little this little tape of all these songs. It was before CDs, in between floppy disks kind of thing.
Dinosaurs roam the earth.
Dinosaurs. Memorex is it live or is it Memorex? It was so good, which it was not that good, but it was so good you couldn't tell. Their whole thing was Memorex was the company. Is it live or is it Memorex? It was.
That's a good.
Yeah, so
Yeah, my
Quentin being
grandfather.
live or
My
Memorex.
grandfather used to have like so many cassette tapes. We could probably fill this entire room with all the cassette tapes that he had.
It was the thing. It was the thing. Listen, if we didn't do that, you guys wouldn't have mixtapes. So, we had to do it for you.
Yeah. Well, we had CDs. You could put 20 songs on the CD.
Yes, you could. And very easily and much better. Quentin, how are you, my man from the trade desk? Looking fine this morning. You matched the two bats. You want me to take you in for Christmas or something like that? You want to come sleep over?
All right. I mean, there we go. I can take the train out the next day, but, I do appreciate the offer.
Awesome. I don't have my Christmas tree up yet. I could use the help anyway. So come early. Yeah. Come this weekend.
Okay. You know what? I'll come and I'll cook breakfast.
There you go.
Awesome. I love it.
My dad's into bougie breakfast now.
Okay.
What was that you were eating there? What'd you have?
A corn cake?
Yeah, that's pretty bougie. You had what'd you have the other day? You had like a whole little hodgepodge of things. You had the little Greek yogurt, you had some eggs, you had 4 or 5 things. You got like a whole staff there now cooking you up?
Like I told Nick on the break, Quentin, you guys got to get one of these craft service girls that live here. They're great. They cook, they clean, they make you breakfast, occasionally make you dinner. Usually you have to take the craft service lady out for dinner, but worth it during the day. I'll tell you that right now.
Okay. I mean, that's a bit out of my tax bracket right now, but maybe soon.
No, you get a tax break if you take on one of these craft services girls. You get a little deduction. Cost you in the long run. Then they take 50% of everything when they're tired of you. Yeah. But other than that, it's a great thing. Quentin, before I get in more trouble, and there's the phone number right there, 855-238-2789 or 855-BE-TASTY. Give us a buzz. Love to hear from you. What do you got for us today?
Yeah, so we've got some business to go over. We've got some splits in a lot of the SPDR ETFs. So we've got things like XLK, for example. I had a call earlier from someone who watches the show, actually. Shout out to him. He knows who he is if he's watching. But like XLK, XLU, things like that. They went through some splits, so all your positions should be adjusted in the platform, and then that doesn't change anything. The value of the position is still the same. Doesn't affect the value of the account. All the options should be adjusted, things like that, if you had any options positions. But just wanted to give a little PSA there. We've got some splits going on.
It just gives you more contracts, right?
Yeah, so like, for example, in XLK, that did a forward split, 2-to-1 split. So it was trading at about $300. Now it's trading just under $150.
Got it.
Yeah. So there were a couple of those, and I see some people in the YouTube chat mentioning some of them. I scalped out of some of those NASDAQs. I fat fingered it. I bought one, sold one, but I'm out of one is what it should be.
I understand. I got you.
Fast market. But so I got some people talking about like XLU going from $90-ish to the mid 40s. You mentioned XLK. All of those had splits. And so all the options are the same. Everything's the same. There's no non-standard, so nothing gets funky. It's all the same risk, same position, nothing changes.
Yeah,
the
so if you had
size.
like 100 shares, for example, and now you have 200 shares just at half the value, so everything is all the same.
Very good. Hey, I got to interrupt you for just a minute, Q. Before you go on, I've got a phone call here. We're going to go to Florida. Scott in Florida. What's up, my man?
I closed another of the NASDAQ. Hey. What's up, Scott?
Hey, guys. How's it going?
Good, Scott. How are you?
I'm doing great. The question of the day for me is I would like to hear from the perspective of Nick and then Tony, right? I want to hear your what would be your expected annual return in your account, Nick, then Tony.
Okay.
And then
So
favorite
I think it's talking about
strategy of what you like to. I'm sorry, say that again.
No, you say it, sir. Go ahead, Scott. Say it one more time.
Oh, okay. So it's the expected rate of return that you would expect, and then also your favorite strategy.
Okay.
So I trade a lot of diagonal spreads, calendar spreads. I like to trade that just because you get gamma and your short volatility in your short time. So you have the mechanics of being short volatility, but you get a little bit of a kicker with the gamma exposure. And I think that I know something, so I like to play the directional assumption a little bit as well. It's also really capital efficient and allows you to get those kind of outsized returns relative to the amount of capital that you're using, especially if you're trading in a smaller size account. So it allows you to get a little bit bigger exposure than selling puts, selling strangles, which are definitely a part of my core strategy. They're just not the only thing that I'm doing. So I like those sort of strategies. In terms of a return or an expectation, I think I'm in the same line of thinking as my dad is going to say, is that, the market, it's hard to kind of have an expectation for the market. I look at the market every day. I think that's the greatest thing about markets, is that every single day there is something new. There is something that changes. There's new opportunities. There's things to manage. I mean, that's kind of how I approach it. I think if you're looking to put a benchmark down, it should be worth your time, right? So if you're trading in a $2,000 or $3,000 or $4,000 account, $5,000 account, that is it's fun money. You're not going to be quitting your day job trading in a $5,000 account. So you have to keep that sort of expectation there.
Okay, I'm talking about a portfolio, a larger portfolio.
Yes. So from a portfolio perspective, I just wanted to mention that because I think people think that, you just get a couple grand and this is, easy money and you retire on that. If you're managing a portfolio, I think you should look at it. Yeah. You should look at it from a multiple of the risk-free rates, right? So you got rates at 5%. Where does it make sense to do this as something that makes the time worth it, right? 3, 4, 5, 6 times.
I was going to say get to the punch. I mean, 4 to 5 times.
So far, I love your analytical answer. I'm ready though.
Yeah, 4 to 5 times risk-free rate. Risk-free rate's around 5%. 20 to 25% would be an expectation. I have viewers that are up 50, 60%. I have some that are basically unchanged. I mean, it all depends on how you catch the market. I myself in this environment, doing a show, doing a little bit of trading on my own, 5%, 6%, 5 to 6 times over risk-free rate, around 25% is a good benchmark for me.
And it's risk tolerance.
As a market maker, it was 400%. But I was taking 20 times risk. Yeah.
Yeah, I got you. It depends on how crazy you want to get with the risk factor, and
That's right.
25% seems like it's a reasonable. Yes, sir.
Yeah. And my favorite strategy these days have been some sort of ratio spread. At least what I show out to the public, that would be a put ratio spread, call ratio spread. Those seem to be my favorite things. And you make it smaller, make it a broken window.
Awesome. And then I just have one more really quick statement. The other day, you guys had a gentleman on there, and he was talking about gamma, and he had it all laid out in calculus. And I just wanted to mention I really loved that episode, and what I really loved about it now, because I'm new in options. And now you understand how I feel when you guys talk.
Sure. Totally agree. I get it.
I love the responses you guys were giving when this guy was going off on the calculus stuff, and that was really good. I enjoyed that. Thanks, guys. You're doing a great job. And all right, buddy. Thank you.
You have a great holiday. Enjoy. Thanks, Scott. Hey, Quentin, can you hold on for just a quick second?
Yeah, of course.
Okay, we're going to go to Chris. Chris in New Jersey. Chris in Jersey, as we say back on the East Coast. And there's nothing new about Jersey. What's up, Chris?
Hey, what's what's up, guys? How you guys doing?
Doing good.
How's it in Chicago? Is it snowing out there?
Yes.
It's 15.
Yes,
it's
it
15 degrees and
A lot of snow on the way to work today.
A lot of snow on the ground, but not too much fun.
Yeah,
We've been
18
spoiled,
degrees
though.
here. It's cold.
Yeah, we've been spoiled.
Yeah, I think you might have done a study about this, but I got a question just on basic intraday timing. So I've noticed a lot of times that a lot of bottoms and tops will occur like right on the minute. Like, for example, if you look like at a Coinbase chart, right? Like on November 25th, it bottoms right at 10 a.m. Like on November or December 1st, it bottoms right at 10 a.m. Sometimes it's 11 a.m., sometimes noon, right? But it's like very like to the minute on the hour. I think you might have done a study on this, but have you looked into that? Just like what the occurrences may be, like when it goes like right to the minute on an hour, and the same like on peaks, I guess.
Yeah, I think it's hard to isolate that on single name stocks, but I know Jajun did a study on kind of of his trade, which Liz and Jenny love doing it as well. But somewhere in like the 10:30 Central to 11:30 Central time is when and over the study's time frame, which is 0-day trading, which is only a couple years. I think it's 2.5 years now, but that's kind of been the peak of volatility, meaning it's been kind of the bottom spot in that time frame. I don't know if we could go down to the minute, but that's kind of I guess that kind of goes to what you're asking.
Yeah, like I've heard a lot of other like expert traders in the industry, whoever sells books and webinars or whatever, they always say like the biggest trading usually always occurs like in the first hour and a half, 2 hours, and then it's like after 11 a.m. or noon, like forget it, like just close out and reset the next day or something like that, you know?
Yeah, I mean, anyway. It's intuitive. It's intuitive because the market's just opening. So that's, like everybody's been waiting all night long and they're getting in the first part of the market. It's the same thing at the end of the day. Everybody's got to close positions out, flatten out. That's just where liquidity.
But I don't think that has anything to do with market direction, peaks and valleys.
Yeah, I don't know if that, yeah.
And I just had another question just on the tape itself. So other than CNBC, I don't see like the running tape on the bottom of the screen unless you're in Times Square or like at a bank. You'll see like an LED screen, or maybe Bloomberg has a tape. But do you know like where the quotes, like they're obviously like very selective on these quotes. You'll have like the big Mag 7 names, or you'll have these really obscure penny stocks that just explode from like $1 to $5 or something. But like, how does that? Who propagates that tape? Is it like the New York Stock Exchange or the Nasdaq? Like, because I'd like to have a tape, and I don't know if tastytrade has their own tape, but like I'd like to see like a running tape, just like as an app or something, you know.
Yeah,
and like other than CNBC or Bloomberg, I don't see a tape like that. And I don't know where these numbers. Like who chooses what's on the tape? You know?
The high option volume watch list on our platform.
So yeah, you can curate your own. Stocks. But remember, when you're seeing a tape like in Times Square or something like that, it's to get your eyes. They want eyeballs, right? So they're going to give you the most popular stocks, and then they're going to give you the stock that goes from 1 cent to $100 overnight that nobody can trade or traded, but it gets your eyes on it. That's just marketing. But if you want to look,
is that like a human being doing that, or is that like an algorithm?
I would probably say
algorithm. But you get all the sponsors in there. Pfizer's always coming across the board every 20 seconds. Like that's probably what it is. I don't know
I don't know either.
Yeah, I would probably think that as well. And then we've got like the Tasty hourly top equities as well, just see like what most people are trading through the tastytrade system, and then like all the other like high options volume that Nick mentioned, things like that, like high call volume.
Okay.
Very good. So I'm gonna let you go.
All right,
Let
thanks,
Quentin
guys. Appreciate
get to his list. Thank you so much for calling in. I really do appreciate it.
Hey, I'm out of the NASDAQ.
Yeah, I'm having a little problem. Are you having any problem with the follow page admin app, Nick? Can you see if you can push those last few?
I will check it. Yes.
I haven't been able to push the last few trades through.
Yeah, I got them.
Okay, I'm having a problem on my end then. Your SPX trade is basically a small profit to a scratch. I would probably hold it at this point, but it's up to you.
Yeah, I put an order in to close it.
Okay.
But
For
yeah.
a profit probably, right?
Yeah, and NASDAQ, I took a couple handles out of net.
Very nice, very nice.
It was a battle.
Good hold. We're the adversary.
Yes, we're the adversary.
The list. I'm so sorry.
No problem at all.
You've
So
been so patient.
Of
Thank you very
course.
much. You're a kind man.
Of course, yeah. All
You're
right,
a
top
kind,
20
strong
symbols.
man.
Top 20 symbols going through the
Handsome. You're
system.
handsome too. You're a
Thank you.
handsome, kind, strong.
Eligible too.
What's that?
Thank you.
Eligible.
Eligible.
Thank you.
Eligible.
Thank
People in the crowd, send in
strong man
applications.
and a
Alrighty.
tripod. Go.
Top 20 symbols going through the system and their IVRs. At number 1, we've got Tesla, 6, SoFi, 17, NVIDIA, 10, Netflix, 22, GLD, 36, AMD, 22, Palantir, 2, Google, 15, Meta, 4, MSTR, 34, Oracle, 82, SLV, 59, IBIT, 51, IRBT, 80, Amazon, 10, TQQQ, 20, CRM, 13, Goog without the L, 14, Robinhood, 15, and Broadcom, 30.
Good job, buddy. You sit right there, Q. Daniel, real quick. Daniel in Oregon, Southern Oregon. That must be the warmer side of Oregon. Daniel, what's up?
Yes. Happy holidays, everyone, first of all.
Oh, my man, Big
Nick?
D, what's up?
I want to tell you, Nick, you're doing a great job in having big shoes to fill or a big head to fill.
Thank you. I appreciate that.
And you should really learn what Memorex and soupy sales and cockroaches are. You're missing out.
I remember Memorex. I remember.
Okay. I want to tell you that shorting has changed my life. It's greatest thing.
No joke. At market highs, you're saying meaning shorting options, puts, calls, both sides, whatever.
Yeah.
Awesome.
Yes. Shorting.
I do agree.
Even getting in front of the NASDAQ steamroller, it seems to work out because markets go up and down.
It's wonderful when that happens. It really is, when you get a little two-sided action.
Yeah, I mean, look at Nick. He's been directionally wrong all day, and he's been able to make a small little profit here.
You know what?
No. And when you're right, you make a larger profit. That's nirvana. You wish it worked out that way every time.
That's right. And even though I get up before the sun rises to see you guys, Nick, you're much easier to take than Tom.
I appreciate that. Thank you. Thank you, Daniel.
Thanks, Daniel. Appreciate it, man.
I'll see you when I get back. I'll see you when I get back to Chicago next year.
Awesome, man.
Love to have you, man. Thanks for coming out. Thanks for all the support.
Sure.
You got it. All right, Q. Thank you so much for coming on, Daniel, and the group there. Thank you for calling, Chris, Daniel, and Scott. Appreciate it. Nick, we're gonna take a quick 90-second break and come back. We got more Tasty Live after.
Just got filled on hymns on that hymns trade.
Look at you doing good.
That was the one from Fast Market.
Beautiful. All right, my friend. We gotta go. It's been a great morning. I mean, one of your busiest mornings in quite some time on really a nothing day. But you've been finding silver. You've been working out on gold, even the NASDAQ, bunch of equities. Good day. Way to finish the week, son. Good job out of you. Q, always a good job out of you.
Thank you.
You never do a good
you.
job. And he's knowledgeable. Knowledgeable, ladies. That's right. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Peace.
Peace.
And a good sport. Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with this man, Jamal, this week in stocks. Jamal, this week was not like last week.
This week was not like a lot of weeks in a long time. I just looked at the range on the week, about 84 points. I mean, you got to go back to July to get a smaller week. The week before was 238 points in range in the S&P 500. So fairly quiet week. as you would imagine. I mean, not a whole lot of things to discuss, but I got some stats for you.
Okay.
S&P 500 increased 8 of the last 9 trading days. I mean, it's not stuff that you don't know. It's just, I think it's been a couple of weeks here where things were a little quiet the week before, at least quiet as far as not a whole lot trading. Volume's a little lower, but still 8 out of the last 9 trading days were higher here. The S&P 500, Russell 2000 has outperformed more recently, as you've noticed, and a lot of that is probably due to the sentiment around rate cuts as of right now. Technology sector,
and a little bit of catch up in the indice itself relative to the mini S&Ps and the Nasdaq, right? It was kind of the lagger the weeks prior.
Yeah, for sure. And you could see that for sure. Yeah. The technology sector, XLK, and transports, for whatever reason, they both have 9 consecutive days of advance. And natural gas is at 3-year highs now. Last time we saw it, this high was I think September 2022, but last time it was above 5. It's been a while here. So yeah, I mean, just a few things moving to the upside pretty big for the most part, man. It's lower volumes. We look every day around like noon to see where S&P 500 futures are as far as volume trading. And on most days, it really hasn't reached 1 million more recently this week. So it's been kind of quiet. And so everybody, you feel like, what are we waiting on here? Are we waiting on something? What's happening? Is the Santa Claus rally going to be the thing? I don't know the answer, but it seems as though we've been waiting on this PCE number to some degree. I mean, it's been that, right? It's been what's going on with inflation, what's going on with jobs, and how's that going to affect rate cut stuff, right? We haven't gotten any jobs numbers, but we have gotten the jobless claims. I guess people are paying attention to those now since there's no real job numbers coming out. And the one that came out yesterday looked pretty good. So it seems like it's full steam ahead on the cuts because it's about an 89% chance of the rate cut coming up.
Yeah, bonds are going lower, right? Trading just at 116 right now, low end of the range for a couple of months, definitely low end of the range for the last couple of weeks for sure. You mentioned everybody waiting on numbers. I can tell you the one big number that everybody's waiting with that the people that I'm around most of the day, and that's high schoolers, and they've only got like 10 more days of school until winter break. So Santa is coming early here. So that's what they're waiting for. That's the number they're waiting for. 10 more days. They can do it.
Yeah, I'm sure, man. I mean, it's coming up for them. We've I've been hanging out with the younger crowd, even younger, Tony, the middle schoolers, is who I've been hanging out with. And my kid's playing basketball right now, and it's just been real. It's been fun. It's been fun. It's the first time he's been on a school team. And so far, we're handling business. We're 4-0, man. We'll see what's up. We got a big test next week, though.
Good. Do they play over the winter break, or do they stop for that?
No, they stopped for that. Yeah, it's just I think they
just conditioning, right? Just conditioning.
We'll keep them going. Yeah, exactly. We'll keep it going somehow. Did you guys see the Netflix deal today? Netflix is finally buying WBD.
Somebody just sent that to me. I think Vanetta or somebody just sent that to me. Time Warner. Netflix is no threat to media companies, and now they just Netflix is acquiring Warner Brothers. Like 2 days. One said the headline they're not a threat to us, and then obviously they were talking because no deal gets done in a month or 48 hours or something like that. Next thing, Netflix to acquire Warner Brothers following the separation of Discovery Global for a total enterprising value of $82 billion. I don't know.
Is it 82? Oh, okay.
I don't know. I'm looking, it might be old. I didn't research it. I'm just reading what I have here. So
Netflix is down. Pre-market.
It is down. Yeah, it's down. What's $4 billion between a couple of friends? Look, the interesting thing about it is this. I'm sure Vanetta mentioned this several times in her piece in recent weeks. I did too on This Week in Stocks. That's why it's funny that they were acting like this wasn't going to happen. It seemed like Netflix was the most likely suitor for a while. But dude, here's the crazy thing about it. I mean, we all know Netflix. It's not like Netflix has been around. This thing is something that's new in our lifetime. Sure. You really got to put this in context. Warner Brothers is like 1909. I mean, that this company is from. This is really kind of a new age deal. I mean, this is really kind of a big deal for a lot of people that are not really thinking about it. When you think about this is such a newer company buying this old company with thousands and thousands, probably millions of titles and movies and content and all of that. And this is unusual for Netflix. They usually don't buy companies. They usually create content. As a matter of fact, if you looked at their recent earnings, 63% of their content is stuff that's original titles, honestly, and no one title represents more than 1% of their revenue. So this is really kind of an interesting deal when you look at it. Clearly, shareholders don't like it. I mean, like you just mentioned, Nikki, stock's down $4. It's not really good. I actually just put on a bullish trade in there earlier this week, so it kind of sucks.
Me too. I'm short the 100 strike puts, so I'm with you. I got a cover call now. Isn't there still like an antitrust piece to this, or is that got resolved? Because I know Paramount was like kind of arguing that this was, monopoly type thing, like it's too big. Netflix being too big to take this on as well, they would have too much market share. Is that done with too? Is that like the antitrust part still?
I'm sure. I mean, obviously, every deal is up for regulatory approval. And of course, Paramount is saying that because they wanted to buy Warner Brothers. So of course they were making that argument. I bet it's going to take, we'll see if this actually ends up going through. Right. And I wouldn't be surprised if there's possibly more bids, although I'm not really sure how any of those dudes can outbid Netflix. Netflix is $430 billion in market cap. You figure they're buying let's just call it $80 billion company. I mean, they certainly have enough to absorb it. I'm not sure. I thought I saw maybe they have to do a little, they're not have to, but they're going to do some debt with this deal. I'm not exactly sure how they're funding the deal, but what?
Don't get him started. It's a cat. We'll go with the cat. That's
Nikki asked me if it was a hairless kitty, but it's not, as you could tell.
Yeah,
I didn't really get to see it. No, not now. We're talking about it. You got to pull it back up now. Let's see it.
She'll come back. Come on, get over.
That's your grand cat.
My grand kitty.
Yeah.
And it's so funny because every time I talk to him, he's like, "No more animals. We're never having any more animals. When these two are gone, I'm never getting any more animals. Don't want to clean up poop. Don't want to feed them. Don't want to do any of that stuff again." He loves this cat.
I'm older. I'm different. Hey, listen, let's get back to Netflix and Warner here for a minute. There's no antitrust. What does Time Warner have? I mean, Game of Thrones, it's over. I mean, what's it known for? Friends? I mean, is there any more Big Bang Theory? I mean,
you got
Warner Brothers?
Yeah, you got Batman. You got all those big ones.
Dude. Yeah, they got that.
They got what? What did you say?
Let me pull it up now.
Batman.
Yeah, they own Warner Brothers owns Batman, I believe. Yep.
Yeah, big
and Superman.
Deal. I mean, come on. I mean what's Batman?
That's automatic.
Years old?
That's all. It doesn't matter. That's automatic money, bro. Like in 10 years, they can make a new Batman, and that's easily $1 billion, probably.
Yeah, you can make a new Batman every couple years. I mean,
for sure.
Yeah, Batgirl.
I'm trying to see what else I got. I just saw it earlier. I got it.
Buffy the Vampire Slayer.
Well, you know what's interesting? They mentioned the big things that could potentially be movies. These are easily things that eventually could pretend some big stuff. So they got Harry Potter. I mean, I'm sure you could probably come out with another Harry Potter once upon a time. That means a lot to a lot of people. So let's just call it DC in general, right? That includes Batman, Superman, whatever else.
Yeah,
Marvel, DC Comics. Make a go of it. What makes you think Netflix is going to make a go of it? I mean, I don't see it. Oh, HBO Max too.
Yeah, you get
HBO Max too. Yeah, the whole thing
on HBO.
Yeah,
but see, I'm looking at it from the standpoint of like these are things like, look, I know I'm gonna say this out loud. You're not gonna like it. I'm just talking out loud. A Sopranos movie, right? Like at some point or another, if you want to make a Sopranos movie, you can do that because you own the content. Right. Game of Thrones or whatever. You own the content, so you can create a movie or something. I mean, that's how I look at it. Because you own these things now, and then again, Netflix stuff is Stranger Things, Wednesday, Bridgerton. I mean, and they just still have that on their own. If they want to eventually do like movies or whatever else, they can because they own it, right? It's like, I think that's the interesting thing. Mm-hmm. Some big titles when you think about it.
Yeah, I guess.
Well, we'll see how the options will tell us how likely this is to go through when the market opens. We'll look at those options in Warner Brothers and just see. It'll probably take a couple hours for it to tighten up a little bit, but you'll see if it's likely to happen. You'll see basically all the options marked at basically zero. So
yeah, to your point, I feel like it might not be like that. I feel like there might be a little bit to the upside stuff, right?
Sure.
Because it's been a while since I've seen a deal where everything went to zero immediately. Like in this case, when there were multiple suitors. So, but again, I don't know. I think the only way Netflix loses is if, like you said, if it's ruled that it's a monopoly. Otherwise, they can certainly buy it. Nobody can outbid them, I don't think.
Yeah.
I don't think Paramount can outbid them or whoever the other people are. There's not many of them left. But look, this is the consolidation I think we've been expecting for some time when you talk about streaming stuff, right? It seems like it was bound to come.
They've been talking about this since AOL monopolies. When AOL went into the S&P 500, then AOL went away. I mean, I was an AOL market maker. I'm familiar with it. It was the 2000s, early 2000s. I mean, 1999 to 2000. This is.
But look how big they were. Look how many things they owned.
Yeah. The whole AT&T mergers. Too. I mean, this is all. Let it happen. It doesn't matter.
Didn't AOL eventually spin stuff off, right? I assume. I don't even remember, but you traded it. I know you. They probably spun a bunch of things because they probably owned like back then, man. Right? Like case in point. I know I found this out recently. Six Flags, obviously, and they're having issues as far as going bankrupt or whatever. But that once upon a time was owned by Marriott, like a conglomerate of like a Marriott, AMX, whoever else, like 3 or 4 people. It was so crazy when you look back then that a lot of companies just decided to diversify and do things that they thought made sense. And then eventually they were like, well, this doesn't really fit our portfolio. And now we have companies doing the way they do now, where they really invest in things that they really understand. They don't try to buy. They're not a hotel company trying to buy a amusement park because they figure it's going to work in their portfolio. They don't do that kind of thing anymore. Now it's just more targeted, a lot more focused.
Yep.
And then we end up hearing, oh, it's antitrust because you get too big. Well, what are you supposed to do?
Right. That's right. That's right. Yeah,
the big question is what's the Netflix HBO package going to cost? What do you guys think? Is it going to be the Netflix price? Like, is this does everybody save $15? I think HBO is like 10 or $12, something like that.
Something like that. Yeah.
Does that just get cut and it just gets added to Netflix and you get that for free, or is that
hell no?
Or is Netflix is now like a $40 bundle?
They'll cut it in half. So if it's $12, it'll be only $6 more. So you'll save money initially, and within 2 years, it'll be $112.
Yeah, exactly. It's the Uber model, baby.
Because you don't quit. You don't drop out. And they'll just raise it and raise it and raise it, and then they'll own you. That's it.
Yeah, it'd be back to where we need. But just the last thing here, just to round it out. Yeah, volatility's been kind of quiet. Also, as well, we've seen that come in markedly over the last couple of weeks here, but we're still hanging out in the front month VIX, still a 17 and change, but big difference between Z contract and F contract and VIX right now. So strong contango.
Awesome. Good job out of you. And we should have perfect weather for the Bears-Packer game this weekend. It'll be bear weather. So hopefully they'll pull one out. We're going to take a quick 90-second break. Good work to you, Jamal. We'll take a quick 90-second break and come back. We got the opening bell next. We're back in 90 seconds. Tasty Live. Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with Fast Market. There we go, my son. I was early, you were late. Oh, Lulu, what are you doing there?
I closed out that put. We sold that the other day. I mean, we had a nice little move higher. I think it's got earnings coming up in the middle of next week.
Lulu, I can check that out for you right now. You played it directionally. Stock's up $4.50. So you got direction right, sold puts. Might as well get out of it, right? I mean, who cares about Lulu?
We'll look at it next week.
Earnings December 11th, right after Oracle's.
Yeah. So it took a couple bucks out of that. Oh.
Sweet. Very nice.
Quick one.
Quickie.
Yeah. Let's get to some trade ideas. I need them.
Yes, you do. Yes, you do.
All right. Ooh.
/MCL, which is crude oil. Let's see what they're doing here. They're neutral. They think thinking crude oil is going to stay in a range, but want to potentially catch a spike. I think a spike higher, maybe. Do the bat wings work here? So Adam is asking. He's neutral, doesn't really have a directional bias, so he wants to do what seems to be a bat wing trade, which is a double ratio spread.
So we have an iron condor already, so we're kind of in a similar position.
We agree on the directional bias, right, of it meandering around.
Yeah, the MCL, the options aren't horrible. They're not great. I think, obviously going to CL is a lot bigger. You'd have to do butterflies, broken wing butterflies on both sides. But I mean, I like it. Do you think you get long oil here at 60? It's been meandering at 60.
Yeah, it hasn't. It really is in no man's land when you look at this. I mean, it's right in the middle of its range here, from a tight range from 61 down to around 57 or so.
Yeah, I'm going to stick with what we got. We've got a very similar position. I sold another NASDAQ here.
I see that at 40. And you used the right product this time, so that was good.
I did. It didn't cost me any money on this one.
Good.
My net with my fat finger is going to be a tough. I'm going to have to really.
You're going to have to divorce yourself from that fat finger.
Yeah, I'm going to have to do some good scalping today with the micros to make up for the couple contracts on the NASDAQ.
Yeah,
that's okay though.
You have two micros out there now.
Two.
Or just one. Two. Oh.
Two. Yeah. So MCL, I like the idea. I'm in it already with the crude futures, the big contracts with a kind of neutral iron condor here. So I'm with you. I'm not going to add to the position.
And we would agree with your trade. You can put that type of trade on for sure.
Yes.
Yeah.
I like it, Adam.
Yeah, I get people writing in now that they've done the same mistake as you, Nick. We've all done the same mistake. Trade the big future instead of the small future, future instead of the big future. NASDAQ gets big in a hurry, they said.
It does. And I see some people in the chat talking about it for sure. It happens all the time. And when I do those, I just close out of the position. Like, I've gotten emails where it's like, oh, I did, a $5 wide instead of a $2 wide or a $10. Yeah. Just close the position. It happens from time to time. You lose, sometimes you lose a couple dollars because you got to get out of the position at a worse price. Sometimes you make a couple dollars, but you don't have to sit there and just hold the position because you have it on. Just close it out and move on. And you know what? It's
some good fatherly advice there from a youngin'. I agree with you.
Yes. All right, Josh and Boulder, looking at ETH and IBIT, market overreacted these past month. Fear still here, which is great for premium sellers. IVR looks good, selling the 20 Delta Strangle in January. I like it. If I didn't already have tons of positions on, I'm pretty locked and loaded here in ETH and IBIT. I'm actually kind of neutral with the option positions that I had. I added some call ratio spreads on top of the long stock that I have. So I'm long stock in both these with call ratio spreads wrapped around where we are right here. Actually, this move today kind of helps my option positions, but my heavier delta is just long the stock. So
I'm with you. Higher.
Yeah, I want it higher for sure. But I like it. If you don't have a position on here, we did one in the Johnny Trader account. So we sold a put spread in ETH in the Johnny Trader account. You could definitely, if you can afford the buying power, I think these are certainly interesting here. I say go for it, but I'm already in and I'm pretty set with my position here.
Did you happen to hear my ding before in gold? I closed my option trades today podcast from just like 3 days ago or something like that, Tuesday, I guess.
Very nice.
50% of profit received, credit received. That's all I can do, son.
Some would say you are gifted.
We are not those someones, but sure. All right, so you're going to abstain, Josh, here, but you have similar positions on, correct?
I'm with you, Josh. I have this on. I like it. I think it's if you don't have something on here, definitely worth a look.
Very good. Next one, please. Riot. Ooh, here's a name from the past. Jan 14 puts for $1. They are bullish, so they're selling puts. That would be the way that we would do it. Let's take a look at Riot. IV rank of 28. Okay, and this environment's not great, not bad. Stock has had a rally from 12 to where it is now, around 15 and change. I think it got above 16 for a moment. What do you think about this one?
Yeah, I kind of like this.
Jan 14 puts, that's the 30-ish delta. Here's an example where we talk about, like, do you go 30 delta or 20-ish delta? The 25 delta, the markets are a little bit wide here, right? So you want to kind of go in at your price. Stock's a little bit weaker this morning. Maybe they're going to bid for puts a little bit. If you look at the markets here on the 20-ish delta, you're only getting around 80-ish cents. On the 30-ish delta option, you're going to get more than $1 or so. I would probably go with the 14 puts also. I would probably better the bid. You better the offer you did. You went in at 118.
Yeah, now I'm at 116. I'm in.
Man, oh man, you just got to sit.
I'm 0 for 2. I'm 0 for 2 on trades, although I already have them on. So
you just sometimes you got to sit, son. You got to show a little patience. Let them help you. It's actually fun when you nickel and dime them.
I see it. I want in. I want in. The penny, take it.
Okay.
All right, I'm in. I'm with you.
We agree. Next one, please.
Costco, cautiously bullish. This is Alex in Savannah. Selling an unbalanced iron condor January. You're looking at the 860, 830 put spread and the 960, 980 call spread. So I was actually looking at this the other day. Was this yesterday? The days are blending together.
A lot of bad headlines on Costco. They're really poo-pooing Costco. I think it might catch it's up $8 already. I was gonna say I think it's gonna catch a bid. I haven't looked at it.
Yeah, so I actually put on a put spread yesterday. So I have the 850. I have the 850, 825. I also have a diagonal spread here with some upside to the upside. But the 850, 825, so I'm 25 points wide. You're looking 30 points wide on the put side and then 20 points wide on the call side. I'm going to just add the call spread, and we're going to do this 25 points wide. So I'll just have a neutral delta iron condor, kind of at advantageous prices, given that the stock is up today and I sold the put spread yesterday. So I'm making a couple bucks here. I'm kind of legging into it, but I'm going to leg into the position it's a very similar position. I'm going to do the 975, 1000 strike call spread. I'm looking at that at like, these markets just move.
Now you can sell your NASDAQ where you sold it, even higher than the third time.
Oh, was that a little slight at me?
A little bit, yeah.
I mean, with my scalps, I'm flat here. What I should have done is held the fat finger mistake. That was 100 points.
Yep. Woulda, shoulda, coulda.
Yeah, there you go.
Now you're talking about holding them. Unbelievable.
No, I'm not.
I told everybody not to hold your mistakes. Now you're talking about holding your mistakes. Wow.
I'm playing it to the downside today. I think we get some chop back and forth.
All
right. Costco, the spreads just moved. I'm gonna try and put this in at like $4, and we'll see if we get filled.
Okie dokie.
I don't think we will, but I will put this in at $4 if we get a little bit of a bid here. We'll try this at like 375. I mean, these markets are $2 wide.
Yeah, they're not great.
We'll try this at 375 and sit there. So I'm with you, Alex. I'm going to try and leg into that call side here.
Very nice.
Cool.
Next one, please. QS. I don't know if I've traded QS.
We traded this the other week. I don't know if it was the same person, but they were looking at somebody was looking at puts here. And the last time I traded this was when it like first SPAC'd in the early 2020 time frame, when you had all these like energy companies, all these crazy, SPACs that came out, and the stock went to like 50, 60, and now it's back down to,
it's in the teens. It's like 12. You traded it back on 11.19, and then you bought them back on 12.02. You sold some puts. You are correct. Good. The 12 puts. So you're probably right where we were back then. When you did this trade.
Okay, so I had the December 12 puts.
You sold originally the December 12 puts. That is correct. If you're looking at the Jan 12 puts in QS. Those are trading for around $1.03 to $1.13. What do you think here? Ivy rank of 38, good-ish. Stocks had a little bit of a rally last, from 11 on to up to 12. I don't know. Seems like a okay play. It is down 17 cents, which is 1%.
All right. Let's sell the 12 strike January puts.
I think you're stuck. I mean, you look at the 11 puts, they're 60.
Yeah.
Now you go in at your price, son.
I did 110.
All right, good job out of you.
I know you got
you just sit. They just sit and say, "Come for me, Johnny."
Yeah, come get me. You can push through that NASDAQ. That's about 20, 30 handles.
Yeah, thank you, Dad, for pointing that out for me. I really appreciate it. You're welcome, son.
You were making fun of me. You were like, "Oh, you're gonna
no,
not this, Johnny."
Not that time.
Okay.
I made funny of the other 2 times.
Yeah, that's all right.
Good job out of you.
Next one, please.
Next one, please, is right.
All right, H. Montero, my guy, Smoky McPot, New York. QQQ, Bat Jr. has been doing such a good job. Thank you, brother. I already forgot about that Tim fellow. I like that. Forgot his name, too.
Tim who?
Yeah, who? Anywho, is your Santa hat on? Mine is. After the January 6th, so you're looking January 6th, December, 610, 635, call diagonal spread. Buy them before you miss them.
All right. What does that mean?
Okay, I like this. I kind of have this on already. So I'm long the 600 in January. I'm short maybe 3 of the December 625s. So so you're looking at the 610, 635. So you're in the money. So this is like a poor man's covered call type thing.
Uh-huh.
All right, let's do January. I'll add a little bit here. I'll do the 630. I usually like to go somewhere around the 40 delta. I'll meet you halfway and do kind of like a 43-ish. We'll do the 635 in January, and then I'll sell the December 645. It nets me about 20 deltas. It's a $10 diagonal spread. It kind of plays into what I have here of like neutral, slightly bullish from this point forward, but I'm going to adjust the strikes a little and get in with you, H. Montero.
Okay.
In solidarity. I'm putting it in at 10:05. I'm gonna let that position come to me as well.
See, you're learning, son. You're learning.
Took me 10 years. Finally got it.
Bat the mechanic. Look at you. SPX, another inside day. 8 days out of the last 9. We need a massive move for new highs. Thinking we just range here for now. So they'll talk about range bound. It's just about 9 o'clock. I haven't honestly kind of forgot to look at what's been going on. Even the S&P's expected range is around $23, maybe just a little bit less than that. What do you think about a trade in SPX?
Oh, shoot. I just missed my NASDAQ. Got up to 25.8. What do you think in SPX? What are you thinking?
I just spoke to my putty cat here. She doesn't hate it.
Okay.
Doesn't hate it.
What do you think about leaning slightly? That's the Qs.
Nice. Look at that. Filled at your price.
Yeah. What do you think about leaning slightly short delta? We'll go to both the round numbers, 6,900, 6,910. We'll go $10 wide, 68.50, 68.40 on the downside. Trades at like 325, 330.
Sure, it fits your assumption. Go for it.
And we'll do another try and get like $50 out of it.
Sure.
All right, I put it in at 330. We'll see if we get filled. It's got a little bit of short delta. It actually doesn't really have much short delta. There's a little bit
5 short delta, 4 or 5 short delta, but it really if you put this on equal distance, it'll probably have 2-3 short deltas, so it doesn't really have that much short delta. And
I'm going to try it at 325 and see if we get filled.
Yeah. Okay. Sounds good.
All right. QS.
Look at you getting filled at your price. You know, when a product is going in the opposite direction that you want it to go in, but you're looking.
SPX 325.
Dude, getting filled there, 325. I mean, when the product's going the opposite direction, you're going at your price, son.
Yeah. It's good. I like it.
All right. Beautiful.
Good. Learning. I'm finally learning.
We're in.
All right, we're in.
Beautiful.
Netflix. Okay.
Netflix.
So Jeff in Miami, how about a 96 115 strangle in January? I kind of like this. I have stock's up 102 now.
Wow.
All right, so I'm short the 100 strike puts already. I sold those at $3. They're only at 320-ish right now.
Mm-hmm.
You know, stock has been.
Netflix traded down at $97, 97 and 97.74, up to almost 103 where it is right now. That's near its highs of the day, down 50 cents.
I like this, Jeff.
So I guess they like the deal now. They hated the deal before.
Maybe
like it now.
96 115.
Okay.
I put it at 314. We'll sit there for a second.
Mm-hmm.
I put another NASDAQ on. All right, so I'm in on that Netflix straight. Did I get filled on that? Let me get filled on that. Can we give up the penny there? Are you okay with that?
Sure.
Venmo? You want me to?
Sure. Go ahead.
All right, I'm gonna try 312 and see if we get filled here.
Okay.
We'll let that sit. It was marked around there just a moment ago. It's got a little bit of long delta here, so with the stock rallying, you need kind of a down tick here to get filled on this one.
Uh-huh.
Cool. Thank you, Jeff. I like it. Ivy rank at 24. I mean, it's one of the higher ones on the board.
Yep. Totally agree.
Next one, please. Oh, now you got Bitcoin rallying. That's what's happening.
That's the last part of the equation for today. I mean, you got gold rallying, you got oil up small, you got the Nasdaq up large relative to the rest of the market.
Yeah, one of these is lying. It's either the Nasdaq or Bitcoin. And Bitcoin has been the one that hasn't really lied.
That's true.
HIMS. Okay. So we actually I closed out of a position in HIMS. I think it was another fast market or what's your assumption trade from a couple weeks back. We sold the put, bought the call spread. So it was a Super Bowl, AKA the stupid. So we
not because it's bullish or bearish, just because it's all one directional.
Yes, exactly. It's double directional because you're selling the put and then you're buying the call spread. So both of them lose to the downside. Which
has been a beautiful play in SPY.
It has been. It's worked for quite some time. But we just closed that out yesterday. I scalped out of the puts and then the stock was randomly up like $2 or $3 throughout the rest of the day. I closed out the call spread. So I don't currently have a position on in HIMS. So Jack is looking at buying the February at the money call, selling the January 47 call. Let's take a look at this. February, January. So you got a lot of duration here. So you're looking at like the 40 call is at the money in February. And then you go to January, you sell the 47. Do they have a price on this? No, they didn't give us a price. Trades at like
AMD, you're buying back some putties.
Yeah. Okay, so this is kind of like a poor man's cover call / diagonal spread. There's a lot of time on this trade, so you're going to be holding this for a couple weeks, if not the next 30 or 40 days.
Sure.
I don't hate it. It's a small trade. I'm going to try at 405, a couple pennies off the mid price here, and see if we get filled there. So I'm gonna keep that one in for a moment and see if we get filled.
Okie dokie.
Cool. E-mini is up 34. NASDAQ up 200.
Unbelievable.
A little bit of a rally here. 6,900 on the dot.
Yeah, 6,900 on the even the S&Ps, and flirting with 26,000, about 170 handles away from that. No reversal Friday. Everybody knows that.
Not yet. Not yet. You still got time.
Next one, please. Last one. Take him out of his misery here.
Oh God, Natty Gas.
Well, if you want to be bearish, I hope you waited to see what we would say. And we would say that today is a much better day to put on any type of trade with short delta than yesterday. You can see this big move in Nat Gas. It's almost a 6% move in Nat Gas. I'm going to abstain from this. If you wanted to go to UNG, it's a $16 product. You could try and trade that. You can go out to January. I think you just, if you're going to be bearish, I think you just buy a put spread or something like that. There's really no premium to sell here, even though the IV rank is 63. Expected move is around $2.50, a little bit more. I think you just, if you want to do something in Nat Gas, you buy a put spread in UNG. What do you think?
I was going to look at like a call spread on the upside.
You want to buy a call spread?
No, selling a call spread.
Oh, I think
trading it bearish. You don't like that?
Well, what?
I was looking at like
futures options.
Yeah, I was looking at like the 596 in December. Okay. Just like just something to have on so that I can watch Natty Gas, because I don't trade a lot of Natty Gas. It's a one-off trade. It's obviously had a huge move. Keep it small and just kind of put a little engagement trade on. Trades at $200.
Okay. I don't hate it.
Dude.
No, I don't hate it. I don't hate it.
We'll put it in at 2 and see if we get filled. These markets are like 5-6 ticks wide. If you get a little bit of a continuation to the upside here, you might get filled on this. So I'll put it in. I'll entertain this one. I think the put spread makes sense too. If you want to, buy the put spread and not have that upside risk, you do it right at the money. You were probably looking at this the other day when it was trading, around this price. So it's up another 6% today. So you got a better entry if you waited.
Very nice. Good job out of you. How many we get there? Do we have a little list there? I know we've got some honorable mentions in there too, right?
Yes.
Look, if they say you're almost 10 for 10, and Nat Gas, we got something working, that's for sure. But I think you did all the rest, correct?
Yeah, I didn't get filled in Costco, even though its stock is up. So you got volatility coming in there.
Yeah, and Costco markets are a little less than desirable.
Yeah, I'm going to leave that one in, but I'm with you there. But yeah, we got pretty much everything else on. Do we have any other working orders? The Netflix strangle is moving too. I'm going to move that down to 310.
Okie dokie.
Yeah, Netflix now up on the day.
Unbelievable. Isn't that crazy? Like, announce a deal, it goes lower, and the stock goes higher or unchanged pretty much. OKLO is down $6.50 too. So everything catching a small little bit here.
Yeah.
Cool. All right, my son, we're going to take a quick 90-second break. Great job out of you. We're going to take a quick 90-second break. We'll take a quick look at the market before we do that. Even the S&P is trading near their highs now, up 32. We traded over 69. We're just under 69 at 68.99, up 32 handles or more. NASDAQ up 200 and change. That's your lead in the clubhouse.
Natty Gas.
Oh, Natty Gas. Okay, beautiful. So you did all 10 now.
Yeah.
Very nice. NASDAQ up 212, Russell up 2, Russell the weakest of the group, obviously. Dow up 217, volatility in by 25 cents, anemic at 1730. Bonds are down 7 ticks back near their lows, 115.26. Bitcoin trying to catch a bid over 91,000, 91.3, not near its highs of 93,000, about $1,500 to go from there. Ethereum almost unchanged, down 4. Ethereum fearing better than Bitcoin right now. Oil up 38 cents. Gold up $26. Been catching a little bit of a bid all day long. Silver's definitely catching a bid, up almost 3%, 2.75%. That's moved about a 0.5 percentage point against you now, being long gold 2 times, short 1 silver. Net gas is up 30 cents. And that's all I got on the future side. On the upside here, what's bringing us to the promised land? App 11 up 15. ADBE been strong all day, up 14. CRM up around 10. AVGO up around 10. Crowd up around 9 and change, and your Costco up 8 and change. On the downside, let's take a look at that real quick, and then we'll go. OKLO down almost $7. DocuSound down 4 and change. Hood down 4 and change with crypto lower. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. Back in 90 seconds, Tasty Live. Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with this market measure. Let's take a quick look at the market. Really not too much happened over that short little break, but we are still up 34 handles. What would appear to be pretty close to all-time highs here. I know closing highs are closer to 69 and change. We're right there at 69.02. NASDAQ up 232, further off of its all-time highs of above 26,000. Russell only up $2.60, but you can see here the Russell has really taken the market on its back this week and had a much larger rally relative to everything else. Dow up 216, volatility in by 20 cents at 17.35, and bonds are down 6 ticks. Nat gas still rallying up 34 cents. You can see here at the high end of its range. That's all I got for you right now. We've got a market measure for you.
Yeah, they are absolutely killing volatility. I mean, we put a bunch of those orders in the morning, and we've had a little bit of a bounce in the market, obviously, but a lot of those puts that we sold in the last couple days came in 20 to 50% already.
Right.
And we've talked about that before of just, that's way ahead of the decay curve that you can expect. I mean, you usually expect to get, 20% over a week or 2 weeks would be, normal. 2 weeks probably be like your normal range. You're getting it in 2 days. I mean, that's
correct. You're 100% correct.
It's good, but the caveat is that once you close those, now you got no.
Now what do you do? It's good for existing.
Now what do you do? Yeah.
Now what do you do? Right.
Exactly.
Yeah.
Anyway, let's get into it. So we got a market measure here. Why the same premium doesn't mean the same risk. So this is sponsored by the SIBO, of course, and is a follow-up to what we talked about yesterday.
Yep.
So let's do it. So yesterday we discussed how much premium we receive on average relative to the stock price. So, and we looked at kind of how you can determine that. So we looked at basically premium over the stock price, or the stock price over premium, I should say, and how much additional premium we receive when we sell in different periods of volatility and how often those occur. There's the cat again. There we go. And so really what
every home should have a little bit of
don't go there. Don't go there. So yesterday's segment was basically, the takeaways and the thought process there was that, periods of very high volatility don't come very often. You kind of have to have a range of volatility, in that 30 to 60 IV rank range being kind of the spot that's kind of the nirvana spot. You don't want volatility too low, too high. You don't want it too low. You want it just right. So that 30 to 60 range kind of being the just right range. So here we're going to look at the difference between a 16 delta strangle and a short put where the same premium is being sold. So a lot of questions we get around premium are like, should I sell the same premium option? Should I look for the same amount on an iron condor in stock XYZ versus another one? That's kind of where we're going here with looking at the premium itself, the same amount of premium.
Okie dokie.
So what we're looking at here is in the 30 to 60 day time window. The put that has the same premium as the 16 delta strangle, and that puts you at roughly the 25 to 30 delta put. So what that means is if you're looking at just doing one side, so you want to sell the put, you're going to sell about the same amount of premium as you would be selling the one standard deviation strangle in SPY. And so it makes sense because when you add up the deltas of a 16 delta put, 16 delta call, you have 30 total deltas there. They offset each other because they're on different sides, but it makes sense that you'd have kind of a similar amount of value in those two options. So the combined credit of the 16 delta put and the 16 delta call is approximately equal to selling a single put at a 25 to 30 delta. That's kind of your premium range where they're equal. So we're going to take a look at those two trades here.
Okie dokie.
Do I scoopy one of those MNQs?
This is your party. Sold them at 57. They're trading around 40.
I just had them at 37. All right, we're gonna hold.
Put a bid
in. Okay, so SPY 45 days, and we're doing this from 2020 to 2025. So that's our study. We're looking at the 16 delta strangle, the 25 delta put. So this is roughly the same amount of premium. And we're going to manage these trades at 21 days. We recorded the average P&L, the average standard deviation with standard deviation of risk, our CVAR, and P&L for both the strategies. What do you think is going to work best in this time frame?
And it's a typical time frame for us, right? We always look at this 45-day time frame, 16 delta strangle.
No, I mean from 2020 to 2025.
Right. I mean, the one that has the more delta to it is the one that's going to more bullish delta to it is gonna be the one that works, I would imagine. Right.
Yeah. Well, it's been a mostly up market, so that'll obviously influence it too. But I think we'll see kind of a mixed bag here as there always is. Next slide here. So splitting the premium between the put and the call actually tightens the risk profile. Obviously, you have, this goes to our guy AZ, who emails us all the time about one standard deviation representing both sides. So when we say one standard deviation put, we look at it from a delta perspective, but from a probability perspective, if you move it to the 30 delta, that actually gives you that's the same probability. It's a 70% probability of profit. So anyway, so looking at these, splitting the premium between the put and the call actually tightens the risk profile because you have risk on the upside. Even when premium is the same, the 25 delta put offers 75% higher median profit. And that's because we've had kind of the data set here of the last 5 years has been mostly bullish, 8% higher win rate and 22% better profit factor, but at a cost of 34% higher volatility. This should not be a shock to you. When you are only trading on one side of the market, your volatility at any point is going to be way wider because you don't have those occurrences where market goes down and you have value that comes out of your calls. You're just on the long side here. So you have that kind of worse tail risk, and that's also because your put is closer at the money. So you have 41% worse tail risk and a 14% larger worst case loss compared to the 16 delta strangle. So it's a double-edged sword, right? I mean, you're going to make more on the moves up. And it has been a upside market. The market has gone up. But when you have those moves to the downside, you're going to also have bigger tail risk. That just comes with being directional versus non-directional. And we're just looking at Coinbase.
Coinbase, that's correct.
You sold that for $7. What? 35 minutes ago?
Yeah, when we did the segment, nice little scalpy out of you.
Yeah, I just put that in at 6 and didn't think we would get it, but so ultimately, we're looking at one position set, and what this should tell you is that you need to diversify not only strategy but directional assumptions across your portfolio, because you don't want your whole portfolio to just be short puts. You want to have that two-sided trade and limit some of that tail risk that you have here.
Very good. Even the S&Ps are still up 35. NASDAQ still up 228. Hasn't moved that much.
Where's our SPX at?
Oh, your SPX spread's got to be a debacle. Let's take a look at that for you.
No, we're right there. SPX, we're still out of
430. You're out of buck.
430.
Mm-hmm.
I figured maybe you get a little bit of a vol crush here. I mean, because you got volatility down 20.
Yeah, but you got to define risk trade. You're in it for the duration now.
Yeah. In market downturns, the story becomes even more convincing. We computed the average results for these major downturns. And so we're looking at from February to March of 2020, that was kind of the COVID craziness. And then from January to October of 2022, and then the major and secondary drawdowns. So like these are some of the kind of lesser moves to the downside that we had as well throughout this 5-year period to kind of look at those stats as well. So getting on to the next slide here, the difference becomes even more clear in the severe market conditions. With similar initial credits, the 25 delta put delivers a 25 or a 26% higher median profit, but it also comes with much more P&L volatility. You have 34% more volatility and 34% worse tail risk and a 14% larger max loss. So, again, we're cherry picking these stats, but we're showing you that it's not always, roses, right? You sell the puts and it's great, but you have to be able to, and this comes with sizing and managing winning trades and all that good stuff. You have to be able to withstand when things don't go your way. I mean, it has been mostly free money to sell SPX 0-day put spreads, but occasionally you're going to take that max loss and you're going to have those sort of drawdowns. So you can see here, you have much wider CVAR and much wider peak to trough P&L when you're just doing one side of the trade. The 16 delta strangle, and this has the same amount of premium, holds up far better under stress, posting a 4-point higher win rate, a 23% stronger profit factor, and reduced risk by 25%. That's not a shock because you're selling some short delta, and we're looking at downside moves here. So even though the market has gone mostly up, the strangle has still been.
We're at all-time highs. Yeah, sure, it's gone mostly up, right?
Yes. Well, over this 5-year period,
right,
mostly up. Overall, I think what this tells you is that you need to, you can't just be on one side of the market.
This is true.
So last slide here. In the long run, it generally does not pay to replace the call. So I scalped out of one of the micros there at 30.
Nice.
Yeah, so it got me a couple bucks back.
Mm-hmm.
Even with the same starting credit, short puts consistently show higher volatility, worse tail risk, and larger max loss than comparable strangles of the same initial premium. And we're just looking at the market as a whole, SPY here. That's our study here. The market in market downturns, the difference becomes even more pronounced. Short puts can carry 30 to 40% more volatility and worse tails than the strangles, the further out of the money strangles for the same amount of premium. So from a risk perspective, this kind of answers the question of like, what's more risky, the 30 delta put or the 16 delta strangle? Most people think because you have the upside risk, the strangle is more risky. It really is the downside risk of just the put and not having that short delta that is the higher risk here. So overall, both have worked over the last 5 years, but in terms of tail risk, you have a little bit more with just trading one side, which shouldn't be a shock to you.
Very good. Great job out of you. Great job by the team outlining that. Nice being nimble on your futures here and not getting too stubborn too. Good job on you in closing a bunch of trades. I mean, you already made, 30 trades today. So we had a busy day on what seems like a really nothing one-sided move in the market. Yeah.
Bless you.
Thank you. We got something we haven't done in a long time. We got phone lines open, 855-238-2789 or 855-BE-TASTY.
You can chat them in on the YouTube chat too. I'll be watching that as well.
Yes, please. We are YouTube chat friendly now.
Yes, we are.
The prior administration is gone, which did not allow us to engage with the YouTube chat. Now we are engaged with it. But the number will be below in a minute, 855-238-2789 or 855-BE-TASTY. Give us a buzz. I do have to do a little public service announcement for our friend Dr. Jim. The last live show of the year, if we could put that up, is in Tampa. Thank you so much, everybody. Options Crash Course Live with Dr. Jim. He's at the theater at Amateur Works, believe it or not. Tampa, December 7th at 5 p.m. Show starts at 6. Dr. Jim is very generous with his time. There an hour before, pretty much an hour after. We'd love to see you. Seats are available. Please sign up at tastylive.com/events. That's this weekend. Doors open at 5 in Tampa. So please come out. 855-238-2789 or 855-BE-TASTY. We're going to come back with Q, your phone calls, and maybe even a little YouTube chat. Immediately found these messages. Let's Tasty Live.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Why do you want high Ivy rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in-the-money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk.
What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number, and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
What's going on, everybody? Welcome to Option Trading Concepts Live. I'm Jamal Chandler, joined by Thomas Westwater, pulling double duty this week. I can't call you Tommy Tuesday today.
No, Tommy Friday, but, you know, it's all right. It doesn't ring, but we'll take it, you know.
Yeah, for sure. Of course, Trader Mikey B has been out all week. He'll be back next week. And I don't think he's missed a whole lot, honestly. It's been somewhat quiet as this week as I've looked at sort of the ranges in the market this week. And it's we really haven't moved a whole lot. When I just look at intraday ranges over the last couple of days, I mean, so far about 33 points, 39 points the day before, 51 on Wednesday, which is, I guess, a little something. But most of these are basically under what we've seen for daily ranges in recent times. It doesn't matter if you look at average true range or if you look at average daily range. Most of these are basically inside of those. Average true range, 9-day period, 73 points, 14-day, 77 points, and 20-day, 77 points. So, yeah, well under the average range here. And things have been quiet. And it creates an opportunity to sort of, I think, risk manage, look around, see what you're doing in different areas, see if you want to change something up. That's kind of how I've done the week. I've tried not to get too carried away. How about you?
Yeah, I mean, pretty much the same. When it's quiet, when it's slow like this, you can take a step back, think about things more, not move so hastily. Yeah, I mean, a little bit upside, looking at a positive close on the week for the equities. We got the PCE numbers out this morning, a little encouraging and locked in. These bets for the rate cut next week, I mean, that was already a very high chance. So it's not
I didn't really even see it.
Yeah, it came in a little under year over year, but in line for month over month. So nothing to spook the market there. We got the Michigan consumer sentiment numbers as well. Sentiment's doing a little better. We got an investor survey from AAII. I'm not sure what the acronym stands for. Traders are.
Glad you said that because neither am I.
Yeah, no, it's the American Association of Individual Investors. They do a monthly investor sentiment survey. We're less bearish than last week, more bullish than last week. The most bullish we've been since at least the early November. So, I think people are gearing up for an end of year rally.
It does kind of feel that way. Again, a couple of weeks ago was, I think, the scariest we had seen probably since, I think it was a couple of, I can't remember if it was like sometime in October. But we've had these dips, is my point. We've had these dips at times throughout the year. Most of the time they've gotten bought, which, honestly makes for a really good year because you get the two-sided action. And I just think it's been a great year for trading. It's probably been a little bit hard for investing at times, I think, for some people. So I can guarantee, I know how markets are and I know how people are. March and April, I bet a lot of people got out. And I bet they weren't sure until maybe May. And then I think you could see the piling back in that happened throughout the summer months. And, there's some people who probably still kind of stayed out and then finally got on later. And I think that's what's led to some of these sort of squeezes higher at time where people like, markets are getting a little carried away. But it's just been the way that capital has been infused to the market, it would seem to me. And so, and overall, though, if you've been trading in and out of the market, I think you've done a really good job and you've had plenty of opportunities to make some pretty good money this year. So I think it's been awesome, man. It's been, as we wind down the year here, like with a couple of weeks left, I think it's been a really good year. And, we always try to predict like what the next year is going to bring us. Nobody knows, man. I don't pay much attention to these analysts, but I know how analysts work. And I'm pretty sure most of them are putting out their numbers for the S&P 500 next year, like 7,500 or 8,000, whatever that may be. Who the heck knows, man? We like to have fun with it. And we used to do that sort of promotion where people could guess the market. I don't know if we're going to end up doing that or not at some point, but it's always an interesting exercise, but nobody really knows. That's the thing, right? But I really wonder, like, what are the themes that are going to carry over for next year? Is it going to be more of the tariff stuff? Is AI still going to be as big or even bigger in 2026? These are the things that I think we start thinking about now, but it's a fun exercise. But who the heck knows what it's going to be? Is it going to be utilities year? Oh my God, that'd be crazy, Thomas. Like, seriously, utilities? Who knows?
Yeah, end of year targets, they're always fun. I don't really trade off of it, but you're right, they are fun. But your outlook on the market is only as good as it is, the last day, or only as good as it is today. It could change day to day, change week to week, but you got to trade what's in front of you, or at least I do that. And it's good to have a long-term thesis on the market. And if you're really confident, play it that way. If things pull back, you buy the dip. If, you have a short, long-term outlook, you sell the rips and things like that. But next year, I think a lot of it's going to be around the Fed with the new chair, Kevin Hassett, or so they say that's going to be him. And, I think it'll be interesting because they have to go by the data, but they also have to. He's going to have to appease Trump to a certain degree. That's what it looks like. Just the way it looks right now. So I don't know if the market. The bond market didn't really react too well to the announcement when it came out this week, but that's just a short-term reaction. It doesn't really tell us too much if that's going to continue. So we'll have to see. There's going to be a lot of interesting things happening next year. I think we won't be bored.
No, definitely not. I can definitely say that going back to the previous, the first Trump administration and this one too, the stock market is never boring when he's in the White House. There's no doubt about that. Folks, if you're watching the show, you can check us out on YouTube. Obviously, we're streaming there at the Tasty Live page. jump right in. You can ask questions. Of course, the chat should always be on fire, as it usually is. Let's pull up the platform. Let's take a look around at what's going on here today in markets. As of right now, markets are pulling back. As you mentioned, Thomas, the PCE number came out this morning, and we actually got a little bit of a bump on that. Markets jumped a little bit and then calmed down some here. And more recently, we'll see what we end up getting here. S&P futures up 11 at 68.75. I'm keeping an eye on SPX. I have a downside Delta Buster trade. I talked about this over the last couple of days. This was literally just something for fun, as I have a bunch of upsides of these. And I wanted to see if in the near term we would pull back this week as a result of the previous week, where we basically just drifted higher. But no, basically markets tried to go at least a little bit higher each day. Like we said, it wasn't really a huge move on intraday basis, but markets essentially is looking at finishing the week positive here. We'll see if that holds. NASDAQ above 25.7. The Russell 2000 is pretty decent mover on the week, actually, right now at above 25K, which is not it's not all-time highs, but certainly not too far away, about 40 points away now. One of the bigger moves on the week has been volatility, of course. December VIX at 1750. That's almost $2 lower than January VIX. Pretty big contango. When you see volatility falling here across the board, you see VIX at 1590. You mentioned the rally. I mean, do you think that this whole situation can grow legs, a little more deviation between SPX going higher and VIX going lower? What do you think?
Yeah, I mean, if I had to make a call right now, I'd say that's probably the way we're going to go for the next few weeks, because, the Fed meeting next week, it's a locked-in rate cut. Will Powell say anything to give the market jitters? I don't think there's too much he can say, right? The labor market data that we have had, it's been, weekly jobless claims has been good. The ADP number's a little weak, but I don't think that's really, Powell doesn't really, and the Fed, they concentrate a lot more on government data than these ADP numbers. Inflation, this morning, it looks like it's headed in the right direction still. So, I think they're going to leave everything. They're not going to, shake everything up, I don't think. I don't think it's going to be a huge consequence to the market. So really, I mean, it leaves us with a clear runway into the end of the year. And seasonality in December, people talk about the Santa Claus rally. I don't know. I mean, also technically, I think it's a good time to get positioned a little bit long here. I've been doing some exposure in single equity names on the long side, NVIDIA, Cameco, and then I have an MES long on as well, a call spread. So I'm positioned for the market to rally. I don't think we necessarily get a face ripper or anything, but an orderly incline into the next couple weeks.
I hear you, man. I mean, look, when I see this type of chart, and again, this is sort of an indicative of a lot of the type of patterns we've seen throughout the year. You saw it here. Right. Took a lot longer, obviously, because it was just such a slow drawdown at first as far as markets dropping. They couldn't believe in the idea of the tariffs. And eventually, when they really felt like it was going to be a huge problem right around April, once we had Liberation Day, which happened right there, April 7th or whatever, April 4th, April 7th. And it took a while to climb out of the hole, but once it did, there you go. You had a dip and it was bought. And then a similar situation here in June, and another situation here in August, and another situation here in October. That's kind of been the year. And we just did it again more recently in November. I will say, when we started the fall here in October, the end of October, we kind of did this part, up to here, doing this drop from the end of October through the beginning of November, and then middle of November, it did kind of look like this. I mean, it did. This is a bigger version, but it looks similar to the February drawdown, and then a little bit of jump up in March, but then couldn't sustain it. And so it did feel like we could have a problem, right? Around the middle of November, around expiration. But lo and behold, I really do think the week of Thanksgiving kind of saved us. I mean, I really do. I think it just ended up being a There was less news, there was less trading activity, there was less, people on the desk, and there was less talk of there was less, I guess, buildup around the potentially problems with AI, whatever was going on at the time, and the sentiment. Same thing with the Bitcoin sentiment to some degree, although that seems to still be around, but somehow it was a crisis averted. And it does, like when I see this chart pattern, I think higher prices, even though I will say those two narratives that I mentioned that was drawing down the market haven't fully gone away yet, but they've just kind of gotten swept under the rug to some degree. The AI part for sure, Bitcoin not so much. We'll see what ends up happening. But I say all that because, I feel like I want to be positioned higher. It's for that reason. I still have, like longs and you mentioned equity names. That's kind of been my thing too. Microsoft, the main one is this, upside Delta Buster trade in Microsoft. I got the same thing on in Tesla. I got a similar thing on in Meta, and that's kind of been my plays. And most of them are January or February. I don't really feel the need to take them off, right? I just kind of want to see these through at least to the end of the year. Prior to January expiration, I got it in SPYs. They're close to the upside. I got it in Qs, right? And so as a result, that's why I was like, okay, I got all these upside. I don't really feel like taking them off. They're January, February. Let's just see what happens this week. And if we'll pull back, well, as you can see, we never really pulled back. As a matter of fact, we've just still kind of drifted higher. Maybe I should do the same thing for next Friday. I'm not really sure yet. Maybe that's what I'll probably do by the end of the day. I think, and again, I took a credit to put this trade on, but if we pull back once again or we go back to flat at some point, I might just close this out and do one for next Friday as well, because why not? I certainly don't lose if we continue to go higher. That certainly helps me out. And it's just nice to have something going right on a day where potentially we're down 40 to 50 handles. It's always nice to have at least one of those things going on.
Yeah, and if we look at the RSP, the equal weighted index for the S&P 500, intraday we were at, fresh highs there. So the market going up, more relative to the Mag 7, what's been carrying us for a lot of the year. It's showing some increased breadth in the market. That's usually seen as, being healthy when there is more dispersion in capital going across the market. For years, it's been an argument that, a handful of tech names are driving the bulk of this rally. And for a long time, you've heard investors say they want the bullishness to spread out for, it to be more equally weighted. And that's what we're seeing right now. So, one thing is good is the Mag 7 and these chip stocks, they're not deteriorating at the same time that the market's going up. So now, the sell-off in these names, it seems to be over. Enthusiasm hasn't come back a great deal in them yet. But, Meta made a good move yesterday. It's up again today. Google continuing to outperform in that group. And, the bank stocks doing very well as well recently. Energy stocks, everything is looking pretty good across the market.
Yeah, that's why I had this metric up here. This is always kind of my look at sentiment to some degree. I mean, it's not some degree. It totally is looking at sentiment. This is the number of S&P 500 stocks above the 50-day moving average. I like looking at this because it gives you an idea of basically where we are. I mean, right now, like it's about 55% above the moving average. When I see that, and I see and just an S&P 500 that is near about 1% away from all-time highs, but not quite there, that kind of gives me an idea of where we are overall. But I will also say, because this is only 55%, to your point, there's been better breadth, but it's still not quite where it could be like it was in October. Like you mentioned, sentiment was a little bit higher in early October, and that's essentially it. That's pretty much the last time we were over 60% in this metric. So it kind of tells you, I mean, again, this is not that different than sort of looking at the S&P 500 chart. We started to wane here. We were down at lows not too long ago, a couple of weeks ago, and then now we're back closer to 55, but not quite touching 60%. Like I said, it's been a while since we've seen that. You can see the times where we were super bullish, again, late August, You could see in July, of course, was one of the last times we were really bullish. So it's kind of, lying in the weeds there, right? Just for the time being, if you will. I know somebody asked me on the chat, somebody asked if we know if there's some big news today, like interest rates or some announcements. Well, anything that you're seeing probably related to bonds to some degree is probably related to PCE today. So that's part of it. I would say, but it is interesting. This is a move, and this is an area that I've kind of identified as to whether or not I want to get long bonds here. This is something Chris and I have been talking about for a while. 115. I was interested. I am interested. I know I said if it broke, I wanted to see if this actually breaks 112 before I really get interested. This being at 115, I don't know, Thomas. I just it's hard for me to just I want to see a real breakdown before I decide to jump in, I guess, if I'm going to see what bonds do, because I just haven't been able to nail that trade for the better part of this year. I don't know if I can pull the trigger on the call spread yet. I don't know.
Yeah,
you got any bond stuff going on?
Yeah, I do. I'm long ZB and ZN. I said if ZB, breaks under 116 around there, 115.5, that I would probably get out. I think that's what I have to do now, because I've had a long call spread on ZB. Although, I'm not sure just yet. I still have 49 days to expiration on it. So, that's plenty of time for us to come back. But now we're breaking into some fresh air here, going back a couple months. And I'm afraid that the sell-off will now, technically it looks like it can intensify. We have a little bit of support maybe from that late September swing low. So, I'm going to have to decide to get in, to stay in or get out of this. I think I'm starting to lean towards getting out.
I can tell. I know how it is, man, where you're like, I don't really feel like it. It's got time to bounce back, but this is not looking. I wish I could help you. Honestly, I'm not sure what to do with this neither. Look, you have a call spread. You're not really that interested in selling it, but you don't like the way the action looks. I don't have anything. I'm not really that interested in buying, but I'm not entirely sure what I want to do. That tells you everything you need to know about where bonds are right now.
Yeah, and I have a ZN
it's not a
position
layup either
too.
way.
Yeah. I have a put spread in ZN 112, 112.5. So it's another position I'm just not happy with the way it's gone this week. But besides for that, bonds have been really the only thorn in my side this week. And, it happened from the Kevin Hassett news. When you're trading things, it's really hard to predict if the administration is going to come out and say something, because it's so hard to account for that when you're planning a trade. I guess these days you have to try to prepare for it in some way, but it's just definitely worked against me. I think I'll take them off and live to fight another day in the bond market.
Yeah, it's that's kind of been my stance. Like, I really want it to be so obvious that I just decide to do it, right? That's really what I've been looking for here. That's why I keep saying if ZN were to break 112, then I'll just jump in without thinking about it, and I'll just deal with the consequences. But that was always my thought process. Like, when it's been hard to get like the serious follow through, right? Like, we get so used to trading like the gold and silver of the world, where breakout happens and you're like, okay, cool, I'm gonna pile in, and then the follow through actually comes, right? It's just so different when it comes to bonds, right? It's more about the news, as you just mentioned, and I just can't rely on that. I just can't predict that. I want stupid traders that just want to jump in momentum style, and then I can just follow along with that. Like, that's actually what I would rather, and that's a whole lot harder to do when you're trading bonds, right? And so that's why I just really wanted some silly levels, and to some degree, I feel like breaking 112 would be somewhat of a silly level to be able to jump in. And until that happens, I'm not going to do it. But look, we got to talk about the other side of the coin. The 10-year on the week, it's made some moves. Matter of fact, over the last couple of weeks, markedly off of 4% since we started December here. Does that strike you as weird as we're heading into potentially more cuts, or do you think there's something else going on here?
No, yeah, it's definitely weird. If you're heading into more cuts, you would expect people to be buying bonds, and then the yields would go lower because you're cutting rates, right? So this, I mean, there's plenty of theories out there on it. Maybe it's the bond market's way of saying that Kevin Hassett isn't necessarily the right pick. You know, maybe it's saying that overall the Federal Reserve is going to be poised to perhaps have to increase rates later next year, 2027. But there's, you know, the divergence in expectations there. And then you look at it, you know, yields going higher and the dollar selling off, right? So it's kind of, you know, it's not as intense to where you say it's a sell America trade. I mean, the move, when you look at the dollar too, it shows me that the market is not too confident in either the Kevin Hassett announcement or something else that's going on right now. Maybe it's this increased, and this has been happening in the background, kind of background noise lately, but the increased view that maybe the tariffs will not be upheld by the Supreme Court as being legal. And you saw earlier this week, Costco, one of the biggest companies yet to sue the Trump administration over these tariffs. So a little pressure building there as well. And I think that's definitely something that would hurt the dollar.
Very good point. Yeah, I mean, the dollar move also, again, it's a little, it just doesn't seem to comport right now. And yeah, that tells you that, again, but when you see these moves in the dollar and the bonds, I can't say that they're wrong, right? Like some other times you could just see certain things like, okay, this is a little overdone, a little bit wrong. When you saw the dollar earlier this year, it seemed like that was a little overdone, a little bit wrong. When you see it over the last couple of days, and there was a little bit of news, it seems like there's news. It seems like there's something that we just haven't figured out yet. So you're right. It is kind of strange to see that action. I see in the chat, I know you mentioned a new Netflix trade. Of course, the news this morning that Netflix is finally buying WBD. I mean, I talked about that a while ago. I talked about that when I was still in engineering trade, honestly. I think it was the biggest layup there was. It was just a question of whether or not this deal will actually get approved. And so far, nobody seems to like the idea of this deal. I already have this trade on. I know somebody mentioned it. I have a trade on. They mentioned the 190 put spread short to buy the 115. I think, was it 130 call spread is what I saw. I imagine you put 110, 125 call spread, a little more in the money. I already have a similar trade on. I love the idea of possibly doing more here, but to be totally honest, the way I'm seeing this thing trade, I'm going to stay away for now. I feel like this could get a little bit hairy, and I feel like we could possibly see Netflix stock lower now. Like usually when you see a deal, if the market already loved the deal, the stock would actually be higher now. But seeing this makes me a little bit nervous, and so I'm not going to add for now. I'm going to wait. I'm going to wait to see if we end up getting down to like 95 to 90, honestly. As much as I don't want to see that, that's what I'm preparing myself for, because it does not seem like the market likes the deal. A lot of people might not personally even like the deal because you already know what's going to happen if the deal is approved. It's just going to be more in higher prices at some point in time on a lot of this content. So I'm going to wait it out a little bit here. I'm not touching it for now.
Yeah, I mean, I really hope Netflix doesn't ruin HBO. You know, Netflix, they are so jumpy on how they start shows and then cancel them and start a show and cancel it. And just when you get into a show on Netflix, they cancel it. And you're like, why do I even watch the show anymore? You're just going to wait until there's 3, 4, 5 seasons and then watch it. But yeah, I mean, it brings up a monopoly concern. I mean, it's the Trump administration seems skeptical towards it right now, so we'll have to see how that goes.
Which is interesting because they're usually pro deals, right? I mean,
yeah, they are. Yeah, I'm not exactly sure what problem they have with this, but that's just a headline I saw this morning. Who knows if it's how much veracity that has? They could just let it go through. I mean, it's really up to them.
Yeah, sometimes when you have a stock split, the stock ends up being a lot more interesting and it trades better. And then you have after the split and it does not. Chipotle is one of them, one of those examples. This so far has been another. This thing was not trading well heading into the split and has not traded well since. And so, yeah, I do already have that short put spread long. Well, let's just call it the Delta Buster trade. I do have one of those on. I totally would be down to add more, honestly, because I added my original one at around 104. But I don't know. After this deal, it certainly kind of muddies the picture a little bit, and I don't know what to think. So I'm gonna wait. If it works out, I mean, it bounces higher. Again, I got the trade on. I'm good. I did it in February on purpose just to kind of have it in the earnings cycle. But I don't know. It's not looking good right now, and I'm not going to add here. I'm going to stay away for the time being. Let's roll over to your good friend Natural Gas. Big move. Did you ever get your put spreads on? This is a huge move we got going on here.
Yeah, this is quite the move. I did close my my NG F6 put spread yesterday. I'm still in a put spread on NG G6, so the next contract. I was 4.4 and 4.1 for the short put spread. I have an order right now to roll the prices up in the same expiration to 4.4, 4.5. So, that would take me to, as it is right now, about 50 cents below where the prices are trading. That's pretty much where I put the original put spread in at, 50 cents below it. You're getting a really good premium here right now in natural gas, like you usually do. But this move is really surprising. I expected a little more strength with the way this triple polar vortex, or whatever they're calling it right now, is coming in and pushing up the heating degree day forecast.
For real? What is this?
Some kind of triple polar vortex. I don't know. Something. All I know is it's really cold out.
Right.
So yeah, this is a face ripper for sure. If you were looking to get into nat gas now, this is where I'd be a little more hesitant. It's already had a big move. At the same time, we are going into levels we haven't traded at in quite a while. And you figure, there was a bunch of people, still in their longs from earlier this year. You could have been long all the way from, the start of the year, went through a lot of volatility, and now you're up on your position. So I don't think people are going to give it up just that easily. But yet again, it's natural gas tomorrow or Monday, who knows? We might see it down 6, 7, 8%. It's not surprising. It does have retracements like that. So I think for me, the short put spread is a good way to play this. You got the volatility there to get the premium. I'm leaving myself with both duration and room on the underside. So I'm going to feel comfortable to stay in this, because even if it does have that, 5, 6, 7% pullback, I have enough duration where my medium-term view on natural gas through December, January, February, I think it's going to be higher. So I'm fine sticking through that volatility.
Yeah, you mentioned it's been a while. It's been since December 26th, the week of December 26, 2022. Last time natural gas was this high. Of course, that was on the way down after the very elevated price that we saw during the real big flare-up of the 2022 Russia-Ukraine war, when it really kicked in. And again, that's been a thing that's gone across a couple of times in history, but the most recent flare-up that we saw, which is still obviously being discussed a whole lot. I saw the volatility today and decided to get in myself. I ended up doing an iron condor. And, for this particular contract, really, it's been a while. It was close to 6 in March. And so that was kind of my starting point here. I was like, okay, how far up can I go? Not that, it can't get there. We know what natural gas can do. But I decided to go with the 620 and the 4,380, doing that iron condor there. And, like I said, I just kind of base it on where this thing on the low side has been around there, just under 4, just a little bit, and as high as, close to 6. So what the heck? Let's just try those areas and let's just see kind of how it goes. I don't mind being short basically the $6, $4 strangle, basically, with 20-cent wide wings. So that's just how we're going to play it.
Yeah, I really like that actually, and I'm debating if I want to add a short call spread to my position up there around 6, because like I said, with this IVR, with this premium, you're getting paid pretty nicely, and I think you pointed out a good technical level to set that at on the upside. Yeah, the nice thing about iron condors on nat gas is you could get so wide and you're still getting paid.
Right.
And you look at things like it's cold right now. It's going to be really cold over the next few days. But you look at like the 2-week out forecast from the National Weather Service, the 8 to 14-day temperature outlook. They're still expecting colder than average temperatures through December 18th, all the way across the entire East Coast, the entire Midwest. That's where a lot of demand is concentrated. So the demand side is looking really good, and this rally is happening despite lower prices in Europe. Feed gas still really high to Europe, but their weather in Europe is really mild right now. So those Dutch TTF futures, those have been falling, and usually we don't get these big rips in U.S. natural gas when European prices are falling so much. So there's a divergence there, but the price action is really being driven by this weather. Longer term, you could say there's some lift from data centers doing some of the work here on those farther out contracts. But really it looks good across the whole entire futures curve.
Yeah, that's a good point, because that was definitely, I think, one of the things that was driving natural gas higher at some point throughout the year. But we haven't heard as much about that, the idea of data centers and how much they're looking around for energy. It's kind of been more the nuclear, right? But I mean, I think natural gas is definitely still a viable source of energy for a lot of these data centers, wouldn't you say?
Yeah, I mean, it's a reliable 24/7 source. You can't go with like wind or solar to really power it, because you get downtime during that. So it has to be nuclear or natural gas. A lot of even I think it's Microsoft that bought a reactor at 3 Mile Island to power data centers. So that's pretty crazy. But natural gas is still a huge component of what's going to be powering data centers. And if data centers are they're expecting their energy costs to go up so much. Maybe they could be trying to hedge some of that in the further out contracts, because naturally, if you're a data center, you're short energy because you're a consumer of it.
Yeah, true that. Sticking in the energy space, I mean, oil is positive on the week here, back to 60. I haven't done anything with this. As volatility has kind of calmed down, and it's on the upside of the range where it's been more recently. I mean, you could make a case for either one here, whether it's going to go higher or lower. But personally, I would guess lower. That's kind of what we've seen more recently. We've seen these falls to 57.80, 57.50, or 58, and then bounces back to 60. That's kind of what we've seen. If you played the recent one, kudos. I think the only reason when it was here that I didn't, basically around that 25th of November, around a little before Thanksgiving, because I had so many other trades on at the time, I didn't want to add anything else to it. But if you did it there, it certainly worked out for you, as clearly we're back to 60 now. You got anything going on in crude?
Yeah, I do. I have a iron condor. It is 40 days out. I'm between 57 and 62.5. So pretty much right in between those. It's looking good so far. I mean, I'm only at 15% of max profit. I expect crude to just kind of, trade in this range, 57 to 62 kind of. We're getting some upside right now because Russia-Ukraine deal, it kind of didn't go as well as some people hoped for. Russia kind of saying they're going to take more time to think about things, essentially. And it's back to the discussions are ongoing right now, but nothing substantive came out of the talks where Jared Kushner and Witkoff went over there.
I mean, those are good areas, man. 62, 57, like you could just see it. I mean, those are good areas to kind of, start a strangle and then decide whether or not you want to have wings on it using the iron condor, whatever you want to do. But as you can see, I mean, I think you're going to win for the most part on those areas until some news comes out, right? Like it's always been the geopolitical news that resets basically where oil is trading. I know somebody in the chat was really annoyed about XLE going Splitsville. I didn't even know this thing split. I haven't traded XLE in so long now. I know it's so annoying when you get a split. I'm not gonna lie. I feel you. It's yeah, I feel you. It's pretty annoying. But XLE, I haven't traded this in quite some time. I just you know, I really didn't trade like futures like that, Thomas, until honestly I got the Tasty, which kind of coincided around the time where, of course, initially we had the small exchange and you could trade a lot of those smaller futures. And then, of course, eventually CME brought out the micros, whether it's, excuse me, MCL or we'll get to gold in a second, but, you know, MGC or, you know, MES and MNQ. And so honestly, I feel like I would imagine that's taken a lot of the wind out of the sails in something like an XLE or, you know, OIH is another name that used to trade heavy back in the day, option wise, and they just don't as much because I think when you can just go straight to the source and get immediate, you know, sort of direct exposure, it's just a whole lot easier to do.
Yeah, I mean, I don't really trade XLE either. I'll look at it, but, you know, for XLE, of course, it is correlated with oil prices because a lot of these companies move on oil prices, but really you're trading corporate profits of energy companies when you're trading XLE. There's some drag in there from that versus the pure exposure to crude oil. So if you're trying to play geopolitical events or something like that, usually you want to be more exposed to crude oil. And if you can't get in the futures market, you know, then you do something like USO or something like that.
I'm at an inflection point here. I wonder if I'm going to make my trade. I don't want to close this yet. So I did this whole thing for $1.50 credit. I just, you know, this is probably stingy, but I don't feel the need to pay $2 to take it off. So I'm just sitting on it. I'm like, whatever. Actually, I want to lose on it, Thomas. I want to lose on it because I got all these upside plays. I don't care if I lose on it. And it's just not letting me lose. And see, I already know what happens. If I take this off, then totally we're going to fall. And I'm going to be annoyed. But whatever. I'm just talking out loud. This is what we go through, folks, when we're trading. These are the type of things. This was going on in our heads. You heard Thomas earlier when we were talking about bonds. This is what happens, okay? I mean, I'm sure you guys deal with it too. I'm not going to do anything. I'm going to wait. I want this thing to be firmly under, what is the low today? Are we sitting around the low? 68.58. That would be fine to me. Not that that's going to help me any. I mean, but at the very least, I don't feel the need to pay money to take this trade off when I put it on for credit. The hell with it. Loose. Please loose. I don't care. Anyway, did I say all that out loud? I'm just, thinking out loud.
Yeah, that's
right. Gold and silver. Gold kind of putting up a doji here on the day. And maybe a little bit over the last couple of days. I don't know about you, but anytime I see multiple dojis in a row, I think a breakout is coming. Obviously, it could happen in either direction. But in this case, looking at this chart, I think gold is due for a little bit of higher prices. Maybe I'm talking my book a little bit, but like I mentioned, I have the GLD crab trade. I know you've been trading gold and silver heavy on the regular too. What are you thinking here with gold and silver's recent moves?
Yeah, I mean, right now I'm out of silver. I am in gold. I'm long a call spread in GC, 53 days out, 4,400, 4,410. Gold unchanged on the day, while silver is up, 2.5% right now. So, yeah, I mean, Chris and I were talking about how to trade the gold-silver ratio earlier, and it's dropped so much. 72, the gold-silver ratio is trading at. Back in May, we were trading above 100. So, if you're long precious metals, if you have a bullish view, but you also want to take into account the gold to silver ratio right now, it probably makes sense to be a little more heavily weighted towards gold than it is to silver if you're assuming that ratio is kind of going to mean revert in some kind of fashion, which it usually does because it is a ratio between two assets. But yeah, I want to get back into silver. It's just that the price action, it's a little elevated right now. We had this big move late last week. This move we've kind of been consolidating a bit more, even though we're getting 2% moves after last week. It doesn't look like, we're breaking into a new range or anything. So 60 really provided a lot of psychological resistance on this last up move. And I think, you get to those big round numbers and you get a lot of people profit taking, and you have to let some consolidation ride out. An IVR of 54.9, oh no, this is somewhere where probably next week I'll look at a trade more closely. And if we're still consolidating sideways, maybe I'll do a put spread around 54 or something and try to just, say this is going to continue to move sideways, or we're going to get an extension higher. Technically, you could say this is like a bull flag pattern. You get the flagpole from last week's move. You get this consolidation, which is the flag. Typically, those are bullish. You get a continuation of the preceding trend. But then again, FOMC next week, you have to take that into account. It could be a volatility event for these metals. But for now, I'm going to stick with my gold longs, and I'm going to hopefully get back long into silver next week, because I've been doing long silver all year. It's worked out time and time again. Nothing in the fundamental outlook for me has really changed too much. So for me, I want to keep doing something that's been working until I'm proven wrong, which usually means one or two wrong trades, usually two, and then I'll take a step back and reassess.
Yeah. Look, I mean, silver could easily be doing, so let's look right here. This is September 26th. Silver could easily be doing something like that, right? Just broke out and could eventually trade sideways. Could be this for a little bit until the next breakout, which again was a while until you got that. I mean, September 26th was your original. October 13th was finally the big move higher. It could easily be doing something like that. You just don't know yet, right? And so I think it's or it could be breaking down up here. Like you said, this is technically a bullish flag, but a couple of days ago it didn't look so great. So it's hard to say. I'm with you. I really haven't pulled the trigger. I haven't really found, I guess, really the strategy that I want to employ, honestly, with silver right now. So I haven't stayed away. With gold, it's been a little bit easier because I feel like, if anything, that breakout could potentially come on the other side of this sort of consolidation that we've seen. You mentioned that ratio. And one thing I always think about this, I don't know if you've ever looked at it this way or anybody talked to you about it, but I had a good friend who really traded a lot of gold and silver, and he always talked about the gold-silver ratio. And as you mentioned, it was above 100 in May. And usually if you look historically, when you've seen it above 100, usually there's some serious political strife going on, or possibly even a war across, the last several hundred years. You'll see that at times. You could arguably say that was the case in May. I mean, basically it was a tariff war, right? And that's exactly why we were above 100. And I think that's what it was flashing. So I think the thing about that ratio is that while it does show one sort of outpacing the other, of course, the biggest thing is kind of like what's going on overall. Is there something major happening as to why gold is trading that much above silver? And right now, I guess it kind of makes sense as the fact that it's not above 100, because there really isn't anything imminent, I should say, that's actually happening across the globe that's creating like a war-like situation. So that being said, I think gold could eventually bounce back, right? I just don't know if the ratio really touches 100 anytime soon, unless there's something seriously happening.
Yeah, 100 would be far off. I'd say, if you take the April high, which we were around 105, somewhere around there, you take the low right now, 72, and you split it in half. Maybe go to, let's see, 33, so 15. If you go around 88, maybe we get a reversion back there in the gold-silver ratio, and then you say, all right, maybe gold and silver is more equalized now, more along terms of their historical norm. So, Yeah, I'm going to probably stick more heavy weighted, even though I will get in on silver. I'll stay more leaning towards gold, at least through the end of this year.
I feel you. Let me see. I'm trying to put this ratio up here. Slash SI. Well, it's showing me there. Yeah, I guess. It's a little off, obviously, with futures being the way it is. This is not 100% right at all, but whatever. You kind of get the idea. Will it show me with GLD? Probably not. I doubt it. Right? SLV. No, it's not showing me the way. Oh, well, yeah, I guess because it's just subtracting. Seriously, I forgot. Can't really do division here. We need to change that unless I'm doing something wrong. But whatever. You guys get the idea. You can pull that gold-silver ratio up anywhere you want. Let's see. I mean, look, this has still been one of the weakest things here. I mean, it was having a pretty decent week until not that long ago, Bitcoin. And it would seem as though we are just, I don't know. It just can't seem to get a lift more recently. And a lot of people are calling for doom. A lot of people are, saying that keep looking at MicroStrategies and waiting to see if they capitulate at some point in time. I mean, it's looking pretty bleak for Bitcoin. And again, it was on the verge of a positive week, and now it's sort of ending the week in an ugly way. You've been trading any Bitcoin? You've been trading any Ether or MicroStrategies, or you've just stayed away?
None. Yeah, I've stayed away. It's just I usually don't trade the cryptos. They're so tradable though that it's tempting sometimes to trade things like IBIT and MSTR. I think this is so Bitcoin is a very, very speculative asset, right? If you're facing a situation where there's, you're coming into the holidays, people are not economically as comfortable as they've been in the past. If you think what's the first thing you probably sell if you need to raise a little bit of capital, it's probably Bitcoin, right? You'd sell Bitcoin and then you'd go to your next speculative asset, maybe stocks. So, if this was continuing, if Bitcoin was continuing to sell off, I'd have a lot more fear that this was going to spill over into the stock market and broader sentiment. But largely it's been contained within crypto itself. I'm not sure what that says about, anything except Bitcoin itself. But I don't know. It is a bottom in. I mean, it's a place where I guess you could take some stabs here. It's still a pretty big product, the Bitcoin futures. Definitely have to do defined risk ways of trading things or, going to the other products. But yeah, it's I think a lot of it's to do with the holidays, people needing some extra cash.
Yeah, like you said, MBT still has a sizable amount. Obviously, IBIT has been one of those things that people have been able to trade a little more recently, has an easier price point. But yeah, this is something to keep an eye on, man, as we round the year out. Looking at Bitcoin, it's just really been weak as of recent. We'll see if this actually finds its way to some type of Santa Claus rally at some point in time. As we wind down the show, we talk about some of your favorite stuff here. I did end up selling what did I sell? I sold the put spread here in corn. It looks like a ball's gone a little bit higher, but that's good. I'm fine with that. You still kind of got a lot going on in these. I know this is kind of where your bread has been buttered more recently.
Yeah, I got a short put spread in corn at 430, 440. So, we're only $4 above that. It's 21 days out, so I have to roll it soon. It was up a lot more for me a couple weeks ago, but that's the only thing I'm in right now. Actually, I got a wheat position here. I thought I took that off the other day. Wheat, I'm 21 days out as well, 510, 520 put spread. This is doing better, of course, because we're $16 above my short put. So I will also probably just roll duration out on that and keep the same. Actually, the volatility is so low now that I might just close that and come back if we get.
Yeah, it's come in a little bit.
Soybeans, anything?
Corn is really the only thing that has volatility in it right now.
Yeah, totally agree.
Yeah. Soybeans, it's all right with 27 IVR. I'm going to stay away from soybeans right now. I think if you're trading anything, it's do corn, so.
Yeah, soybeans is one of those where, again, there's been a lot of discussion throughout the year, obviously with U.S. and China. And so this is one that eventually could see some volatility again, because I just don't feel like that thing is fully over. So like you, I'm waiting. If something else happens in here, maybe I jump in. But outside of that, nothing. I know somebody asked me about my not gas position. So I did push that. Hopefully we're not having any issues with, let's see. Nothing's showing up. So I don't know. Maybe there is possibly some issues going on with stuff. I'll have to check and see later, see what the deal is. But I definitely pushed it earlier. I'm not sure. Let's reset. Yeah, should be in there. Did the iron counter this morning, as you can see. So should show up. Did that for 73 cents, but for some reason it doesn't show up. Just trust me, I did the trade this morning. And as you can see, it's the $4.380, $6.620 iron condor there. So that's kind of what we did. But yeah, man, I don't know. As the week ends here, like I said, about the only thing I got going on today, I might end up trading out of this, probably close for, if I can, close the trade. If not, I'm just going to let it ride to the end of the day, but I could end up putting on another one of these for the next week. Cause as I've said, I got a lot of long deltas and, well, not a lot of long deltas, but I have a lot of different trades that are long deltas, if you will. Like I've showed the Tesla, the SPY, the Qs, NVIDIA is also one of them. MicroStrategies is one of my plays. I think that's an interesting trade overall. And Microsoft and Meta and Palantir. And so I certainly got long deltas to go. I'm just going to try maybe to find a short-term, short delta trade, but that's kind of how I'm rounding things out. I don't know about you, Thomas, but that's kind of how I'm doing. I'm not going to really do much outside of maybe a little SPX trade toward the end of the day.
Yeah, pretty much the same here. I'm going to, do some rolls that I have to this afternoon before the week closes out, and that's about all.
I hear you, man. Well, look, thanks for joining the show 2 times this week. It was good to see you. Good to talk to you. Folks, thanks for watching the show. We really appreciate it. You can always reach out to us at Twitter at any given time. I'm at Jamal Chandler. Thomas is at FX Westwater. And Mike is at Trader Mikey B. He'll be back next week. Thanks for watching the show. And there's more Tasty Live content to come. We'll see you soon.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Three, two, one.
What is going on, everybody? Welcome back to another segment. Today's Friday. We got a lot of market action this week, a lot of to unpack, some news to touch up on before we get out to the weekend. But before we do that, Gus, my brother, how we doing today? Hope everybody's doing well.
Doing good. Yeah, we got juked out on the intro there.
Just a little bit. It's because I had seen my face. I was like, oh.
No,
but
totally
yeah, got me
fair.
with the pump
I'm doing
fake a
well.
little bit,
Yeah, I'm doing well. Apart from my apartment complex having some kind of issues with my renewal, I don't know what's going on. I'm have to make a always exciting trip to the leasing office here in a little bit.
Okay.
But doing good outside of that little snafu. I got a friend coming into town tonight to hang out for the weekend, so looking forward to that. And the market's not treating me too well. So it's a mixed bag on that front, and I say mixed bag. It's mostly a losing bag. I'm hurting a little bit. P-Sky actually, especially very very rare time time, I'm about to call out Paramount Skydance for hurting me. But with Netflix officially landing the Warner Brothers deal this morning, Paramount took a sizable hit. There was some pricing in of them potentially landing that deal already going on. So they've lost about $1, which, if you're as deeply long as I am, translates to about a negative 300 in my portfolio. So,
I gotcha.
yeah, could be better. I was really hoping Paramount would land that deal. I was telling you yesterday off air, that would have just been like the most home run year ever if news broke this morning that Paramount was the ones getting that. But congratulations to Netflix. That's a giant IP to land, and congratulations to Game of Thrones fans everywhere who no longer have to have an HBO subscription to watch that show.
And I mean, that almost would have been like the grand slam in the 9th inning if Paramount were, to land that last deal. So, of course, Netflix comes in, swoops them up. It's really interesting. I'd seen a headline not too long ago, and it was talking about how Blockbuster passed on buying Netflix for, $50 million? So it's just crazy to see this thing come full circle, and then they're buying Warner Bros., right? I mean, what does that mean for the culture, though, Gus? That's one of the childhood favorites, right?
Yeah, I mean, I think it's good. This is a rare industry where, and I have vouched for this many times, but I actually vouch for much more consolidation. Can somebody please monopolize TV?
Okay.
There is everything is so spread out, and so from a consumer perspective, anytime that there's these mergers that allow IPs to be available on a pre-existing and large service such as Netflix, I always really just think it's a common good for society that you no longer have to carry these 2 subscriptions. If you want to watch the new season of Stranger Things, or if you'd like to rewatch Game of Thrones, they're both right there for you. No more HBO Max subscription going to be in the equation, to my knowledge.
Yeah.
So yeah, I like that. And as far as like the culture perspective, and as far as Netflix and the way that they've taken over, yeah, I mean, I think it's really amazing. And the way that traditional media and traditional cable were just not scared of Netflix at all in the beginning is so funny to me. Looking back with the benefit of hindsight now, I believe they talked about it on air this morning. But there's been an article circulating far and wide quoting some executive from maybe Time Warner or something in the early stages of Netflix, where he asked if the interviewer asked him if he perceived Netflix as a legitimate threat to cable and to the established, entertainment industry, and he said, I believe the quote was, "No, I don't think it's a threat at all." I'm paraphrasing here. "No, I don't think it's a threat at all." And then he did say exactly, "It's like, is the Albanian army going to take over the world? I don't think that they are."
Right.
And obviously now
so
that was
really
a 2010
underselling
article.
Netflix.
Yeah.
Okay.
Yeah, that was a 2010 article. So now with the benefit of 15 years of hindsight, I guess the Albanian army did take over the world. Should we be worried about Albania? I'll steal a joke from our very own Paul Zink on that one.
Lastly, before we pivot on the topic of this media industry, I mean, what would your opinion what would have been in 2010, right? When we were sending the DVDs, you could go online, mail the movie to your mailbox, mail it back whenever you were done using it, and you could kind of rent this service. And that's where Netflix really swooped into the door for renting these movies and really, overtaking Blockbuster there. I mean, if we can really bring us back to 2010, how would we might have perceived that? And I'm curious for chat, how would have you guys might have perceived that? And when Netflix did roll around in 2010, did it seem like a fad? Because Netflix has big broed everybody in the industry. Everybody, right?
Yeah, absolutely. So, yeah, we're gonna have to take a jump over to chat after this as well. I don't know what the heck's going on over here, but yeah, as far as like my perception in 2012 or 2010 or whatever, I think I would have held the same belief that the major industries held at that time. I'd love to sit here and say that I saw the future and that I thought this thing was going to take over. First of all, I was 9, so there's one part of it. I wasn't exactly thinking about the implications that Netflix might have on the broader entertainment industry. Yeah. But beyond that, I think that if I were the age I am right now, say in 2010, I think I would have thought that it wasn't a threat. And I think, and this is a broader thing as well, but the way that everything has just become faster. Like Netflix, for instance, it would be really easy at the time in 2008, 2009, 2010 to say, why would this company ever be successful? You have to order something, wait for it to show up at your door, watch it, send it back, wait till they get it back, then you can order the next thing. Why would anybody do that when they could just drive to Blockbuster and grab a movie? That's a very logical perspective to have. And I think people had the same perspective in the early days of e-commerce, in the early days of Amazon and eBay, which was, why would anybody order something online when you can just drive down the street to Walmart and have it right now? But what we see in both companies now, Netflix has things for you instantly, and they have for a decade now. You can stream things directly. And Amazon is getting things to me in like 3 or 4 hours. I mean, we are very close to Amazon being able to get things to you in 30 minutes. I know the other night we were playing video games and Chase broke a cable. And then he was like, He was like, "Oh, I'll buy a new one on Amazon and we'll pick up tomorrow." And then Amazon was like, "Oh, it'll be here in 3 hours." Like it was like 4 in the afternoon or 5 in the afternoon, and Amazon was like, "Oh yeah, it'll be here at 8 p.m." So then by later that same night, we are back to playing video games again because Amazon is becoming that fleshed out. Netflix is the same regard. So yeah, it's just everybody is willing to pay for convenience. We talk about that all the time. We live in a convenience-driven society, and as these things have become progressively more convenient, it's just completely run the competitors out of the market.
Completely agree. That's a great perspective. And, later on, we'll rewind back to get a little bit more context on that table and Chase. We're not just going to let that slide by, but we can jump into the TradingView platform and kind of see what's been going on over here. But one of the first movies that I seen on Netflix was actually Eagle Eye. I don't know if you remember, with Will Smith.
I don't.
Anyways, Eagle Eye was OG movie. He got, I think, shocked. He turned into some insane superpower creature because he got struck by lightning or electricity, something like that. I was 9. Forgive me, Gus. Forgive me.
That's interesting. I don't remember the first movie I watched on Netflix at all. My first pointed Netflix memory that I have where I sought out Netflix to watch something was in 7th grade, I think, when I wanted to watch Friends, which would have been 2014-15 school year. But I don't know. I was definitely watching things before that, and I can remember my dad having the mail DVDs going back and forth, and I'm sure I watched some of those movies with him somewhere along the line there. That's interesting. That's funny first memory to have.
Yeah.
I'm gonna jump over to chat here and figure out the origin of these donut emojis. I've been so curious.
Does Big Deal have anything to do with these donut emojis? But we can go ahead and jump over to the TradingView platform. We'll get caught up on NASDAQ right here. Thank you.
Donut, smiley face. And then the real confusing ones is the Gus has baloney in his slacks. Is this a reference? Is this a reference I'm missing?
I need more context on that one, too. Oh, there we go. I like that.
Thank you. Thank you, production team. Gus has baloney in his slacks, and then Death Sneeze immediately after doubled up baloney in their slacks. So this is something. There is something here. You guys are speaking in codes in the chat if anybody wants to break this down for us two Gen Zers, because I have no idea what this is.
How the tables have turned. Now we need things explained to us. How the turns have tabled very quickly near the end of 2025. No, I mean, with that being said, the market has, tried to rip to the upside today a little bit. We've given back a lot of the gains. You can kind of see vol spiking a little bit, collapsing again. And then we're kind of consolidating for a little while now after the last, about hour or so. So we really haven't gone anywhere, but we did get another opportunity on NASDAQ today, which I got to say, very surprising week to get, opportunities pretty much every single day this weekend. They're around similar price levels, so it wasn't too difficult per se. But the market is giving us more volatility in the market, and this morning we kind of broke out of our range from balance. I know earlier this week we were talking if the market was going to break out of balance to the upside, downside. It's looking like it's going to be the upside. Thankfully, this morning, this pop was in the pre-market, so it didn't confuse us with entering our position. Then the market opened up, we got the pullback, pulled the trigger on the long, wasn't too confident to take it with 2 contracts, so just held that one all the way to the highs and then took it off. And then now we're getting a little bit more of an opportunity here to test the highs, but really not much to say other than that. But we'll break this down in a little bit more detail here in a moment.
Yeah. It's interesting. This was something to touch on right at the beginning as well. But somehow, it's a green day, and somehow none of the stuff that I need to be green is green. It's like the market has a vendetta against me specifically today.
I mean, that's not to say I have that call spread on QQQ. So these positions this week has really helped hedge that short delta vertical spread to the downside that we've had on. So got to throw that out there too.
Yeah, absolutely. Yeah, the higher move is holistically going to be good for me, I think. And I'm intrigued to see us moving up today. As you guys may recall, yesterday I was thinking we would probably bleed a little bit today and into the end of the week. But market showing a little bit of resilience. It doesn't seem like the bulls are quite done yet.
No, maybe not yet. Which I gotta say, I'm a little surprised. I would have preferred the short just because I think the short has more range to the downside. But the market gave us the long opportunity and just a little bit more sus. Again, using smaller contracts because the market is kind of showing us we're shifting from balance to imbalance to the upside. But it's like the lack of conviction. The market's telling us to get long, but it's like the lack of conviction. So let me just size down or just not take the trade at all. But I got to say, I was really hoping for the downside. Maybe we get it next week, but I do think we have some good range to the downside, and we'll be waiting for it. We'll stalk it a little bit longer.
Just know the next time you're sitting around and watching a long position print for you that Errol is somewhere praying that the market crashes.
Well, I mean, to be fair, that's fair, and that's pretty accurate. That's pretty accurate. Yeah, if you got a long position, I'm probably sitting there waiting, hoping the price gets to this level, so we get some type of opportunity in the market. But
especially if we're at all-time highs. Especially if we're at all-time highs.
I just well, again, my bias is just so it just exudes on the daily, because you're right. I'm over here talking about the long side again and complaining about it, but no, sometimes the long trade, something that I've realized with the long, I've gotten so frustrated with the long trade sometimes, like even this morning, whenever we were letting this ride to the highs, I can be so quick to take the long positions off because I'm so biased to the long side. I was like, let me just let this float a little bit longer and let's just see what happens. And the market lifted it a little bit higher. So I don't know. Holding on to those runners a little bit longer is going to be another goal, just heading into 2026 on the long side at least. So we'll see if we get the opportunity to do that.
Yeah, I think it has a lot to do with time frame preference as well, and that's part of what gives you that bias, because I'm always kind of thinking in like a weekly context at the shortest, and generally I'm trying to do about 30 to 60 days. I would say that my average trade length is probably something like 45 to 60 days. And when you're doing that, I think that you're more inclined to be long biased, because if you were to just, I'm sure the research team could figure this out actually empirically, but I would venture to guess that if you just pulled any given 60-day period throughout the history of the stock market, that at random, say you take 100 samples, that like 70% of those would probably be green, just because the market wants to work to the upside in aggregate. So when you're thinking in a little bit of a longer term context, shorts are a bit more dangerous. You're hoping that a short thing will play out over a long period of time. But the other side of that coin is that in a smaller scale, the market really churns upward, but it will come down quick. Stairs up, elevator down, as people like to say. And so, if you're looking to trade minute to minute, the way that Errol prefers to, then the downside just offers you a lot more opportunity and a lot quicker.
Yeah, especially just because, it's been straight up all year. So, it feels like getting towards the end of the year was the first decent pullbacks we've seen, I think, since like April, too. So, the last, 8-9 months since we were in April has gone really fast, to say the least.
They just said, Errol and I are on the same page on that one. Still calling for ES under 4,000. Just a few more years and I will be correct.
Look, hey.
You might need to move the goalposts on that one a little bit, Theta. That would be pretry crazy at this point. It can happen. I suppose we tested like 4,800 in April, so it could happen.
It could. No, but we'll see what we get for the rest of this week. I gotta say, like, this week was a little bit more straightforward than it usually is. Like, sometimes, you know how when you see the textbooks, the images and the graphics of the breakouts, and it's like, yo, buy here, sell here, and it's like, oh, if only it was that simple. But like, low-key this week, it never happens this simple, but low-key this week played out into one of those picture-perfect kind of scenarios, just because whenever we were trading within bounds this week, we rejected off of the value area high every single day this week, and we pretty much bounced off of the value area low every single day this week. And then whenever we shifted from bounce to imbalance, we retested. Let's zoom in a little bit here. We retested the value area high, almost perfectly with all these markings on the screen that you guys can't even see what I'm looking at right here. But no, after we pulled back over here and breaking out of balance, the market pulled back and retested it, and had that directional move. So again, it doesn't happen that picture perfect every single week, but I feel like this is a really great example because it's easier to see it. And I think when you see it more and more often, it's easier to see it moving forward. So it's just a great example. I would use this one as like a framework. But anyways.
Had to really lock in there to land on the word use.
Use. But with that being said, that's all that's been going on this end, Brother Gus. I've been looking at Oklo a little bit. Thinking about taking that one off. 14 days left till expiration. It was in Iron Condor, got a little bit more delta neutral. And then been stalking gold and some of the metals a little bit more, but that's all on my end for the most part. That's what I've been stalking.
Yeah, where's Oklo at? That one's been ripping all over the place, all inside your range, fortunately. But are we?
Yeah.
Oh yeah, you're good.
I didn't know if you would have asked
me. Wait, does that say 125?
It says 105.
Oh, okay.
105.
I was gonna say 125. Holy cow.
I will say this one has been a little bit more of an emotional roller coaster. It is nice that it is an Iron Condor, so it is defined risk. But good Lord, the volatility to the downside, I'm glad we got that pop over the last 24, 48 hours. But man, We're getting down to the wire here. We might be able to scoop some profits out, but really looking forward to taking this one off.
Well, yeah, it's what, 90 to 120 is your bracket, or is it 80 to 120?
So Oklo is I sold the 120 calls to the upside, and then I sold the 90 puts to the downside.
Yeah.
Did you say 90 120?
Yeah, 90 120 or 80 120 is what I was asking.
Great memory, bro. Great memory.
Well, I remember it well just because of the how we were joking about how it tested the downside and then immediately somehow it's testing the upside, and now I guess it's going to bounce back off the upside for you.
Yeah.
But yeah, hoping that's a volatile one to be neutral on, but it looks like it's working out swimmingly for you.
Yeah. No, I know.
Ulta.
Yeah, big deal pointing out Ulta here. I mean, wow, what kind of headlines was going on over here in Ulta? It's usually a lower liquid underlying to trade as well. So we got some capital moving through this one today.
Analysts raise price targets seems to be the reason.
There we go.
And they have earnings as well. Yes, yeah, good earnings. Analysts are hiking it.
Going under 4,000 right now would be a shock to the system, but historically not that unusual. The unusual part is that it hasn't happened in the last decade and a half. I've actually been on pretty much the same kind of consensus with you there too, Theta Trader, but it always leads me back to the market just doesn't have to make sense for as long as it wants to. So it's one of those things where whenever the downside does get put in, it's going to be nice to take advantage of it. But I mean, the market has just, I mean, really since 2020, Gus, I mean, getting into the market a little bit more in 2020, 2021, learning what the VIX was and the volatility index and learning how that related to the market and how it was used as a sentiment of gauge on the market. So when really understanding the market from there and the market kept going higher and higher and higher from there, that's when I really understood positive drift. That's when I understood the economy a little bit better and all those kind of things. So even when things weren't making sense, I just came around to the mindset of it's going to be nice when it comes, but not hoping for it anymore. So it only took 5 years to get around to the realization the crash of the big pullback will come whenever it wants to come.
It's true. What was QQQ Holdings in 2000? I would bet a lot of Cisco. that's my guess, which also lost 80% of its value over the next 2 years, I might add.
Good Lord. I mean, this recovery on the indices, though, has been really impressive since the pullback. We're flirting with all-time highs. I mean, we're talking about that so casually, but we're flirting with all-time highs.
I mean, SPY especially is like $2 from all-time highs. I mean, we're just about there. And it's been such a slow grind back up. It doesn't feel like this, and especially this last part of it. We got the quick recovery. First 2 days were fast or whatever, but then the last week has just been this little. We're just chipping away, and suddenly we're really close to all-time highs again.
Yeah. This is going to be interesting. I mean, especially with where Bitcoin is sitting right now too. I know everybody's kind of on the edge of their seats there. Is Bitcoin going to dip a little bit lower? Is Bitcoin going to make another high? It's kind of in the tweener spot there too. So, I mean, these assets can't make up their mind over the last 24 hours, Gus. It's looking like Rivian right now. I thought I pulled up.
This does look like Rivian right now. Actually, let me validate something before I say it here. Yeah, okay. I've been meaning to point this out. Rivian, actually, not even a good example right now because it's breaking out a little bit.
Okay.
Finally.
Okay.
At long last.
Okay.
we are reaching some new highs here, and of course, it happens right when I decide I'm going to be a genius and short against my longs.
That's how it happens. That's
how it always goes. So I'm viewing that. I'm really long. My full position is still very green as of right now. So I'm viewing that as I just paid a toll. I paid a toll with my short call vertical, and I'm fine with that. I paid so that this will go higher and my leaps will work out. That's the way that I'm choosing to view this. But yeah, so everybody, if you're long Rivian, you're welcome because I decided to get short against my longs and make this happen. But yeah, my Rivian leaps looking real good. I have a 12 and a 25. I've liquidated the 20. I had a 20 as well. But all into 2027. And yeah, looks like we're finally getting a break over the 17 range that has plagued me for so long. So hopefully we can hold this. And if not, I hope it gets back below 16 in the next 12 days.
And we're back in business.
7
back to the
days.
same game.
I need it back below 16 by next Friday, or we can go to the moon. What cannot happen is we stay over 18 until next Friday, and then all of a sudden rocket right back below 16, and that will happen. That's my prediction based on how this stock likes to treat me. Rivian does exactly what I need it to not do all the time. Crypto. Yeah, how's crypto doing? I actually haven't looked at Bitcoin at all today.
Yeah, let's circle back
Crypto
around to there.
pullback is pretty decent.
Yeah, the pullback was pretty strong. The first Rivian chart we were looking at over here, but I mean, we popped. We just couldn't hold any gains, and I mean, it doesn't really look like that. It doesn't really look like Bitcoin is necessarily strong or weak over the last 24 hours. It just looks like it's been pretty undecisive relative to where it's been.
Yeah, Bitcoin or IBIT, that's to say, and Meta are two things that I both added more to pre-existing, very exposed long positions, and in the midst of the dips here. So, paying the price for that a little bit today, but it's just leaps in both of those. I do have defined risk stuff on in Meta, just because the naked contracts require so much buying power. I don't want to tie up 5% of my portfolio for a year and a half.
Right.
But yeah, it's an interesting spot. I don't know. Crypto especially is an interesting spot. I really thought that this would pop back quick, and I guess when you zoom out like that, it really is still in the midst of popping back quick. And the calls that I bought at the bottom on IBIT are still green, so you can't do too much complaining. But a little bit alarming here. I kind of thought this gap fill would have happened already, as crazy as that is to say, but that's the way the crypto operates.
Yeah, 100%. I haven't traded Meta in some time, but didn't recognize how well it's been doing really over the last year or two.
Yeah, Meta has really rallied out all along this recent sell-off here. I was just buying. I bought immediately on the gap down. I bought about halfway through the ride down to the bottom, and then I bought once we had a confirmed bounce back to the upside. So I have 3 sets of contracts on in Meta, the most recent of which are already very safe. I have a 640, 650 short put vertical there. And then additionally, I have a 710, 715 and an 820, 830. All the same. I actually have 2 of the 710, 715s. And those are 133 DTE, 195 DTE, 742 DTE. December 17th, 2027 on the longest one.
Oh, we got some time there.
Yeah. Although it'll just be here all of a sudden, and I'll be like, man, I remember when these meta contracts had 742 DTE.
Said I bought Ethereum earlier this year thinking around 2,400, 2,400 levels. So relatively speaking, depending on when you bought, you might be doing fine. Leveraging is what gets people 100%. I know we had that pullback in crypto not too long ago, and it really wiped out a ton of people in the market. So I know even for myself, some of my best trading comes when my size is controlled. I notice I have a higher win rate. I notice I'm able to think clear through trades, manage them more efficiently. I'm able to be a little bit more patient for scaling into the trades, which helps with your average entry so that you don't get stopped out too fast, because if your average entry is too far up, then you get stopped out. So I would even say on my end, I've definitely experienced, the sizing, whether that's leverage or leverage for the position itself, definitely where it gets most people, no doubt.
Yeah, and leverage crypto trading especially is like, I'm not going to use the word degenerate. It's one of the most risky. It's one of the most risky, and I don't know. It requires some onions. It requires some cojones that leverage crypto trading. And yes, and when you see a pullback like this happen, all of a sudden, the tail risk finally comes through, which tail risk does come through eventually in everything. And you're 50x levered up, and suddenly 1K move to the downside in Bitcoin has you losing your house. I mean, like, for real. that is the extent to which leverage crypto trading can blow people up. So yeah, I'm sure a lot of people got wiped in that regard. Theta, you missed my intro yesterday. That was literally the first words that I said when I opened up yesterday was, thanks to all of you fine people, I have had Informer by Snow stuck in my head for the last 24 hours. I really had not thought about it in the last 24 hours since, but now it'll be stuck in my head again. So thank you for that one. It was very catchy. I did immediately listen to it. Shout out to James Comey on the production team for having a link ready for us the second that we got off air. Kind of bangs. Is this catchy as Baby Shark? Ooh. Holy cow. Murphy, man, that is honestly just too much to unpack, and we are at time. I would say call the trade desk is my recommendation in that situation. There's a lot of nuance to that. I think that there's ways to wriggle your way out. I don't want to just speak out of turn, but yeah, call the trade desk. They'll get you sorted. Speak to a real person right away.
That being said, we are running out of time here. Anything else top of mind there, Gus?
No, nothing top of mind. Immediate, I doubt it could be as catchy as Baby Shark, but I don't know. We have to listen to the, what is it? This is what's top of mind. We have to listen to the Animaniacs theme song when we get off air.
Okay.
Apparently that is what the baloney and the slacks thing came from, apparently.
All right, put
I think
us on.
that's what I'm
Catch us
putting
up.
together here.
I got to be in the know.
So we'll see.
Cool. Anything else from you guys?
Nope, nothing on my end.
Cool. Well, thanks for taking the time to hang out with us today, guys. It is a Friday. We'll see how the markets digest into the market close. We will be back next week, but be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Soy de La Habana. back. It's still Friday, December 5th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Nick Batista. Good to see you, Nick.
Good to see you, brother. Thanks for having me on.
Thanks for filling in. Ilya's out today. He decided to take a long weekend. Lucky guy. But the markets are still open, so you and I have a job to do. Perking up here a little bit as we make our way into the second half of the session. It's not really a high volume day, but vols themselves, volatility, continue to fall off. I think that's a place that you and I should probably start our focus here today. But you have any good weekend plans, Nick? Because I was just going in my head over all the fun kids things I get to do the next 2 days, and maybe you'll let me live vicariously through you for a little bit.
I don't have anything crazy planned this weekend. Vinny's got a couple hockey games, so I might go out and see him play a little bit. You got obviously a huge football game. You got Bears coming up, so that's going to be a big part of my focus over the weekend. But yeah, just going to be hanging out. It's going to be freezing here all weekend, so I might make some pizza tonight and just chill.
Yeah, big football game. That's not a sentence you hear thrown around in New York that often these days. Guys, we can go right to the slides and talk about this low volume and this vol contango that we still have persisting in the market. Next week, of course, we do have a busy week. Wednesday's Federal Reserve meeting is coming into focus, but it's coming at a time when the market seems fairly content with how things stand in the near-term horizon for risk. I know this chart shows the contango visually, but in terms of the numbers themselves, I see a front month up at 14.96 VIX, all the way at the back end, 23.18. That's a fairly healthy spread right now. What does it tell you about a market here in this low volume that we have a VIX spread that's 5, 6, 7 points wide, depending upon where you're looking at the curve?
Yeah, I'm breaking up a little bit, so I'm missing kind of what you're saying. I think it's me. Yeah, I mean, volatility has been kind of something that I've been focusing on in the last couple days here. I mean, we've gotten down to the VIX at 15, 16. This has kind of been the low spot. I know we're still in a pretty solid contango here, but going into a big week like next week, I usually want there to be some fear like that. I want there to be some volatility because I'm normally playing it to the upside. I want to see there to be volatility, people buying puts, kind of some fear. And we're the exact opposite of that. Right now, it feels like nothing can go wrong. Sky's the limit. And so that kind of gives me a little heebie-jeebies.
I think a lot of us would feel more comfortable if the market was trading sideways to slightly lower going into the Fed next week, just in terms of how the market may react to the Fed. But that's clearly not what's on everyone's mind here, Nick. We also have the seasonal rotation in play right now. Do you find that there's any truth to the idea that because it's the end of the year and this has been a difficult year for a lot of traders, that they may try to chase this thing higher? Do you think of those any year-end flows as a determining factor for how you approach the market in December?
I'm getting like every other word. I'm going to see if I can quit out and come back on you, Chris.
All right. Why don't you come back? Because I think the producers are saying you and I
take over for a second.
All right. Well, then we're going to keep moving forward here real quick. So stocks are pushing up slowly here today. We like to benchmark at the start of Futures Power Hour somewhere around 1 million contracts traded, usually around 1 p.m. Eastern. That's a healthy mark. Even with the new start time at 1:30 p.m. Eastern, you'd think we'd be a little bit higher by now, but still less than 1 million here today, 925,000. So just putting together those puzzle pieces like we were doing so yesterday on the show, when you have low volumes in the market, absent a catalyst, and volatility is pining to the downside, it's difficult to think of anything other than a free float higher in the short term. And consistent with that, one of the things that we've seen here is a market that is still riding the rails of short-term momentum. The 1 week moving average the past several sessions, as Nick pops back on, the 1 week moving average over the past several sessions, ever since we closed above it on November 24th, has basically been support here. It was yesterday. It is today. Today, we're cycling up into a new monthly high. We're cycling up to the highest levels that we've seen since mid-November. So you still have that positive technical drift that's keeping this thing afloat. Nick, you and I go back and forth, and we almost joke with each other, like, when is Valhalla coming? See you at 7,000, brother. But it's almost set up perfectly again, where this is a market that could probably make an attempt at a high before the year is out?
Yeah, we've been talking about 7K, Chris. That's what I want, but I'm a little spooked in the interim.
What's going to get in the way of us getting there? Is it just the Fed? I think that you're still facing those technical difficulties right now, Nick. I can hear and see you fine. Nick, in the momentary minute while you're trying to figure that out, 6,900.50, about 13 points from where we are right now. That marks off the November 12th high on our chart here. And it's an area that we breached today when we got to 69.05. So there is this attempt to poke through. We're pressuring those levels. On first blush, there may have been people who were trapped in here, and now they feel this is a good time to get out and reset their position. But I go to a smaller time frame, a 4-hour time frame, and watching us just gently set these series of higher highs and higher lows, grinding up through resistance, it is encouraging price action. So to that end, what have we been doing here in ES? I'm just taking a look at the levels where the market has recently been pinned up against today's high. You can make a case, you go back to the start of November. This is an area that the market has been respecting, a little bit more of a push, and there's really not much of anything standing in the way of a move back to 69.50 up towards 7,000 before this year's out. So how have we been approaching this? At least my way of approaching this has been twofold. First, at least through MES. Position has been on for a few weeks, and this may need to be rolled because we are getting into the teeth of expiration here for the December MES expiration. Nevertheless, though, the entry at 67.65 remains valid, and as we push higher, I like having a little bit of exposure that way. I also like having the exposure in the call spreads that look for a move towards 7,000 before the year is out in this low volume, low volatility, positive technical drift environment, which has just been so friendly to us this year, right? For the folks that are listening in, if you've been watching the show for 6, 9, 12 months by now, you know that this is kind of the trifecta that we butter our bread. And so at 26 DTE, which is the December 31st expiry, 7,000, 7,050, it's not your typical tasty trade methodology, 45 in, 21 out, looking to sell those puts. Instead, I'm doing a little bit of a reach. This is a 34% probability of profit, risking 1 to make 1.5. I'm comfortable with those odds given the market setup here. Before we get Nick back, though, I do want to take a look at the NASDAQ because it does feel like that's somewhat of a different setup than what we're seeing elsewhere right now. And the past few sessions, the NASDAQ has had these efforts where it's tried to outperform the other indexes. Feels like a bit of a mirror image. Either the Russell's on top and the NASDAQ's on the bottom, or somewhere vice versa. Today, that is the case again, where we see the NASDAQ up by nearly 0.5% and the Russell's down by about 0.2% here. Obviously, we came off the highs from today, but we see ourselves trading back into that November 12th high, which if we were just to extend this resistance out here on our chart, there you have it. Where we bottomed out immediately after the October Fed meeting, we bounced. As we carve out new lows at the start of November, we try to trade back into it just north of 25,800, and we fail. And we fail again, making our way into the middle of November. So today, first blush, we get back to that zone. The market peels a little bit off. Can we say that's a shocking move? I wouldn't think so. Back to that daily chart, though, because if we looked from the April lows, there has clearly been some technical damage done. The uptrend off of the April, off of that October low, has remained broken. Cycling through the high that we had here from November 12th would demand that we reconstitute our trend line, because then the series of corrective moves to the downside on a technical basis would have been finished. We now think that a broader uptrend has been reestablished, and the NASDAQ then looks like it's ready to gun for that 27,000 level. SMH, as we wait for Nick to get back here, putting in a new monthly high as well. The semiconductors have been helping guide the path higher still in this NVIDIA versus Google world now that we find ourselves in. Both of those individual players today trying to find some footing. NVIDIA not doing such a great job. Google a little bit better. But both of these charts, they're still holding up. And so we think about our Mag 7 names, two of them that are clearly the key drivers right now of this rally. They don't exactly look like the most bearish thing in the world. Sector rotation today looking pretty good when I last checked. We can quickly pop on over to our ETF watch list here. And just by quick count of the 25 that we follow, 5 are in the red, 20 are in the green. Nick, can you hear me? Can you see me, buddy?
I can hear you now. God, that was a situation. It was like, the Nintendo blowing on the cartridge kind of thing.
Oh yeah.
This was just a computer restart. I hate when the tech guys are right like that.
Yeah. Oh, those were the days. Like it's like 2:00 in the morning. You're having a Mountain Dew, and you got to blow on the GoldenEye.
Ooh,
So
I was more Smash Bros. Just play Smash Bros for 5 hours straight.
Yeah, like Perfect Dark was my N64 game. If we're gonna be real.
All right,
that was my favorite. That was my favorite. In any event, yeah. So glad to have you back, Nick. I was just running through the S&P and the NASDAQ here. These look like they want higher. We're running into levels that we saw back in November. So seeing a little, risk peeled off here into the second half of the session upon first blush of swing levels. The highs for November, I don't think is a shocker, but low volatility. That's been so good to the bulls this year. Why should we lose the faith in those tenets of the market? I don't see a reason to.
Yeah, it's hard. It's hard. I mean, I've keyed on volatility. My other thing, today a little bit, which is a little bit spooky to me, is the move in Bitcoin. I talked about it with my dad earlier this morning. It's been a good tell for the market movement, at least in the short term. And when we're getting days like today where the NASDAQ is up and the E-minis are up, and then you got Bitcoin getting killed down 3-4% at one point today. I think we got into the 88 handle. It feels like one of them is lying to me. Like one of those things is lying to me about the current risk in the market. And it's not like the NASDAQ is outperforming, up 100 points today. It was up 200, 300-ish earlier this morning. It's kind of an inside day. It feels like just a shuffling of the cards in the NASDAQ, whereas Bitcoin is kind of the sentiment gauge of liquidity. And so I feel like one of the two is lying to me, and we're going to find out next week, no doubt.
One of the two is lying. And recently, Nick, I think the case can be made that it's been stocks who've been the liar, because when Bitcoin can't sustain a rally, stocks have not been able to sustain theirs either. How much of this is just the MicroStrategy tail wagging the dog, though? Is this the whole game for Bitcoin right now?
Maybe. I continue to think that it's an interesting upside bet, but yeah, maybe that is it. That there is kind of a kind of fail switch there that can just be like clicked on if that thing if MicroStrategy blows up, or if that gets worse, the whole complex probably unwinds. But yeah, I don't know. I continue to think that if everything was rosy, the money printers coming online, you've got rate cuts coming up, AI growth, all that stuff is all good. There'd be speculation in this side of the market, and there just isn't. Maybe it's just dead. Maybe it's dead. I don't know.
Not the first time MicroStrategy has been dead, so can't count it out just yet. But disconcerting, right? If I'm a Bitcoin bull or thinking about that as a gauge of risk appetite, the downtrend from the October highs, can't escape it.
Yeah,
can't escape it. And then Bitcoin, today, is this a little bit of a triangle down here? Maybe north of 95K, but when you're below it, no bottom in place just yet. So is that an albatross around the stock markets yet, Nick? Maybe. But as far as I'm concerned, right, the volatility is what's guiding us to the upside right now. And sub 10 IVRs in the Russell and the Dow, both of those not really fun if you're trying to call a top right now and sell some vol. What do you think of the Russell, though? I saw a really interesting stat that the average Russell 2000 company that isn't profitable is up 45% year to date. Whereas if you break it down into profitable companies, those stocks within the Russell are only up 7% year to date. Why are the pigs flying?
I've seen some of the similar charts thrown around, like of the short basket stock is up, like Goldman Sachs, like short interest basket is up like 35% or some insane number.
Yeah.
I don't know. I think that's all rate cut speculation. Obviously, with rate cuts coming down the pipeline, you expect these kind of lower market cap, higher debt-ridden companies to be a little bit better off. Maybe that's like a high beta play on expectations for next week. But I don't know. The Russell itself is just not one that I trade all that often. It has been outperforming pretty much everything over the last couple weeks here, but I don't know if that's the play. I think the Mag 7s are still, the top bucket to trade in. And you've seen a little bit of a rotation there. You've got like Google kind of stalling out here, Meta and Microsoft and Amazon to the downside. Apple has kind of chopped at all-time highs for the last week or so. So it seems like the market has been just a rotation, at least in the big caps there, which is why, we've gone pretty much nowhere all week.
That does make a lot of sense. So Nick, this is a futures show. Give us a futures idea here. Going into the Fed next week, ES&Q, RTY, it sounds like you're not in the RTY camp. So if you're looking at the S&P 500 or the NASDAQ, their volatility profiles, their technical setups, what do you think is the most appealing way to approach these markets into next week? And maybe that's even something like, because vol is so low, start taking chips off the table.
Yeah. That's what I've been doing across the board in my portfolio. One of the newer positions I put on was an iron condor in CL, which volatility is not high, but was higher when I put this on. It was an IV rank of like 24 or 25 at that point. I find that when volatility is this low and markets are kind of just like grinding, I'm looking for other opportunities. I looked at crude oil. I was also getting into like natty gas. I think if you're looking for a little bit of a hedge into next week, you could look at like a call spread in ES. I have a call spread around the 7,000 mark into the end of the year, as kind of just a small little hedge for the rest of the portfolio. But it's slim pickings. What are you looking at? Where are you finding some opportunities in the futures?
Yeah, I mean, I'm just sticking along, for at least in the stock portion of the show, I'm sticking along ES, call spread for a touch of 7,000 by the end of the year, and then long MES, which the position's been on for the past 100 points, so comfortable sticking with it for now.
Mm-hmm.
The motivating factor that I find for a lot of how the market behaves is how people are positioned. And the positioning in the market, to me, if you look at how multi-strat hedge funds and just any hedge fund really has performed this year, it's been a difficult year for a lot. And if you're on the buy side, it's how do you justify underperforming SPY or triple Qs?
You can't.
So like when all of a sudden, why are the unprofitable companies in the Russell up 45% year to date? Well, you probably have a lot of people who are speculating on them because there's an opportunity to get some outperformance there and, window dress before the year is over. We don't have great CFTC COT data yet because of the government shutdown. Unfortunately, that still is backlogged and we can't say where total futures positioning is right now, but just inferring from how the CNN fear and greed index has moved, from how the AAII bull bear spread has moved, this is not a market that's riding on jubilation right now. This is a wall of worry type of market, Nick, which I suppose not this week, but last week, you, me, and your compadre, Tony, in the morning show, we had that Let Me Explain segment where we talked about the wall of worry and how it was potentially building up here. Do you find that we are still in that wall of worry market right now?
I think so, but it's gotten lesser. I mean, you still have kind of the AI bubble, the Michael Burry tweets, the, seasonality on the other side is kind of the Santa Claus rally is the counterweight to that. But yeah, it does feel like there is a little bit of a wall of worry. I just think it's not as out there as it once was. The Trump stuff has kind of subsided. The wars and China narrative, that's not really like a headline anymore. I feel like it's getting the wall of worry I feel like we've climbed it.
So one of the charts that we shared on the show back in July which is a silly chart. I don't necessarily believe in these things. I hate when people do it about 1929, but market analogs can be fun. And we had made the case that maybe it was like a 1998 type of market. So just as a quick update to that point, the yellow line here is 1998 through the bubble bursting. Oh. And if you were following the yellow line right now, the 1998 in analogy and SPY, the current price action is pretty similar.
Oh, I can't do that. I can't do that. Come on.
Nick, you're going to have to walk with me down this path for a quick second here. But
I'll entertain it.
Okay. The bars, the candlesticks are obviously price action today. The yellow line is 1998, but it's just a little eerie for how that year evolved with how this year has evolved, where we just had our setback in November and we're starting to rally here towards the end of the year. Look, people say it's a bubble, and this is really the point I'm trying to make. We have no idea if it's a bubble or not. You could use valuation metrics, but how often do we see those stay out of whack before there's a correction? Heck, when you and I first started working in the industry, wasn't there a stretch where Amazon's PE ratio was like north of 1,500 or 1,800 for a number of years because they were super unprofitable and everyone was shorting them based on it? Mm-hmm. Same thing for Tesla and now Palantir. And sometimes growth companies are afforded those high valuations and they just persist and persist. And sure, they correct over time, but it's not because the stock price crashes. It's because the earnings ultimately catch up. I'm not saying that's going to happen this time around, but on a typical 45 and 21 day out cycle, Nick, we can't possibly time a bubble bursting.
No.
You're literally saying that the market's going to top out within the next 3 weeks. And that is a very, very difficult call to make. So as far as I'm concerned, until this market disappoints us and breaks our heart with one of these layup type of setups of the low vol, the low volume, the positive technical drift, we can't just be out here picking tops and saying this thing is going to pop because year end or the start of 2026 is around the corner.
I agree. And you're never going to get rich trading the pop. It's the 99% of the time where it's not the bubble and the market's trending higher that you're going to make a ton more money. So yeah, I'm not trading for that. And I don't even think we are there. I mean, there's stuff that does look frothy, and you mentioned some of the like unprofitable tech stocks and some of the Russell components. Like, yeah, that stuff can get taken out to the woodshed and it's a drop in the bucket. Like, I think it's hard to look at, a Meta and say, there's 40% downside there, or even an Apple or an Amazon or Nvidia. Those are the ones that matter. And I don't think there might be little pockets of froth, but I don't think there's anything. I'm not worried.
I'm not worried about the stocks right now, but that's kind of been my MO. So maybe I will take it in the face one of these days. I am worried about what's happening in bonds, though, because this is hurting me, and it feels like there is a sea change happening beneath our feet with the losses here today. 116 has been a noted line in the sand, at least for me, not just on the ZBH6 chart, but I go to the continuous contract, and that's now peering into the danger Will Robinson zone down here because it's a loss of the uptrend from the May, July, September lows. It's the area on the chart where you had the market capped out in July and August prior to the September break. This is ugly. I have a bit of cleaning to do here, Nicholas. This trade, you know what? This is my worst thing going on right now. Get rid of them all. See you later. Sayonara. Get them off the books. Same thing for ZN. Well, maybe not ZN.
See, I got into some bond puts today at the 115 handle. I've been looking at it the same way you have. At the 116's kind of been the low. And I feel like maybe this is a spot. Maybe you hold on for you hodl this one.
I'm thinking if we're below 116, we have a bit of ways to fall here, and that September low near 112.5 seems pretty darn juicy. So risking one to make it's almost a 1 to 4, which I really like, even though it's a 22% probability of profit. There is something that the Trump administration has been talking about doing, which if this was happening with anyone else, I don't know if people would be making a fit about it. So I'm trying to be intellectually consistent here. But there is talk of when February rolls around, the Trump administration may be trying to institute a new policy that you have to have a residency requirement to live within your Federal Reserve District if you're going to be the Fed president. Because in some cases, some of these Fed presidents don't live in the district in which they're the actual Fed president, right? Like Neil Kashkari isn't spending all this time in Minneapolis.
Mm-hmm.
And so if this residency requirement goes into place, if the regional Fed presidents don't move to their home district, then they'd be forced to vacate their seat. And so all of a sudden, it's not just this one appointment with the Fed chair or maybe replacing Miran, but now you have all these different Fed people who are going to be appointed by Trump. And you're going to have this unanimity on the board to lower rates basically at every meeting throughout 2026. Conspiracy, sure. But let's just entertain that if that's a real thing going on, Nick. We're getting rate cuts. And last month, the federal government spent more money than it did at any point going back to 2020. We've put $2 trillion in debt on the board this year so far since January. I don't know. It kind of feels like low rates and more government spending. That's reinflationary. More inflation, more growth, higher yields. I just don't want to be long bonds. I just don't want to be long bonds if that's what's happening. And I feel like I've missed the boat on that until, we cross 116, which we did today.
All right. I'm with you. That's fair.
What do you do with the vol here, though? It's only a 0.5 IVR.
It's brutal. And if you look at the MOVE index, we don't have it on the platform, but MOVE index is just bond volatility. It's essentially a VIX for bonds. It's at the lows, which is also kind of shocking considering the rate discussion that has transpired, or the rate projections, I should say, that have transpired over the last couple months, where we went from no-brainer hike, 99%-ish or 95%, and we had hikes across the curve, to no hikes and the market, selling off 5%, to now market bounces back to where it was, and we have hikes on the table again. You've had this huge move in kind of the bond market pricing and no volatility currently. It seems like something is lying to me.
It's really odd that bond vol is so low.
Like, you have a rate cut coming next week. You have bonds going lower, which means rates are going higher. Something is off. Like, we're missing something.
And this isn't coming with big moves in the rate expectations right now. They've been fairly stable this week. I don't see anything changing there. We did have PCE data this morning. Granted, it's for the month of September, so not exactly, how much we want to rely on that right now. But PCE for September was up to 2.8%, and the tracking that we have since then from private sector providers like Truflation, or even through the Cleveland Fed's dashboard, are saying that's closer to 2.9 or even 3%. So, Nick, rate cuts in a rising inflation environment, what happens to the long end of the curve? Probably not good things. Probably not good things.
Yeah, I mean, that's yeah.
Okay, so back to the drawing board on bonds. And to that point, though, if this is indeed where we're heading, we're getting out of any calls, taking losses there. That's what the L's are for. But what about the 113, 112? Yes, I actually think that's worthwhile. Hopefully that gets filled. I'm going to maintain my ZN exposure right now because it's a short put spread, a long call spread that's not looking too hot, but also an iron condor. And the short iron condor for me is persisting between 112 and 114. So yeah, the last 2 days have been uncomfortable, but we're within the range still. And until the range breaks, I'm not going to throw in the towel on a trade that's still technically working.
Where are you at on notes? 110?
I just need us to stay between 112 and 114, and we're golden.
I could get into a note position too.
It's a 3.4 IVR. It's not the most appealing setup in the world, but so 112, 111, 114, 115, 50-50 shot, risking 5 to make 4. I can live with that if I'm wrong.
I like it.
It's livable with.
Yeah.
Let's go to the best portion of the show. Now that we got through the worst one for me.
Hey, you know what? You can't hit all home runs, Vecchio. I see you. You got grand slams. What was that? GLW? What'd you give me last week? Yeah,
GLW. Corning.
Yeah, corny. I took that one off the other day. I was like, this guy, he doesn't miss.
Except in the snow, which I learned this week again why I don't trade around earnings reports. So we will not do that for another year.
That's okay.
Yeah, quickest $400 I've misplaced in the last few days.
That's the hardest part about it is the speed.
Yeah,
those trades, it's all or nothing every time.
So silver's had a really nice comeback here. It's been flirting with the 59 level again. We are beginning to see a change in how silver vol is behaving, which over the past few days, it was in more corrective mode insofar as vol was coming in and price was struggling to rally. Price ultimately has its setback. But I like to look real short term here, Nick. That looks like silver vol in this lower panel on the chart. The IVRs are no longer falling. They found a little bit of a base here. And they're finding a base as silver starts to pop up again. So instead of thinking that the end is nigh, we could be very just mathematical about this. We can look at this range. How big is this range? 57.20 up to about 59.70. $2.50, 250 plus 59.70 brings us to what? 63.20. 62.20.
If that happens, I'm going to be asking you for a loan. Might be tough. I'm with you. I think, if you're bullish markets, you're bullish assets in general, you've got to have some exposure here as well, because there's probably still some upside. But looking at just the gold silver ratio, that's kind of been where I've been trading, is just being long gold, short silver. I shorted some extra silver earlier this morning and got the move midday, but that ratio at 71, it's come in about 2% today. So we got as high as like 73-ish. We've come down to 71, just under 72. I don't know. I feel like there's a world where silver kind of stalls and gold has a little bit of its moment in the spotlight here soon.
Yeah, it's been something on my mind as well, which is why I've been leaning more into gold and copper than silver myself right now. And for the past several weeks, it had been really the other way, where it was like silver was the big position. I'm putting on twice the size of a position that I normally would, and it served me well. But I've been shifting my attention elsewhere because I look at that gold silver ratio and say, this is a 4 or 5 year low. This is not, that's maybe the baton is going to change hands again. There have been a lot of interesting research notes out today for whatever reason about silver being the new, it's no longer Robin to Batman or whatever nonsense they're trying to draw in. It still very much is, of course, but the gold setup still looks pretty good here. And like we see in silver, just got to really zoom in, but you could see how IVR high today peaks above where we ended the day yesterday. So there's like an attempt at vol coming back into the space. And as far as I'm concerned, this is still a chart bottom left to top right over the past few weeks. I'm playing for a breakout or continuation for a breakout, Nick.
The big question for the silver situation is, I haven't yet seen, I don't know if you have, it become mainstream. Because if you remember when we had the first gold move to like 4,400, it was the new thing on CNBC. It was the new thing everybody was talking about. Gold is the new asset, blah, blah, blah. It's going to the moon. I haven't seen that yet for silver, which might be another good thing for you on your silver long. I haven't seen that start getting airtime. Have you?
Not yet. That's why just today I saw a note from JP Morgan. I saw a note from Goldman Sachs.
That's the start. That's usually the start. They put those notes out. Now over the weekend, you'll have, Kramer coming on and talking about, he's been buying silver all his life and he knew this day was coming. And then Monday they spank you.
That wouldn't surprise me, right? That's how the rotation starts. Copper is one of the places where I thought that we'd be getting a little bit more lift. It looks like this is a range that started to break out, Nick. So a few days ago, we put on a trade here on the show, looking just for a simple measured move, which I have marked at 575. So the long 5.7, short 5.8 call spread is a 3-to-1 at basically a 1 in 3 shot, given the chart and given how the metals have been rallying and copper had just been kind of biding its time, I said maybe this is a baton shift.
How far out in time do you go? Did you go to the 18-day or the 53-day?
53-day.
The 5758. Because copper is one that since the craziness of the tariff on, tariff off, tariff kind of on situation where it was we were going to tariff it, but not tariff some of it, and then nothing really happened of it. I had an iron condor at that time, and that was one of the wilder futures trades I've had in recent memory. And so I have not been trading this at all. And so I like the fact that you're doing this small with just like a call spread here.
Yeah, listen, copper was a really good. I traded this a whole bunch this year. I'm just looking through my activity log here on the platform, right? Since the start of the year, whole bunch of trades, February, March, April, May, June, July. And then that tariff stuff happened right after I took off my last position.
Mm-hmm.
And I literally avoided it for 4 months. So yeah. I'm only dipping and the first trade was decent. Iron Condor, we're trading sideways, high vol. We start to move up, switch positions, get a little bit more directional. But I'm only comfortable dipping my toes back in this water for the first time now. And there's something interesting that Westwater pointed out to me, which is that because of that tariff nonsense that happened, when we take a look at our chart from a volume profile basis to look to see where all the trade activity is, we're basically heading into a gap zone right now where there has not been a lot of folks who have put trades in around these levels. So if we hit an air pocket like that and this thing starts shooting up, right, it's not like there's big overhead supply to prevent this thing from jumping, in my view, another 5, 10, 15 cents over the next few weeks. So maybe silver slows down, maybe gold, maybe the answer isn't that gold takes the baton back from silver. It's that copper starts to share some of that burden. Maybe it's a platinum or a palladium, but I do like as for me, I like the metals, Nick. They've been working this year.
I like it. This will be my synthetic hedge for my short silver position.
I got a question for you. Have you been looking at some of the individual names like Freeport, McMoran, or any of the materials companies away from the metals but related? TDX?
I traded like some of the memeier ones, the MP, USAR. Like I kind of messed around in those. I have not looked at Freeport in quite some time. I know there was some volatility in they had that like mine explosion, something or other that happened. But I have not. Are you interested in those as well?
I think the chart, they tell a similar story, but if I'm looking at something like Freeport and I see a chart that's been consolidating and now starting to break out, given what's happening in copper and silver, it's an agreement, right?
Mm-hmm.
The one thing if Freeport was breaking out and copper and silver were selling off, you'd say, huh?
Yeah.
It's not really good. But the chart looks good. Thinks it's an agreement. 5.3 IVR though, so I don't know how you sell puts here and sleep comfortably at night if that's...
Yeah, poor man's covered call or normal covered call if you like to do that. Diagonal spreads are probably in play. I'm going to see if I can get in on like a cheap little upside play with you. Yeah. Do something like the 45, 48 diagonal spread, looking at February for the long, January for the short. Just play a little upside. I'll keep this on my radar. Some of these I like to like. I put a short call spread on in nat gas today. I added that copper position that you had on as well. You know, these aren't my normal go-to everyday trades, but I like to get some positions on just so I'm watching them. You know, like I don't watch it unless it's on my watch list or it's in my portfolio. And these are things that, you know, are outside my normal scope. So I appreciate the quick little ideas.
You know, you mentioned before something that we're going to go to next that's in your scope, but it's what's happening with the energy products. You mentioned that you were searching for something in CL before, which today is up to $60.10. It's more or less just meandering around in this little zigzag channel that's been in play for the past several weeks. I see a 15.3 IVR, Nick. So before I get into what I'm doing, continuing to do, how I plan on addressing the geopolitical issues that are facing us with potential hedge, how are you positioned right now for this market?
So I've got flat delta. I've got an iron condor here. I am wrapped around basically the range that's been trading in the January 14th expiration. I'm short the 55-53 put spread and the 64-66 call spread. It's totally delta neutral. It's just kind of an engagement trade at this point. Oil has been a good trade from a good trade in my trading, my past trading. I've been just selling puts into these down moves. So anytime we get a move to 58, 57-ish, I'm looking at selling like the 54, 55 puts and just playing it for a bounce. It's not a huge trade, but it is something that has worked out. It kind of seems like that's kind of our floor here around that 56, 57-ish range. That's usually where we stop out at.
I really like the setup that you have here. I'm actually doing something pretty darn similar at the 34 DTE, which is the 54-52.
There you go.
And the 65-67. Now, when I got into this, obviously it was a few weeks back and volatility was a little bit higher. So I was looking at basically the same risk reward situation that you are looking at right now, where it's a little bit better than a 3-to-1 and nestles right around that 60% pop. I see that you had to go a little bit tighter than I did, right?
Mm-hmm.
Right. So you're in at 53-55 instead of 52-54. And same thing, you're in $1 on each strike on the short call spread side too, to get that same type of setup. But it's the trade, Nick, that I would be taking if I didn't have that position on already. Because quite frankly, this has been the best trade for oil since the end of the Israel-Iran war. It's been more or less saying the market is going to be range bound over the next 45 in, 21 out. Give me a few bucks on either side, and then we'll put those coins back into the machine next time. So at $60, this is where we were in November and at the end of October. And we saw here at the start of October, we visited these levels in August, and basically every month for the past 7 or 8 months. So that is absolutely something I'm game with. If I didn't have mine on right now at 34, I'd be joining you in at 40.
Mm-hmm. I like it.
But the geopolitics. So this doesn't look like it's going to work out today. And that's really the whole point of this. The idea here is if something happens with respect to not really Eastern Europe, but I'm more concerned with waking up that we're going to see something happen in Caracas. To that point, while oil has bounced back a bit, I would note that if we take a look at the news flow, Nick, several Latin American airlines have canceled flights in and out of Caracas for this weekend.
They got the note under the table, the note that was slid under the door.
Yeah, I think so. Right. So there's a little thing that we've been doing here, just like a little flyer. Give me something, a little insurance to wake up to, where if oil vol doubles from here and prices pop $1 or $2, stocks come in, right? Everything else kind of goes. So there's something in a pocket that will hedge off against us. And if it doesn't work, then you know what? It's $100 or so. Who cares? 7 DTE. We're doing this on every single week. We saw this with Iran, the buildup of military assets at Diego Garcia in the Indian Ocean. And that worked out well enough for us as Israel and Iran went to war. So just thinking about protection right now, given the fact that we have our largest carrier strike group basically vacationing off of Aruba, and so not going anywhere.
With that info, that doesn't speak to volatility. You know, like you don't like you
said yourself, something seems wrong and amiss, doesn't it?
I agree, but you seem to be on the opposite side, that it's smooth sailing. We're all-time highs. I think we get all-time highs probably soon, but it feels like there's like there's something brewing. I mean, you just told me that we're going to war over the weekend, and
we're liberating 300 billion barrels of oil from Venezuela's reserves, Nick.
Yeah,
think okay. All that abundant, cheap energy fueling the American economy.
Touche. I give you, that was good. That was good. I can't get anything past you. That was good. Yeah. I mean, I like that angle.
Yeah.
So you do it with a call. What do you do? A weekly call spread?
That's all I've been doing. Just a few bucks, like $2 or $3 out of the money, keep it in the pocket just in case. And if it doesn't go awry, then it probably means the stock stuff is still working because there's no shock there.
Yeah.
maybe it's a way to reduce overall risk given some of the news flow, but it's been costing money, to be clear, right? This hasn't been a great trade. It's been an insurance trade. So I'm paying the market the insurance bill again for the next week of $100 or so.
I kind of like it. See, I like this, Chris.
We do some interesting things here, including trade natural gas, which, a few weeks ago when the market was giving us those 60 IVRs, Nick, and we're trading at like 475, I'm saying to myself, you know what? The market's going to let me sell calls around the yearly highs and puts around the yearly lows and get paid for it. That's probably a pretty good deal. I can't tell you how uncomfortable I feel today watching the last few candles.
That's why they call it the Widowmaker. But I too have felt the gravitational pull here. I'm just on one side, and I just sold the call spread. It's working out a little bit into this small pullback that we have intraday, but I was feeling some heat there too, because I feel like natty gas is my kryptonite. I think of all the trades that I've ever done in natty gas, I'm probably like a 25% hit rate. And so I don't feel, like it's one of those where it's well outside my standard deviations of most of my trading. So take that with a grain of salt. So if you have some short delta, I would be scared.
It's one of the things that is it working for me today here? It's off $7, and that's the great thing about the particular trade. So like this one that we put on a few weeks ago, it's still has a nice little open P&L here, Nick. So today it's only off a touch, but this is because it's in the NGG6 contract, okay? It's not in the NGF6 contract, and that's only up 3.63%. There is this phenomena that's happening across the natural gas curve, Nick, where you're looking out in time, you're looking across the strip, and you're seeing that prices are actually still fairly depressed, right? We're not looking at natural gas north of 5 anywhere else out along the curve right now. But natural gas has been the input that's been fueling the AI rally. And so I know we have this polar vortex making its way through the northern tier of the country right now. Pretty dang cold here. I think it's pretty cold in Chicago too.
Yeah.
But if we're talking about constraints on energy and electricity demand increasing over the next several months because of this data center build out, I can't help but think that as we look out in time, some of these guys may be a little underpriced. And at a certain point, if you're trying to lock in electricity costs, why wouldn't a company like a Google or a Meta or one of a Vistra, right, like a power supply or an Exelon, why wouldn't they go out further in time to lock in delivery of natural gas prices and start bidding up the curve? Mm-hmm. So I'm comfortable enough because of where it is in the G expiry. But as you look out, as you get closer to present day, natural gas moves is becoming more and more violent. Like the front month has a 4% gain. The next one is 3.8%. The next 2.9%, yada, yada. Mm-hmm. So maybe there may be a legitimate shift here that's happening beneath the surface that's lifting the entire futures curve right now. That's going to be a pretty important driver for, markets come early next year.
I like it.
60 IVR. If we were to do the standard short iron condor here on the platform, Nick, we use the preset feature, short iron condor, 45 DTE. I like to set my target out of the money at 80 and the strikes width at 3, so 15 cents here for natural gas. That's going to give us, let me just redo that quickly. Okay, so I want to move you a bit to where you were. Okay, so that's better. 66% probability of profit, risking 4 to make 1. It's not the most compensated position you could potentially be in right now, but it's something that is completely different than anything else related to the stock market right now. And hey, you can make a case that if natural gas keeps climbing, maybe people start to freak out in stocks again, which we've seen before. Whenever people are bored, they tend to look at the energy products.
I like it.
Nick, last stop here in Futures Power Hour. The dollar is not finding any traction whatsoever on this rebound. What do you think about the old greenback here, Nicholas? It kind of looks like a crummy chart to me.
Yeah, my time with Glenn in the morning sessions, I'm leaning long U.S. dollar. I feel like you've you're kind of getting into a situation that we had during last rate cut where, you know, you obviously had rates coming down and dollar weakness into that event. It was came out a little hawkish, or at least the market kind of digested it as a little bit hawkish, and you had a nice little rally in the US dollar. So that's what I'm kind of playing for here. I think the market, and when you look at bonds, it kind of is telling that same or similar story where, you know, maybe the rate cut expectations end after this one, or at least they'll kind of get dulled a little bit. And I would expect dollar to have a little bit of strength into that. So I'm on the other side. I'm on the other side of the ugly chart.
It's an ugly chart. It's a chart that's hated by many. The dollar is still one of the most shorted positions, according to the Bank of America Fund Manager Survey. It's a really nice day for that Canadian dollar, which this morning we were talking about if people were looking for their fill on labor market data, they should look to the Great White North. What a labor market report that they had. Their unemployment rate was expected to go from 6.9 to 7%. Instead, it dropped to 6.5%. The economy was projected to lose 5,000 jobs. It gained 53.6 thousand jobs. Canada's population is effectively the same size as New York's. So if we want to think about like a beat here, you multiply that by 9. So NFP equivalent, this is usually the rule of thumb that we go by in the macro world. So like if you're looking at Canada having a minus 5K, that'd be equivalent to the NFP looking at a minus 45K. So they got a 53.6 in. That's like if they got a 468,000 NFP instead. So Canadian dollar through the roof. BOC rate cut odds absolutely plummet. I have been absolutely on the wrong side of this trade. This is another bad one that's got to go. Nick, we're on the wrong side here. So sayonara. I know there's 35 DTE, but there's no reason to stick with the loser if it's losing. So see you later. Same thing can be said for the euro. Just cleaning some things up here. Just got to stay below 117 for me, but I'm not feeling great about that.
Okay. Yeah, I'm trading via the FX products, but I'm with you. What's your thoughts on dollar going into the end of next week? Think there's more weakness?
I'm not sure the Fed is going to signal more rate cuts that are currently priced in right now, given the fact that growth is near 3.5%, 4% maybe. The Atlanta Fed GDP now is at 3.5% for Q4. Inflation's near 3%. I mean, how many cuts can they really guide for in that kind of environment where the market doesn't lose its mind? Pulling up the FedWatch tool here, just as a quick visual before we close out the show, a good way to benchmark where we stand going into next week. So 87% chance of a cut. We got another one in April, another one in September. And then that's it. So April and September cuts next year. I don't know if the market's overreaching right now. It's a totally different setup for the dollar if the market's pricing in 5 cuts and the Fed says no, only 2. I just what's the best thing that could happen for the dollar? The Fed says we don't know if we can cut it all anymore next year. This is the last cut. So I'm not super comfortable in the dollar at the moment. It's making me sweat. It's losing me money, except for the yen, which Japan and China are having some interesting things going on. I'll leave the conspiracies for another time, Nick, but I would encourage people to look up on that conflict. And, the yen here may be about to lose its bounce uptrend. And we could be looking at that test of dollar yen going to 160. And then not next week, but the week after, we do get that BOJ rate decision. And will they tell us to take a hike on our short yen position? Because they like to do things around the holidays. Start of next week, Nick, there's not much by way of a busy U.S. economic calendar. But as we go into the start of the week for the futures world, for the macro world out there, you're trading energy, currencies, commodities. I would point to the fact that there is some Chinese trade data. Ooh, tariffs. That's coming out on Sunday night. And then on Monday night, the Australian Central Bank will have its rate decision. The Aussie has been moving a lot recently. 6A has had another strong performance here. And you think about energy and metals, that being a significant source of Australian general exports to the rest of the world, petroleum products, yada, yada. No wonder the Aussie's doing so well. So look at China early next week. And given the proxy that Australia is also one of their largest trading partners. So if you're trading 6A, you're trading Baidu, JD, right, Nick? There is some things to think about. Might be worth trimming your exposure heading into the weekend, but we're done here, Nicholas. Thank you so much for filling in for Ilya. Thank you for everyone listening for Futures Power Hour this week. Of course, we'll be back later today. I'm joining Jamal for a last call in about an hour's time, so tune back in as we wrap up the session here on Tasty Live. Until then, good luck trading. Have a nice weekend. After a quick break, Dr. Jim Schultz with From Theory to Practice.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we are trying to do. I'm so glad that you guys are here because it is only because of you all that we can do what it is that we are trying to do, whatever that might be. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube. If it is real time, if it is December 5th or thereabouts, or right around 2:30 Eastern time, give or take a few hours, I would hop into the chat because you can communicate with your brethren who are also watching the program. And we are going to have an extra long Q&A session today because I don't really have anything else to do in the portfolio. So today will be a very, very good day to get your question in the chat, and I'll try to get to as many as I can here in just a few minutes. But guys, it's not too late. So Paul, bring up the art card. This is it, man. This is the final show. Right? The final countdown before the last show of the year for the Tasty Live Roadshow. It's going to be me here in Tampa for Options Crash Course Live. It's Sunday night, Sunday evening at the Armature in Tampa. You can still register, tastylive.com/events. You can sign up and I will see you there. I mean, it's a 25-minute drive from my house. 25-minute drive. I can't wait to see so many of you guys there. It's going to be awesome. We're going to try being the key word, Options Crash Course in 60 minutes. The whole thing in 60 minutes. So what does that mean? No time for stories, no time for jokes. So that's probably an uptick from your vantage point. But we are going to get right down to business. 60 minutes Options Crash Course, and then time for live Q&A at the end. We did this in Boston. We did this in Detroit. And the Q&A at the end was super, super awesome. I think that was really, really, really well received by so many people. Had a chance to, address so many questions kind of in a group format, which I thought was really, really cool because it's great for me to get to chat with a lot of you guys like one-on-one. And before the show and after the show, and I mean, I want to try to connect with as many of you guys as I possibly can. But I know from a Q&A standpoint, man, there's so much like beneficial, so many added benefits to doing something in a group format. Because one thing I've learned being an educator for so many years now is that the question that you have, chances are 7 other people have that same question, right? Chances are 14 other people have that same question. And so we leave time at the end for kind of a group Q&A session. It's going to be awesome. It's going to be amazing. It is this Sunday. It's totally free. So bring your friends, bring your foes. We just need heartbeats in the room and bodies in the seats. And so I hope to get to see so many of you here this Sunday. So thank you, Paul. Bring us into the market, though. So now, just a quick little, a little something. The market's still there. S&P's up 13, right? You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product, technically speaking, up 101. You've got the boomers up 134, and then you've got the Russell 2000 futures index down 8 on the day. You got bonds down a little bit. You got notes down a little bit. You got oil up a little bit. Man, you got UB40 down. You got gold actually down today. Man, where are my Hunt brothers at? You got silver. Okay, the micro silver is up $1.50. So there's a little bit of a divergence between the metals. Again, you don't see that often, but it certainly can happen from time to time. Normally, they're going to follow each other. Normally, gold up, gold down, silver down. Usually, that's kind of what you expect to see on any given day. But they can certainly move away from each other as well. We see a pretty clear divergence here today in terms of, silver being up big and gold being relatively flat to down ever so slightly. So this is why I know a lot of traders, I know the research team has looked at things like the gold silver ratio and like trying to get a feel for, is it high? Is it historical average? Is it whatever? I've never really traded that before. I've never really put a ton of stock in that, which isn't to say you shouldn't put stock in that. In fact, you probably should if it's something that's not on my radar from just kind of a sight unseen fade Dr. J type of way of life. But when you look at like a gold silver ratio, that kind of gives you some idea around, where is gold relative to silver? Like, what does that correlation look like? What does that divergence or convergence look like between, the two metals that we're all kind of monitoring and trading? And so, gold down flat, silver up big, and then you've got volatility. Let's take a look at volatility here. Volatility, I think, is down a little bit today, right? You've got volatility futures down 20 cents, so down ever so slightly. Then you've got the VIX spot volatility down 25 cents. So cue the Santa Claus rally like it is here. You can't stop it now. It's too late. If you miss the mark, I don't know what to tell you, man. I don't know what to tell you. I'm pretty confident that we're going to see S&P 500 7,200 by the end of the year. I'm about 38 to 39% of it. 38 to 39% sure of it, I should say. And so, all right. So that is some market commentary. It's not going to help you too much, but it's already out there and we can't go back. And so I want to get to you guys though, man. Look at you guys in the chat. You guys are already blowing it up. You guys are already blowing it up. Don't forget, man, for the love of the algo. That's all you got to put in there. Now you mix it up a little bit. Like sometimes say love positive theta, hashtag for love of the algo, right? Love me some negative gamma, hashtag for love of the algo, right? You got to kind of keep the algo on its toes. And so we can't just keep feeding it the same cookie cutter comment. We got to mix it up every once in a while. But if you take a look at the portfolio here just briefly, again, there's not much to talk about. I mean, I'm going to find 7.5 minutes, but MES, MNQ, Home Depot, Starbucks, if I open all these guys up, man, we're struggling. We're struggling in terms of, the populace of the portfolio and the number of positions that we have on, but everything is working out okay. So I don't necessarily want to, force feed positions in here and kind of try to, square a circle when I'm like, man, we've got all these things coming on down the chutes. I mean, next week, if I'm not mistaken, we've got Uncle Jay on Wednesday. Is that right? We've got Uncle Jay on Wednesday. And you know what's amazing? Wow. So hold on, guys. I'm going to get you guys in just a minute. So this is awesome. So last FOMC, right? That's when we had a Wednesday 2:00 start, right? For the first time in like ages, because it was today's assignment with Errol, which was amazing, of course. But then with the shakeup with the schedule and all those kinds of things, like today's assignment just kind of went out to pasture. And now you guys get risk in return with Gus and E, which I think is an uptick over today's assignment with E and myself. But that meant you got from theory to practice at 2:00. And we did an FOMC print together. I remember it. I don't remember what happened, but we did it together. Well, now we are going to get to not do the FOMC print, but we are going to get to do the purple tie reveal together. And I'm not going to be able to watch it because I got to pay attention to you guys. I got to look at the portfolio. I got to look at the lens from time to time. And so you guys are going to have to help me out because 2:30 on the nose, the reveal is live. Now, look, I know and you know, we know it's purple. We know it's purple. I need hex colors. I need the hex number of the hue of purple that he went with. Is it dark, borderline gray? That's what I need to know. Is it light? Kind of could, kind of play itself off as a light blue? That's what I need to know. And so we're going to get to figure all that stuff out together at 2:30 on Wednesday of next week. So I want to keep some powder dry for that. And then also, if I'm not mistaken, do we have a Jobs Tuesday coming up on next week? We have a Jobs Tuesday, right? Man, Jobs Thursday, Jobs Tuesday. Like, I thought Jobs Thursday was about the least amount of feng shui-ness that you could ever apply to an NFP print. But man, we have now outdone ourselves. We are on a Jobs Tuesday. Like Tuesday, I'm expecting the Spanish durable goods print. Like, I'm expecting, the Canadian unemployment number to drop, the estimate, the revision, the forecast. I'm expecting all that stuff in the morning. But Jobs Tuesday, NFP for the United States of America on Tuesday, it doesn't feel right, man. It just does not feel right at all. But that's coming on down the chutes next week. So we've got NFP. We've got FOMC, we've got other things that are happening. And so there's no reason to kind of force feed the positions today. We're just going to kind of lay low. I mean, MES is working, MNQ is working, Home Depot is working, Starbucks is working, everything is working. I don't even want to talk about this anymore. Let's talk about you guys. And let me see where you guys are at. Man, I see you guys in the chat. Andrew Cortado in the house talking about the algo. That's what I'm saying. Thank you so much there, Andrew Cortado. I appreciate you, my friend. I see BDH in the house. Man, Don Duke in the house. Man, Cynthia is in the house. What's going on? iPod Touch in the house. iPod Touch emailed me right before the show to remind me of the Event Horizon on Sunday night. Because remember, guys, I got it on my sheets here. December 7th. I got it written down right there. iPod Touch said December 7th. That's Sunday. That's even Sunday. And so Sunday, iPod Touch Event Horizon. So what does that mean? That means the NASDAQ's going to gap down like 17 points. Right? And again, take your victory lap, Event Horizon. Like when that happens, iPod Touch, like take your victory lap because you've earned it. But yeah, that's coming up on December 7th, apparently. But man, I see you guys in the chat. Let me get to somebody. Here we go. I see an actual question. Well, I see two questions. So here we go. So Old Two-Face says, do we get wild blueberries at the event or no? I don't know what's on the menu. There are like snacks and stuff served. The food has been pretty good in both Boston and Detroit. I don't know what is actually on the menu, but it's going to be a nice spread. I mean, there's going to be food, there's going to be drinks. Like it's going to be incredible, which is always kind of funny to me to have like drinks like beer, wine, stoplights, stuff like that at an event where you're actually learning. Like there's actually like educational material like being presented. I mean, I'm not going to have any drinks for obvious reasons, unless I find myself, right in front of the banana daiquiri machine, then things might change. But generally speaking, that's not usually the direction I'm going to go on a night like that. But still, it's like, man, like with the educational thing, I think it's kind of fun. Like I think it kind of really kind of lightens things up and, it might make it difficult to pay attention to what I'm talking about. But I suppose that's secondary to kind of the drinks and the snacks. But that's all going to be there. Are they going to have blueberries? I don't know. We're going to have to find out. But then Scramble Everything says, let's see, Dr. Jim, when would you consider selling calls out against short puts that are about a 70 to 80 delta? When there is a certain IVR, put deltas get to 60, etc. This is a very good question. So thank you, Scramble Everything. This is a great question. And from time to time, we even address trading questions. So I felt like it was appropriate to go ahead and hammer one out right now. So when a put is deep in the money, so if I have, and I don't happen to have any right now, which is just dumb luck because I very frequently have lots of trades that are far, far, far underwater. So just wait and these will come next week, the following week, whatever. But if I have a short put on and it's gone in the money, 60 delta, 70 delta, 80 delta, whatever. This is what makes short puts so effective in my opinion. Because when that happens, you have a bevy. You have a plethora of alternatives available to you in terms of how you want to manage that position. Case in point, if you have a short put on and it's in a stock or an index that you feel good about, that it's like, hey, if it comes down to it, I'll take the stock, I'll take shares in the index, and I'll just ride the wave higher. I'll just ride the positive drift that has historically been proven to be quite reliable in the marketplace, and I'll just ride it for the long term. I'll just inventory the position. Sure, I thought I'd be out in like a week or two, but if it takes 6 or 7 years, it takes 6 or 7 years. Like, that's just the way that it goes, right? Well, that's actually a huge advantage to something like a short put, especially in like the major market indexes, SPY, QQQ, etc. So remember, scramble everything, and everybody else for that matter, when it comes to, different situations with a short put, you always have in your back pocket, the option to hold the shares and just play it higher. Okay. What about adjusting the position though? So what about adding something to the actual trade? Okay. I don't necessarily have a specific delta. I don't necessarily have a specific level where I'm like, okay, this is where I like adding a short call to the short put to create a strangle and kind of neutralize my directional bias. But the way that I typically think about it is, if it's something that I don't want to hold long term, if it is something that I'm not comfortable, kind of riding that historical positive drift wave higher on, then that's when I'm going to say, all right, my first move here is probably not going to be to do nothing. My first move here is probably going to be to add that short call. Well, actually, let me retract that. My first move could be to roll out in time, and then my second move would be to add the short call. It kind of depends on where I'm at on the cycle. I'll get to the delta part of the question here in a second. But if I'm 35 days or higher, meaning 35, 38, 41, 44, etc., my first move is probably not rolling out. So just to give you guys kind of like a clear, somewhat clear, like it's still somewhat fuzzy, but give you guys kind of a reference point in the sand for how I look at it. If I'm under 35, that's where I'm kind of like, all right, I'm pretty close to rolling this out anyway. Let me roll it out now because I'm tested. My deltas are growing. That alone is going to help to kind of soften the delta exposure on the position. So I roll that guy out in time, and that brings in credit, widens out break evens, and softens the deltas. So that's all good. Okay, now what about adding the call? Well, this is where, it kind of depends. Like, if I'm still in the same cycle, so if I'm at 35 or 39 or 42 days to go or whatever, I'm not going to roll it out in time. This is when my first move might be to add that short call. Now, what kind of short call am I going to add? Well, I want to make sure that I have some distance between the two short strikes. I want to create a traditional strangle. I want there to be some region where if the stock lands inside those two short strikes, I'm going to be in a really, really good spot. And so that's kind of how I'm looking at that. And I'm thinking, all right, let me try to, keep that region as wide as possible while still picking up some credits and giving me something that kind of makes sense. Now, how many deltas am I typically looking at when it comes to, when do I know that it's time to maybe make that adjustment? 50 deltas is when I start thinking about it. Because remember, a 50 delta, that's when the strike has been tested, right? The strike has been tested at 50 deltas. So at this point, I'm kind of thinking, all right, this is when I might begin to think about making an adjustment. Now, a lot of times for me personally, I'll wait for even the break-even point. I'll wait for even the break-even point to get hit before I layer on any type of adjustment. I don't really look at the deltas. I actually look at the break-even point. So sometimes that could be a 55 delta. That could be a 65 delta. It's probably not going to be like 70 or 80. That's probably a little bit too far gone. So somewhere between 50 to 65 is probably where I would be looking to potentially make an adjustment. Again, assuming I'm not comfortable inventorying the position. If I am comfortable inventorying the position, then all bets are off. Like now, all of a sudden, I might ride it in the money for a little while. Kind of like we did with Chipotle. We did this exact thing with Chipotle just recently. And obviously, we got completely crushed on that position. But it doesn't change the fact that going into it, I was okay holding the position, inventorying the shares if need be, and which is exactly what it ended up coming to. And that's just an important distinction to make on order entry. And then the last thing I want to say is if I'm in a situation where the put has been tested, and I'm at 50 delta, 55 delta, 60 delta, what have you, and I'm under 35 days to go. So I'm at 30, 27, 31, whatever, and I roll out in time, I may just roll out in time and just leave it right there and not add the short call yet. It kind of depends on how directional you want to be. Like some traders like being directional. Some traders don't mind being a little bit bullish, a little bit bearish, and I'm kind of one of those traders. A lot of other traders much prefer to be mostly, delta neutral most of the time. And so if that's the case, then obviously kind of neutralizing the directional bias, when it makes the most sense to do so, it's going to make the most sense to you. And so if you roll out in time, you may also want to add the short call because now you're bringing more extrinsic value into the trade. Now I'm even widening out my break-even points even more than I would be if I just rolled out and held the short put. So that's a lot, obviously, but those are all the things that I consider when it comes to, a short put that's gone in the money. And now what do we do next? And so hopefully that helps you a little bit there, scramble everything. And so, all right, so let's see. If we do, let's see. Where are we at? tastylive.com coming up huge with the events page in the chat. That kind of threw me off. I'm like, is that my comment? No, that's not my comment. All right, so where are we at? Let's see. Oh, Tasty Live coming up clutch with a couple of comments. Oh, there we go. Okay. Org Denu's in the house. What's going on there, Org Denu? I appreciate you. I'm all the way back to the beginning now. Hope you have a great show on Sunday, man. I'm so excited. I cannot wait. Last show of the year. Like, it's going to be awesome. We're going to go out guns blazing. Like, it's going to be terrific. Like, I can't wait. And so I'm excited to get to see and meet so many of you guys on Sunday night. It's going to be amazing. Sam L says, what better way to wrap up the week than with our most underappreciated national treasure? Man, I appreciate you, which is an amazing movie, by the way. National Treasure 1 and National Treasure 2, amazing movies. I've heard whispers that there is a National Treasure 3 that should be coming out. I don't know, maybe this year, maybe next year. I think they started production on it, but then stopped for some reason. And I'm like, man, like y'all sleeping on Nicolas Cage. Y'all been sleeping on him for years, for decades. I mean, Con Air. Come on, man. Is there anything more iconic than Con Air? I don't think so. I mean, maybe The Rock, right? Maybe Raising Arizona, right? But I mean, Con Air, like it's up there, man, in a league of its own. And so I appreciate you there, Sam L. Thanks for all your hard work, Doc. Even the B- humor deserves an A+ today, man. I appreciate you, man. Look at that, Sam L. I appreciate you. I'm gonna send you that cash that we agreed upon for you putting that in the stream. So thank you, my friend. Brian Dowdy in the house. Hello, Dr. J. Looks like I didn't let you down with snow and Okta. That's right, it's Okta, if you were ever curious. Make sure you share that as far as the eye can see. Our P&L year-to-date probably looking good even after the Oracle and Chipotle debacle. IVE is a bit low, having a hard time finding new trades. Yeah, IVE, I think you mean IVR, is a bit low. I know, we've got volatility. Yes, I mean, we've been on a nice little run here, and it's kind of like, are we about to hit a little bit of a hot streak? Are we in the middle of a hot streak? Like, I don't know, man. Like, could it be happening? I don't want to say it out loud, but it's already out there. And so there you go. But yeah, volatility right now is very low. I mean, relatively speaking, the VIX is still 15.5. I mean, don't forget, it can go to 13. It can go to 11. Don't forget, 2017, it got down to 9 or like 890 or something crazy. Like the S&P 500 would have like a 3-point range the entire day. Like it was just bid-ask bounce like all day long. And so, yeah, volatility can go lower, and it wants to go lower because it wants to grind lower as the market grinds higher. I mean, there's mathematical reasons for this. There's intuitive reasons for this. I mean, that's why when you look at a chart of the VIX, and I know I've brought this up so many times, but there's so many new people that are finding our show all the time. So if you are brand new, hey, welcome to the show. I really hope that you stick around. Whether it's my show, I'm a bit partial to this program, or a different show on the network, that would obviously be amazing as well. But if you look at, we do like a 1-year chart of the VIX. I mean, just scroll back. I mean, again, you can see. I mean, what do you see? You see huge spikes, right? And then it's just living. It's just living on the lower end of the range. It's living here. It's living here. You got a little spike right back down. You got a little spike right back down. You got a huge spike right back down, right? Which again, I'm not even sure that counts. We have to check with VIX HQ and the interns over there because sometimes they mess up the calculations, and we're not allowed to use the VIX prints. Like last August, like we were not allowed to use that print, and that's just the way that it is. And so, the volatility here just wants to live on the lower end of the range, and so being 16, 17, whatever. That's going to be, a situation where it's not as high as we would like. It's not as opportunistic as, a 19 or 21 VIX, but it still is not 12 or 13. Because if I go back here, let me actually show you guys. So if I go back to, let me see here. Let's do let me do a monthly chart, and let's go back daily on the monthly chart, just to show you guys really quick. It was like 2017. Yeah, look at this. Look at this. Look at that range right there. Each one of those candles is a month. These are not the Errol Coleman settings. These are not 2-minute bars. That's a month. That's 30 days, right? Day in, day out. You get up, you go to sleep. You get up, you go to sleep. That's a long time for one bar. Look at how many bars in a row you've got of the volatility index right around, what, 10, 11, 12? Like a couple of like tiny little blips up into like the teens. But like right here, like if I go down like into the lows of the lows, I think it got down under 9. Hang on. Okay, so there's 911. Look at, oh my goodness, look at that. Oh my word. Look at that. I'm going to hang right there. November 1st, 2017. The low on the VIX was 856. Look at this. It's on the screen. This is not my opinion. It is on the screen. It is objective truth. This is not my opinion. 856. You think 1550 is bad? Oh, it can get worse. Oh, it can get a whole lot worse. And so let's all be thankful that we have 15 or 16 to trade right now, because it could be, man, much, much, much worse. And so anyway, it is tough to find trades right now, but hey, go spend time with your friends. Go spend time with your family, right? Obviously, next week we have the 12 trading days of Christmas, or the 12 days of trading or whatever, which is going to be super fun. And so maybe spend time with your friends and family after that. But for right now, I respect the fact that we have, I'm not even sure if I was supposed to say that yet, but it is coming out next week, which is going to be super fun. And yes, right now it is tough to find trades, but we have to make do with what we got. It's like they always say, you can't trade the market that you want. You have to trade the market that you have. And I still have no idea what that means, but it felt right to say right there. And so there you go. So we got Theta Trader in the house. Dr. GM, some trickster pulled a stock split on XLE. Oh, really? My P&L data is all cattywampus, and the option strikes are all jacked up. Who did this? I mean, it was probably Vinny. I don't know if XLE are the Vinny pits. They could be. But XLE, oh, it's 46. Yeah, that feels wrong. Was it like a 2-for-1? Just a standard 2-for-1 split where it was like, I think it was like 80 or 5 or 90, right? And so now, like, you go into the option chain. Like if I go to XLE and I go to January, oh, that doesn't look too, but you said XLE, right? Yeah, XLE, those strikes don't look too weird. I mean, they're just half point wide strikes, which is pretty standard. Let me go into like maybe December has something janky. Let's go into December. Yeah, I mean, you got quarter point wide guys now, but that's still normal for XLE, right? Doesn't XLE normally kind of finally make its way into quarter point wide strikes? Or maybe not. Maybe this is because of the split. You don't normally see quarter point wide strikes, so this could be a split consequence. And if that's the case, just don't forget Theta Trader. And I know that you know this, but for everybody else that might be watching, if you carry a position through a split, just understand that your risk has not changed, especially a regular stock split. Reverse splits can be a little bit different, but a regular stock split, and reverse splits typically only happen with like UVXY and like the volatility products. You're not going to see a reverse split in like the NASDAQ. You're not going to see a reverse split in like, Snowflake or whatever. You might see one in Wolf, but usually it's a volatility product thing, or maybe like a Wolf thing. That's pretty much it. Maybe Snapchat might reverse split, but with a standard split, remember that your risk is no different. Your overall risk on the position is no different. The strikes will have changed. The contract sizes will have changed to make room for the new stock price and the new strikes and what have you. But your overall risk on the trade is unchanged. It is unched from before the split. So as long as you don't go in and start janking around with certain things, then you're going to be okay. And so hopefully that helps a little bit there, Theta Trader. Sam L's back in the house. Hey, Mr. Algo, guess who's the only man who can work this hard and still get faded by his own trades? We appreciate you, Doc, man. I appreciate you. Appreciate me. And yeah, don't look now, but I think we've hit a few in a row now. Like, you got to be a little careful. We might be onto a little bit of a heater here. And so we'll have to see how next week goes. Paul Heyman, if your father-in-law has been long Tesla from 2010 when it was $2 per share, I don't think he got in that early. It was early, but I don't know if it was $2 per share early. Then you should be short Tesla puts indefinitely. Yeah, that's pretty funny. If I go to Tesla, let me bring up a chart of Tesla. Yeah, let me do like a monthly chart's fine. Let me go all the way back. I don't know when he first started buying Tesla. I'm not sure. It wasn't, wait a minute, 2016, 2017. Oh, this is all split adjusted. Yeah. So it's a little bit different. I want to say, I think it's been at least 10 years. I think it's been at least 10 years. And so I don't think he got in at 2, but he may have gotten in, in the teens, a little beans in the teens for you guys. He may have gotten in at like 17 or 18 split adjusted. Like, I don't know. And I know he has a lot of shares. And so, I'm just saying, like, I'm just hanging around, man. I'm just hanging around, and I'm just happy to be a part of whatever it is he's got going on. Again, like somebody asked me the other day about who my investing hero is, and it's him. Like, because it's so cool for me to like have somebody like in my family that has done so well investing. And of course, I would like to think I'm on the same track, but he's like 30 years older than me, right? So, I mean, his investing career has already kind of, it's not over, of course, but it's much further along. It's more, what's the word I'm looking for? It's more solidified. Let's say that. That's the word I'm looking for. And so it's like he's had an amazing run. And so, yeah, it's been really, really cool to witness. And I love talking. I'm going to see him tonight, actually. You know what's so funny? Oh my gosh. So this is hilarious. So he was traveling the last couple of days. He actually injured one of his toes. He injured one of his toes. And who did he call? He called me. Who did he text? He texted me. And you know what he said? I should read you guys the text. I don't have my phone on me, but he said, "Hey, I need your toe guy." And I wrote him right back. I'm like, "I got your guy. I got your guy." How many people do you know that have a toe guy, right? You probably don't know anybody other than me. And so he texted me. He's like, "Hey, I need your toe guy." So I sent it to him. He's all squared away, gonna meet with the toe guy. He is gonna set him straight, no problem. He'll have the best toes you've ever seen, other than my own, of course. And so it's so funny when you hurt his toe. I mean, that's not funny, but the fact that I've got a toe guy on speed dial, that's a little bit funny. And so but thank you there, Paul Heyman. Wolf is in the house. It's Dr. Jim time. Let's go. Man, the extra long Q&A sessions they're a little bit more off the reservation than even a typical show. And a typical Friday show is pretty far off the beaten path. Stephen Bivens in the house. What's going on there, Stephen Bivens? Dr. Jim, I've been having success with selling a bit more delta on stocks that have dividends in the cycle. Is this crazy or genius? No, it's not. No. I mean, I think you're taking advantage, because remember, any dividend payment that's going to be paid by that stock, it's going to be factored into the option prices. And specifically, it's going to be factored in to the put prices. Because remember, when a stock pays a dividend, what happens the next day? The next day, if we lived in a vacuum, in isolation, the stock would fall by the amount of the dividend. Right? And so the stock price would go down by the amount of the dividend. Now, we don't always see that, because remember, there's so many confounding factors that might be impacting a given stock on a given day. And so it's not just the dividend payment, it's the macro stuff, it's the micro stuff, and the countrywide stuff, the globally wide stuff, the, company specific stuff. And so it's always hit with a layer upon layer upon layer of different factors that impact the stock price. But in isolation, in a vacuum, the stock price would drop by the amount of the dividend. Okay. Well, if the put prices did not account for that, then what would that lead to? An arbitrage opportunity for, put buyers, essentially. You buy a put, and if the company just paid a 60-cent dividend, you're going to get a little 60-cent Kickstarter, kind of to that long put the following day. And so what can you do to potentially take advantage of that? You can sell that put. You can sell that put by picking up that premium. Now, is it all just strawberries and sunshine? No. Is it a situation where for every gimme there's a gotcha? Of course. Because again, remember, the stock is going to drop, which is going to essentially work against that short put. And so it all evens out. Like, I don't think you found something that is, necessarily in the genius category per se, but I like the fact that you're like, hey, you said I'm selling a bit more delta on stocks that have dividends in the cycle. Is this crazy or is this genius? I thought maybe you mentioned that you don't mind owning the stocks, but you didn't actually say that. If this is a stock that you don't mind owning, which I think, Stephen, you've done some of this before. I think chatting with you in Detroit, I know we talked about this a lot with selling puts and things of that nature, but I hope I'm not misrepresenting your position completely. But, when you're selling a put, and again, if you have that in your back pocket where it's like, hey, I'll take the shares if that's what it comes to, that's just an incredibly powerful thing. That is an incredibly, incredibly powerful thing. And so I like it, man. Like, you're selling the puts on the stock with the juiced up premium as a result of the dividend. And so if the stock is able to overcome the dividend payment and continue to push higher, then you get paid even more. Like 100% get paid even more. So I like it, man. I like it a whole lot. So Cynthia's in the house. Happy Friday, Dr. Jim. What's going on there, Cynthia? I appreciate you, my friend. Thank you so much for being here. I really, really appreciate you. Old Two-Face back in the house. Hey, Dr. J, what is your cut meal of choice? Sans applesauce. That's going to be tough for me to answer without applesauce because you know that's my go-to. I need some inspiration. Thanks. I'm kind of a creature of habit. So I have like the same lunch almost every single day, pretty much every single day. I have Daddy's chicken, of course, with onions and barbecue sauce. Now, sometimes if I don't have time, I can't make the onions or I don't have any that have been made like a couple days before or whatever. So sometimes it just ends up being chicken and barbecue sauce. And then I have oatmeal, peanut butter, and blueberries, of course. And so that is my staple lunch. And I'm a fan of, rather than giving you a specific dish, I'm a big fan of find 2 or 3 dishes that you really like and just have them most days. Like there's nothing that says you can't do that. There's no rule against just kind of running the same menu most days. It makes it a lot easier. You don't have to think as much, and it just allows you to kind of hit different macro targets a bit more easily, in my opinion. So I would just pick something you like potentially, hypothetically, tuna fish and applesauce, but I digress. It's totally your call. And then I would just run that, a couple times a day. I think that would be, I've had a lot of success with that type of strategy myself. And so N1C in the house, Friday, best weekday. Yes, I appreciate you, my friend. You are 100% right. Scramble Everything says, I had my blueberries and my coffee. That's what I'm saying. And I just made it to the Dr. Jim Power 3/4 of an hour. I showed up for the USA Trade Idea to Fade. That's next week, man. That is 100% next week. Because again, we got Jobs Tuesday, which again, that's like redecorating your bedroom. And starting from scratch and saying, all right, let's put the bed in the middle of the room. It's perfect. Why would we not put it right in the middle of the room? That's where it belongs. That's what a Jobs Tuesday feels like. And so anyway, hopefully, we can still trade it. But yeah, you'll get all the fadeable trades next week. Don't worry about that. Same out. Quick question. Is the iron condor supposed to fly, or is it normal that every time I place one, it crash lands straight into max loss? That sounds like a Dr. J problem right there. Iron condors I've been very clear about this. It's not my favorite strategy. Right, because I think there's a lot of friction. I think it's more difficult to make money than people realize. I love it as a beginner trader. I love it as a way to learn how to play the market from a neutral standpoint. But once you get your feet underneath you and you gain some experience, you get some exposure, maybe the account size supports it, whatever, you've got to start going wider iron condors or even into strangles. I think that's going to make a lot more sense for a lot of people. But yeah, it's the crash landings. I can't help you with that because I have the same problem myself. And so Margin Walker, what up, Dr. Jim? We appreciate you, my man. I appreciate you. Appreciate me, my friend. Let's see. Oh, Samuel, just showing love to the underappreciated Dr. Jim. So the YouTube algo thinks we're a fan club. There you go. That's what I'm saying. Let's keep the chaos coming. That's right. Again, for the love of the algo. That's all you got to put in there. That's all you have to do. In fact, you should just have it sitting on a Google Doc somewhere and just copy and paste. Just copy and paste. Every once in a while, mix it up, but you don't have to go crazy with it. And so I appreciate you guys. Ranch in the house. Good afternoon, Dr. Jim. What's up there, Ranch? Bogus Families. Happy Green Friday. Selling some calls in Mew? No. Isn't that Micron? Micron? Yeah, look at Micron. Micron's crazy. This was I remember when Micron was 20. Yeah, here we go. I remember back here. And now I've got Micron up to 237. Yeah, I'm not touching that with a short call. That's a Nick Batista trade right there. Let me risk 30,000 to make $80. That's got Nicky Batista written all over it. So I'm going to let him do that one. And I'm going to pass, my friend, but I appreciate you. Adam Armfield, will there be shuffleboard at the live event? I don't think so, but maybe there could be shuffleboard. There could be blueberries. You just got to come and find out, right? You just got to be there to experience it for yourself. And we'll all find out together. But John Covington, the Tuna Fish Friday leading right into the applesauce Sunday. Tampa options crash course. I see what you did there. That's pretty good, my friend. That's pretty good indeed. Let's see. Edward Lon says it's never too late. That's correct. Scramble everything. Oh, yeah, there we go. There's the surprising delay from the beginning of the show. So Don Duke in the house. Hey, Jim, we look forward to seeing you Sunday, man. I look forward to seeing you too, my friend. And it's going to be awesome. Can't wait. It's going to be terrific. And yeah, again, it's not too late. Sign up. We need heartbeats in the room, man. We're just counting heartbeats. And so please come out if you can. It's going to be great. Let's see. Cynthia says, my options teacher, Junior Batista, said he will be in your live course in Tampa. I remember Junior. Man, it's been a minute. Oh, man, Junior is a great guy. Oh, man, you have found yourself. So, Cynthia, you have really lucked out. So I can't wait to reconnect with Junior on Sunday. It's going to be awesome. So you have totally lucked out. not only do you have an amazing guy to help guide you, but you have an amazing options teacher, like a very knowledgeable options teacher. So that's an amazing combination, and that's so cool. Be sure and tell him I said hello, but it sounds like I'm going to be able to tell him myself on Sunday night, so that's some good stuff. iPod Touch in the house. Everybody remember, December 7th, this Sunday, the NASDAQ is going to gap down about 11 to 12.5 points. Sam L. says, Doc, with that new Infinity, no, I don't have it yet. My father-in-law is hanging on to it, which is like, man, I was kind of hoping I might get that Infinity, but not yet. He's still hanging on to it. And so I'm going to have to go with the Vespa, I think is my backup plan. But Sam L. says, I bet the 20-minute ride to Tampa felt like a full Fast and the Furious edition. No, I'll be taking the Pathfinder. I'll be taking my wife's car to Tampa. Let's see. Oh, Theta says the splits shouldn't really matter, but I had a range in my mind and now that's inaccurate. Yeah, that's what makes it tricky. But I suppose with double tranches, I can sell options against part of the position instead of all. That's true. You can do what's called an underlay, right? So you have, like if you have 100 shares of something, you can't do an underlay because every option contract is for 100 shares. So it has to be either equal or an overlay where you sell 2 options against like the 100 shares or whatever. But if you have 200 shares because of the split, now you could just sell 1 option. So now I'm only essentially, covering half of the notional value with the premium. That's called an underlay, and it can be a really effective strategy because you have kind of the benefits of both worlds. You have the premium coming in from the option, so you get, the volatility contraction, the positive theta, all the things we talk about every single day. But you also have the unlimited exposure to the upside or downside. I imagine you must be to the upside, being the split and such. And so that can be really, really nice, of course, if XLE does really, really well and it keeps moving higher. And so, yeah, underlays can definitely be an effective thing. John Cummington, when does Tasty start scheduling live events for 2026? I don't know, but I think it's going to be soon. I think we're going to start having meetings about it maybe as early as next week. And so I would imagine, if I had to guess, early 26, you'll start seeing like promos and we'll all start talking about it on the shows and whatnot. And I don't even know if I've made the roster yet. Like there's going to be tryouts, of course. And so if you guys want to be, thinking about me and praying for me during these tryouts, I would strongly, strongly appreciate that. And so, yeah, so we'll see. But let's see, Scrum everything. When is the most opportune time to convert from longish hair to to full on mullet? It's so funny. Like I read through some of y'all's comments, and some of them kind of have like an M. Night Shyamalan feel to them. Like I think they're going in one direction, and then they didn't go in that direction at all. And so this was kind of like that. And yeah, I don't know, man. But like I said, whenever I do make the switch, whenever I do, finally decide to go from long hair back to medium or short, we're doing a mullet kind of, way station. We're doing a mullet pit stop for anywhere from 1 to 14 months, and it's going to be super fun. Like, I can't wait. Let's see. Reeb Meyer in the house. Hey there, Jim. If back month vol is lower than front month, should you roll with 21 days to go? That's a great question. That's a really, really good question. Okay. So if we're I'm just about done. Let me answer this quickly. So if back month vol is low, that's not the best situation to be in. Normally you want kind of the higher volatility so you can roll into the higher volatility and pick up more credit for having done so. If that relationship is flipped over, should you then not roll? And the answer is no. Meaning you should still roll because, and I talked about this yesterday, actually, at the beginning of the show, talking about kind of why we manage at 21 days to go. It's not because of vol differences. It's not because of front month vol and back month vol. It's because of the gamma risk that is, kind of picking up steam near the end of the position's life. Now, if you want to wait a little bit, you can wait to 14 or whatever. I think that's totally fine, but I wouldn't necessarily not roll because of the vol differential. I don't think it's worth it, in my opinion, for what you're losing out on with the directional exposure with the gamma and things like that. So, all right, guys, I got to run. I got to go. We got to get you guys to Tim Knight. But if you guys, if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned because we do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and I'll see you guys Sunday night at the Options Crash Course Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, happy Friday, everybody. Tim Knight here, and well, what's the market doing? Not too much. ES is up 0.18%. Maybe after the FOMC next week, things will get a little more interesting. It remains sort of like stuck in the muck at the moment. I am short in various and sundry ways, although I continue to be a believer in Palladium, PALL. And our friend Rivian's doing okay, so we'll look at him in a sec. But on the whole, I'm short. And the picks aren't bad. Like, for example, one of my portfolios has 10 short positions. 8 of them are down right now, and 2 are up a little bit fractionally. And that's you know, if the market was down, then it's like, so what? But the ES is up, the NQ's up triple digits, so not too bad. They're defying the trend, which is really all I ever ask. And let me reset this chart system here. I've got some charts loaded for you once they come up, and we will dig into those starting right about now. Let's do that. We're going to start with the spider. What's the spider doing? It is tapping its broken trend line from beneath day after day, all week long. Look at this. Tap, 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 tap. Pretty impressive, isn't it? That one simple line has hemmed in the market, even though it's up every single day. And the lifetime high remains intact back on the 29th of October. But we broke this line, and as I say, after this rather dramatic drop, which I guess was the post-NVIDIA excitement, it has been pretty much just up, but the trend line is respected as resistance until and unless it busts above this line, its former high, to shove away the trend line as well as the former record, because new highs tend to beget more new highs, and vice versa, because either everyone's a winner or everyone's a loser, and greed and fear kick in based upon those circumstances. But you know, we only have 2 full weeks of trading left, and I haven't counted, but something like probably 15 or so trading days for the whole year. You are going to have to wait, and we'll make the most of them. But I'm afraid that until the FOMC is done, we're all just going to be kind of looking at each other, waiting. The IWM, the small caps, these are down a little bitty bit. Things are very, very slow and dull lately, as I've said. We almost perfectly tagged. This was the lifetime here back on October 15, and we've pretty much matched it yesterday and today. That lifetime high is being respected, and as we let me adjust this just a skosh. We've been below this broken trend line for months at this point, but again and again, the market has tried to beat that former high, and it's unable to do so. Doesn't have much motivation right now, but it is trying, and it's been pretty much on a nonstop tear since that brief post-NVIDIA slump that we had. The small caps have been especially potent. And over in Techland, the cubes, those are actually up, not quite 0.5%. But here again, lots of smoke, not much in the way of fire. Just as with the other items, we're trying to make lifetime highs and couldn't. In this instance, it's trying to at least get above the gap. Couldn't do that either. The lifetime high itself was back also on the 29th of October. The gap was established between the 3rd and 4th of November. And in all these weeks and all the ups and downs, it hasn't beaten that gap yet. Today's the closest it's gotten. Today's high was as close as it's ever gotten since then to sealing it, but didn't quite do the deed. And so that gap remains as resistance on the cubes. One tidbit of excitement that happened earlier today had to do with Netflix. Because they announced they were acquiring Time Warner and HBO and just a major media purchase. Couple of comments on that. First of all, from a charting perspective, I had pointed out a couple of weeks back about a channel failure. Now, let's see if we can rough out a channel for you. If not, I'll abandon it, but let me just take a look here. That's a Fibonacci channel. I'm not going to learn while you're watching me here. At some point, you might just have to trust me with it. So instead, I think what we'll do is just draw a ray and forget the channel for now. So the ascent, which began way back at the bottom of November 2022, has been something like so. That's not bad for a quick rough shot. Let's tweak this just a hair like that. That's not bad. I'm a bit of a purist. The fact we dipped a little bit below bothers me, but I don't usually use this particular platform, so that's okay. It'll do for our illustration. So this uptrend has been in place for years, and it broke right around here, October 22, and as it should, there was a role change. It changed from support, which it had been for years, to resistance. So we broke it, made a leap forward, nope, resistance, repelled. Another stronger leap forward, nope, bang, right there, twice to the penny. And keep in mind, I just threw this down very haphazardly, barely knowing what I'm doing with this particular platform, and it still works. So we were repelled twice, and then we started to go down. Even with this biggest news of the year in the corporate world, the market's just kind of rolling its eyes. It's been red and green today both, but at the moment, the stock's down 2 2/3% because that broken channel means a lot more than this announcement. The other thing I would point out for those of you who have been trading a while is that, like me, you probably recalled the late January 2000 announcement about Time Warner getting acquired by a high-tech company. Instead of Netflix, back then it was AOL. And it was that basically was the millisecond of the top of the internet bubble. And it's been pointed out as probably the worst merger in the history of business. I am by no means saying this is a repeat of that. It's just kind of evocative in terms of an analogy. The parallels are pretty stark because, I mean, it's not even roughly the same industry. It's the exact same company being bought by a tech firm. It's just that AOL doesn't exist anymore. So they're being bought by somebody else. So just saying. So that's Netflix. Over in Bitcoin land, it continues to wither away. My 98,000 is still a firm line in the sand for how high it might go. Maybe it will, maybe it won't. It keeps running out of gas here because keep in mind, again, the Bitcoin used to be just tied at the hip to the cubes. If tech went up, Bitcoin went up and vice versa. Today, the cubes, I mean, at this very moment, they're triple digits, green. And Bitcoin is down thousands of dollars, over 3%. So Bitcoin's kind of finding its own way. And this continues to look very vulnerable in spite of ungodly amounts of political support. And it's worth noting. I would also say that strategy, MSTR, merits continued observation. Bitcoin's down 3%, no surprise. MSTR is down about 3% as well. And a call I made back in mid-October, I want to say, has worked out nicely. This is DeFi development, DFDV. And the reason I made this particular prediction was based on a very simple right triangle pattern. And so there's the base of the triangle, and the other line that defines it was like so. And as you can see here, around about, late in October, interestingly, the peak of the market in general, on October 29, we slipped below that right triangle. And since even that event, it was just over a month ago, down 50% plus. So that's pretty cool. And looking at the chart, it has really nothing holding it up. There's precious little support after this point. So if you told me this was going to be a penny stock next year, I'll totally believe you. Absolutely plausible. So yeah, yay charting, another victory. As to the stuff you can actually hold in your hands, gold is still wondering what to do with itself. This week has been really dull for gold, and it duller by the day, but at least it's holding steady. I'd rather have something holding steady than like plunging like Bitcoin, but it's kind of looking for its next reason to move higher. It's kind of positive that it's been drifting sort of flat like this as opposed to selling off. It also doesn't hurt that silver continues to strengthen. I mean, silver, I remember I bought some years ago this giant brick of silver. It was like 1,000 ounces. And back then silver was like $7 an ounce. It could be 10 times that much in a year or so. We're already tickling the $60 zone here. So it looks like a very close to a lifetime high close for silver itself. And with all this going on, the miners have been pretty steady this week, but these are gold miners. So with gold not doing too much of anything, they're just kind of hanging out above 80. My own obsession continues to be palladium, which I think / hope will be, everyone will sort of look in that direction and say, hey, we forgot about that one. Because palladium, as good a year as it's had, has kind of been left out in the cold. It's not having the glory that silver and gold have been having. And as a chartist, I like this one way more than the others. I think the ratio charts and its own behavior speak to kind of the one that's going to play catch up. Like I say, I certainly hope so. So we're near the top of this range. If we can break out of that range, if we can get above, I don't know the exact dollar figure here, but something like 135, that may finally release the pent-up energy in this and get things cooking. Some other odds and ends on the short side. These are a few that continue to do nicely. Here's Brandywine, BDN, which, as I've said before, cheap as it is, you don't have to just short $300 stocks. I mean, it's all about the chart, and this one just keeps slipping lower. So BDN continuing to do well. Cipher mining, CIFR, is down about 1 2/3%. And in this instance, it's kind of jumping the gun on the pattern here. It hasn't completed this pattern, but this might turn out to be a very nice head and shoulders reversal pattern. Cigna, symbol CI, much better known than the likes of Cipher. Cigna is continuing to look good. In fact, as we look here, the past 6 days, red bar every single one of those 6 days. And this is obviously a large, heavily traded company. And I think that its long-term pattern looks really terrific as a long-term hold on the short side. Weirdly, my best percentage gainer over the life of the holding on the short side is Oscar, OSCR. It's down about 2.5% today. And this was, as I pointed out, this failed bullish breakout. This should have been a really great long-term long position, but let's try to sketch this out here. So let's draw that, and then sort of like so. Okay, that's not terrible. And in this instance, it was shaping up to be a really nice breakout, and it flopped. It lost energy. Oops, there we go. Come on. It lost its energy, and the real break was down here. And we talked earlier about roll change, support becoming resistance. Shapes do that as well. And so this isn't a perfect illustration, but we broke here. We did rally, but pushed up against that pattern, and then blah, down we go. And so this barrier here, this force field, if you will, is acting as resistance to it. And I think this is quite vulnerable to lower prices. And like I said, so far, the best percentage performer of any of those shorts. Another larger, better known stock whose long-term pattern I really like is Progressive. I think I described it yesterday as my favorite of all the patterns I'm looking at. This is down again today, 1.52%. It is a beautiful, very well-formed pattern, which extends back for a good 15 months. So that's not bad at all. And we've had a pretty good week here today, especially slowly slipping lower on this one. One other one here, Arthur J. Gallagher, AJG. This is down today about 1.61%. And as you can see here, kind of the same idea. We had a bunch of overhead supply. We fell hard, rallied, bumped our head against that overhead supply, and since then have been slipping nicely. So we're down about $20 from that conk on the head right there. One last from the short brigade here is Vistra, VST. Good day on this one, down about 5%. And let me take a moment to kind of highlight the distribution top on this one. That's not too bad. And that's shaping up nicely as well. Yeah, you can see how clean that is. So all in all, some really good stuff going on. As I mentioned earlier, Rivian has had, I think it's like the 10th day in a row of a green bar. And I'll just say it again, what's vexing about this is that every time it looks like it's off to the races, it just limps lower. Maybe it'll be different this time. They are having, I think on Thursday of next week, a product discussion and announcement talking about their own self-driving. But I can say for the past couple of weeks, it's definitely been doing quite well. We've moved from around 14 to over 18. So Rivian's doing quite nicely. So just to wrap things up, we just have a few moments left. You know what? Since next week is FOMC, let's just end with the ZB. Let's end with the bonds. And I'll say what I said yesterday on this. This is not looking bullish for bonds. It's looking pretty scary for bonds. And after a multi-year bear market in bonds, that's not what they want to see. But this recently has hammered out its own very well-formed head and shoulders reversal, which is not at the top of anything. It's in the context of a long, grinding bear market. And what I think we may see here is that you should not count on the long-term interest rates, the 30-year T-bond type rates going anywhere but either sideways or up, as opposed to plunging, which is what some folks want. So that's looking pretty bearish for ZB and also, of course, DLT. Okay, that is the end of the week. Thanks for coming by. Have a good weekend, and I'll see you on Monday. Bye-bye.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Jamal, we are back. We're here to finish up the day, finish up the trading week. This is last call. How you doing?
Doing well, Chris. It is the last call. It has been a quiet yet somehow eventful week in a way, but seems like we're ending on a low point here, just as far as how quiet it's been today.
Yeah, it looked like we were getting some upside traction in stocks before, but as the day has moved into the second half of the session, things have petered out a little bit. Volatility has stabilized. Jamal, as we take a look around the market here right now, just a real quick jaunt around stocks, S&P 500 up about 0.2%, the NASDAQ up 0.41%, your Russell is off by 0.4%. In the bond market, that's where there's a lot of pain today. And in fact, there's very strong volumes there on the future side of things, according to our man behind the computer, Frank here. We see that there are lots of bond options traded today with puts way over calls, 82,000 versus 14,000 comparatively, barely a million SPOOs across the deck. Gold prices down a little bit, but silver prices, copper prices are up in the metals space. That really hasn't changed over the past hour or so. Likewise, when we look at energy, oil up, natural gas, very strong today, although coming off the highs a bit, still up 4.2%. The world of currency, the dollar slightly down. In terms of our top movers, we go over to our liquidity high options volume watch list on the platform here. No doubt we see NVIDIA, a Tesla, an Apple. But I do want to start with the volatility of this all, Jamal, because that to me is the most interesting thing now. We have a 15.38 on the VIX. We have a volatility futures curve that's very much in contango. Front month, back month spread is nearing 7 points, as it were. Does the market feel a little complacent heading into a Fed week next week?
Yeah, I mean, it definitely does. It definitely is. I mean, you mentioned volatility and where it is, and it's below 16 for the first time in a while. And that kind of comports with when you look at average true ranges. Look at the last, since we've started December, the range on this, and of course that's intraday basis, is different than average true range. But since we've started December, whether it's average true range or daily range, you'll see that the moves that we've had are way under, and maybe way under is exaggerating a little bit, but they are way under what we've been seeing more recently, whether you look at it on a 9-day basis or 14-day basis or whatever. And so, yeah, I mean, volatility has really quite calmed down, which really started the week of Thanksgiving, if you will. And it shows you that the markets have calmed down. The whatever fears that we had particularly around AI, have calmed down. That has not 100% been the case with Bitcoin. It seemed like we were going to have a week where Bitcoin was going to finish up strong and give a little conviction, and that didn't happen. But the market, meanwhile, looks like it could be on a potential launch pad. Chris, you and I look at chart patterns like this, and we're like, okay, this is something I can get behind here as far as higher prices. That's why I've left a lot of my longs on, particularly the ones that are in January and February, and I don't see any reason to run for cover yet.
Yeah, I recall coming out of the NVIDIA sell-off that weekend, we were, you, me, and Ilya were talking on First Call, and you were evangelizing about long deltas and equities out to January and February, and that's really worked out well here for both the S&P 500 and the NASDAQ. You mentioned the trading range. I look at the ATR at 21 days because there are 20.7 trading days in the average month. Coming into today, the ATR for the S&P 500 was 89. Yesterday, we had a 44-point range. Today, we have a 49, maybe 50, 49.75.
Yeah, 62 is the biggest, and that was on DS1.
Yeah, so things are calming down a little bit. And I think that's what gives me the confidence. Low low volume, positive technical drift. Don't really want to overreact or think too much about it. But there's really low vol in the equity markets all of a sudden. And that also goes with all the low vol that we're seeing in bonds here. I'm just going to pull up TLT for the sake of this conversation, but at 2.2 IVR in a market where we're starting to see some fairly meaningful support break longer term, that looks like a head and shoulders, as I've seen a number of people point out to me today on Twitter, in the YouTube chat. But the markets don't seem to be reacting to higher yields. They're not seemingly bothered by it. Do you read into that at all as we make our way into a week where the Fed's supposed to cut rates?
No, that's a good point. I mean, it's something we always used to pay attention to, right? And there used to be this strong sort of correlation, either sometimes working together, which we saw throughout this year, or obviously in previous years, we saw the opposite. Now we're seeing basically no movement at all either way. I don't think. I mean, I can't say just because yields are strongly above 4% and change now that markets have moved one way or the other. I really don't think they have. And I haven't been able to figure out any relationship, Chris. And so as a result, that's what's keeping me back from doing anything in TLT, ZN, or ZB. I mean, you tweeted out something really good the other day, and we talked about it over Twitter about the amount of shorts currently that are in bonds. I usually, that's the thing that I want to get long, but honestly, I just don't know what eventually makes them bounce. And so I'm like a little bit hesitant. I guess I just really want to see a little bit more in the meantime. So I don't know. It's the end of the year. I don't necessarily want to get into a trade where I don't necessarily have a real read on it as of now. And so I don't know. I guess I'll wait to see if there's lower prices in ZN or ZB. But as you have the 10-year yield here, I mean, there's the last couple of trading sessions, you would almost think that there's this positive correlation between the 10-year yield and the markets, because I mean they're basically kind of done a lot of the same thing, and the more near term of that chart kind of looks similar. So I guess that's the correlation, but it's not like we've been able to really read it, because a lot of the times when we've seen 10-year yields move, it's usually because of some huge macro data, and there hasn't really been huge macro data more recently. I know we had PCE this morning, but that's not really huge. We're talking about the jobs reports. We're talking about the interest rate numbers from CPI that we've seen over recent years. We just haven't had those. And so those haven't really moved the market as much, and they're not necessarily, I think, responsible for this 10-year recent movement.
Could yields rising? I mean, Jamal, what is a year ago, a little more than a year ago? The Fed cuts rates by 50 basis points. Treasury yields shoot up in September, October, going into November, and stocks rally alongside them. Didn't that occur here in April and May when yields were climbing and stocks were moving up? So, I mean, hear me out. We just ran the largest government budget deficit for the month of October that we've seen going back to 2020, which is hard to believe, but we're spending as much money now as we were doing during COVID, during the crisis before the vaccine came out. The Federal Reserve looks like they're going to cut rates. We have growth 3.5%, 3%, depending upon what growth tracker you're looking at. Inflation close to 3%. I mean, they're running us hot, man. Expanding deficits, lower rates. Maybe the 10-year is pricing in higher growth and inflation expectations because of policy. And like that's not a problem for the stock market per se if it's a reflation environment. But certainly yields rising the way that they have the past several sessions, especially since the start of the week when Kevin Hassett emerges as the front runner for the Fed. I don't think we can just decouple those two stories.
No, you're probably right. And honestly, you probably, have more of a beat on it than I have. I mean, honestly, I haven't really, outside of the times when we talk, which is like once a week now, I really haven't paid that much attention to bonds because I haven't been that convicted on a trade one way or the other. And so I really haven't looked as much. I've noticed the movement more recently, but I really haven't looked as much. However, I probably get a little interested if, ZN gets below 112, if ZB somehow falls below 115 at some point. I mean, again, these are drastic moves to some degree, especially in bond land. Maybe that's where I get interested. But outside of that, I don't know, man. I just, I can't pull the trigger.
Talk to me a little bit about the metals here real quick. Gold is struggling the past session or so, not really making any progress. Silver obviously had a jump today. Copper joining in on the party. Do you have any strong feelings about these? Again, next week being a Fed week, we don't have any economic data. There's no significant earnings reports. That's kind of where my focus is. Gold vol has really fallen off a cliff here, though. Mid-30s all of a sudden.
Yeah. I mean, it's consolidation. That's what I see. I see consolidation here. And I see a chart that could potentially go higher. It just needs the catalyst, really. And maybe that comes in the form of the Fed meeting on this coming Wednesday, although, not the S&P 500 is not expecting a whole lot of anything out of that meeting. And maybe gold isn't either. Maybe that's why vol is in a little bit. But I think it's just consolidation right now. And that's not, a bad thing considering. I mean, it's been a strong year for gold. Let us not forget. There's no way we can because we've benefited off of the moves to the upside for the most part. So I still have a GLD crab trade, essentially, a butterfly, if you will, just using a couple of different months. And that's where I'm sitting right now. It's only like $600 in premium. So it's probably one of the smaller trades I've had in gold to date. And that's where I'll wait until, otherwise something happens. If we fall, make a move to the downside in a strong way, maybe I, readjust strikes or put another one on. We move up, I'll eventually take my ball and go home.
Jamal, I'm just sorting here on the platform, looking at the 5-day IV changes for some of the biggest movers in the market today. I see a lot of vol compression going on here across the board. Yep. IV index 5-day change, just mostly red here right now. Except, this is, I'll stop complaining about this on air. I got to stop trading around earnings releases. I haven't done it all year long. I did it with snow a few days ago.
Oh, you did?
Smoked.
You did it again?
So that's just why I got it. Just like I'm just done with this. See you next year.
What'd you do?
I just sold some puts before the earnings. I'm like, that's just.
Oh, you did?
I was losing money in this market. Stepping out of my comfort zone. But
Chris, if you haven't learned anything from me as far as earnings go, calendar call spreads, guy. You risk defined. You don't have to worry about anything else if it doesn't go your way. Look, first of all, we're never happy when it doesn't go our way, but you can swallow it a little bit easier if it's just it's not a whole ton of premium. Tell me.
The calendar call king. The calendar call spread king of Chicago.
Right out of Ferris. I know. I did a calendar call spread in snow. It didn't work out, but whatever.
What's your strongest conviction heading into next week right now? All things considered, it feels like oil for me, just continuing to chop around sideways and meander feels like a pretty good bet considering how that's worked out. Natural gas, not so much. The dollar looks terrible, but oil to me is where I'm feeling most secure, believe it or not, being a directionally neutral guy in this product, at least. Do you have any strong feelings about the Mag 7 or?
Actually I don't. I mean, I don't, I hate to be that boring, but when you say strong as conviction, it's hard for me to even, I would say just a general market. I would say the S&P 500 probably going back to 6,900. If I had to pick one, I'll do that just to not be boring. I would say maybe that's the strongest conviction. But, obviously with the Fed week, who knows what could end up happening, but that's the way I'm playing it. I mean, that's the way I'm positioned for the most part, if you will, in markets via those Delta Buster trades. I mean, I feel like a broken record at this point, but I say it on everything I'm on. I got it in SPYs, I got it in Qs, I got it in, Tesla, Microsoft, and a couple. And so I actually have a negative one, a bearish one, in SPX, using 6,900, 6,910 as the call spread, just sort of to offset a lot of the other long Delta plays. So those of you who saw me put on the bearish Delta Buster using the 6,910 and 6,900, 6,910 short call spread are probably like, why is he saying that 6,900? I'm fine if I lose on that trade. Matter of fact, I want to lose on that trade. Hit me, because I'm going to win on SPYs, Qs, Tesla, Meta, Palantir, and the rest. And those are probably my main positions right now.
Well, I logged on today at 6:43 a.m. after I gave my son his morning bottle just to see what the market was doing, and the S&P was trading at 68.79. So to say that today has been a day of watching paint dry, having moved a net 4 points over the past 9 hours.
I know.
Yeah, it's been a paint drying kind of day. The volumes are very low here, but with those volumes low, even though we're seeing a little bit, markets off a few points here, volumes and volatility continue lower. 12 IVR here at the S.
Look, when you got a day like this, I mean, you got to step away every now and again. I literally, no joke, before we came to this show, I was actually, I don't know if I haven't told you yet, but I'm in the middle of starting Mad Men from the beginning. I actually never watched it the first time around. And
because it's on HBO now?
It's on HBO now. Actually, it's so funny. It originally, because, just watching regular TV, I realized they were running the marathon on AMC. And then, of course, they're directing it to HBO, and we have that. So started watching. I noticed one of the train stops that's in your vicinity. Obviously, I think a lot of the show emulates sort of, there's people that kind of live in that area where he lived. I think the train stop is probably in your general vicinity, Westchester County. So I was thinking about you the other night while I was watching the show. But yeah, and my point is I stepped away for a little bit just to do something different, because there's nothing going on a Friday with an hour and a half to go in the market. Like, seriously, I mean, the only thing you're going to do is trip yourself up, especially ahead of a potential catalyst next week, which is coming on Wednesday.
Yeah, he took a different train than I do. He took the Hudson line to get up to Ossining. I take the Harlem line.
Ossining, that's it. Yeah.
To go up the east side. That's it. Hey, that's where our founder's from, right? So not a bad place to go. Is Tom Don Draper? What? We should connect those dots.
Probably so many jokes I could make, but I'll refrain.
It's a good time. That's as good of a transition as ever. Hey, production team, we can pull up the Refer a Friend campaign if we could put that on the screen here. Why not? Oh, it's that time of the year, Jamal. Refer a friend. What happens when you refer a friend? The referrer and the referee, they both get $100 when your friends join. That's right. When a referred customer opens a new account and funds it with a $2,000 initial deposit using a friend's referral code, both receive a $100 bonus. So go to tastytrade.com/referral, tastytrade.com/referral for more information. You've heard it here before, but the offer still stands. And Jamal, it's holiday season. I don't know if we're allowed to say this on air. I'll probably get fined afterwards, but I hear there's a 12 Days of Christmas promo coming up.
Yes, there is. It's going to be big starting next week.
Wow, that's a beautiful graphic. Lots of little surprises, wonderful things coming down the pipeline from the Tasty Trade team themselves. It's a holiday special from our friends at Tasty Trade. Their 12 Days of Trading email series is a daily email with trader-ready topics. They're easy reads, good reminders of what to do and what not to do as we head into 2026. So opt in now. It starts Monday, December 8th and runs through December 23rd. You can go to tastytrade.com/12 days for more information. Jamal, that's enough with the kickers here, but we do have one more graphic to share, which comes from Veneta, I believe, about what stocks may be included. Today is 12/5. The inclusion date there should be 12/19 for the record, just on the graphic itself. But Jamal, these are the 10 stocks that are most likely to get included into the S&P 500 after that 12/19 rebalance. I see SoFi here, Reddit, and then a few other names that I don't think are probably making it in right now, like a MicroStrategy, given how there's talk of them getting removed from the indexes come January, but different story. We can cross that bridge. What do you think of this chart? Are there trades around these names?
Yeah, I mean, look, and again, this is just, I don't think this is in any particular order, just so you guys know. It's not like we automatically, when I see this, you see SoFi is number one. I don't think they're number one, and I don't think there's any order. If they were number one, they wouldn't be doing a share offering today. I can tell you that right now, which they did a $1.5 billion share offering. So again, Reddit is fascinating that, this is a stock that I think not a whole lot of people thought about a few years ago, and then now it's certainly something very interesting. MicroStrategies, look, you're right. I mean, this is a treacherous time for MicroStrategies. I have a trade on. I still think it's one of the more interesting trades on the board. I really do, just because from a consumer sentiment standpoint. AFRM, I think, is also very fascinating in our society. So there's a lot of different names in here. Some of the other ones I know as well. I actually don't even know what they do. I don't know what Astera Labs does. I don't know what Vertiv does. I've seen the names. I don't think I've really traded any of them, though. Coherent, Pure Storage, or Vive. I don't think I've ever traded those. I've obviously traded the others. But it's a good list.
Vertiv is digital infrastructure for data centers. So that seems like it's, hot at the moment. So yeah, they're going to make this announcement today. If I for myself personally, if I'm not going to be good around earnings reports, what money can I make around guessing what's going to get included into the S&P 500?
I got a long-term position in SoFi, so I'd be interested in that. And I'd be interested in MicroStrategies too, but I just simply don't think that that's going to happen anytime soon.
No, SoFi's down 6.45%. You mentioned a share offering. So this will be announced today after the close. We rebalance is technically 12:19 after the bell. I'm sure that we're going to see some news 4:15, 5 o'clock.
Yeah, you know how it goes.
Reddit is up 4.85% of the day, perhaps because they're expected to be included. And we have it as a number 2 on this particular list. Nice to see Zoom's name up there. We can go back to the charts, guys. I don't know. Is Zoom getting popular again? I thought we defeated Zoom several years ago.
I know. I mean, look, Zoom is one of those where maybe it was, there's no maybe to it. It was probably fairly overvalued at $400 or whatever it was. But look, it's obviously still viable. I mean, hell, we're using it right now. So a lot of people still use it. It's not like it's Peloton, right? I mean, these are names that were, pandemic darlings. And so
I use Peloton every day.
I knew Peloton. I knew it was the top. It was like late 2021 when it was still doing its thing. And a friend of mine who in Brooklyn, we're on the phone, and his neighbor was like, "Oh, she was so excited. She had just bought some Peloton stock and she just took delivery on her bike." And I said, "Damn, that's it. It's a wrap." It is a wrap. Wow.
Yeah,
there were signs.
Yeah, that's like the taxi driver giving you stock recommendations, right?
For sure.
When the taxi driver is saying like, "Oh yeah, did you buy any Nvidia?" You're like, "Okay, yep, it's a bubble." That's no Peloton stock. Yeah, those two stocks, the pandemic darlings, really have broken down. Maybe I shouldn't speak ill of Zoom. It does help keep me gainfully employed, I suppose.
I mean, listen, it's viable. A lot of people use it still.
Stocks here are fading off a bit into the closed Jamal, but it's not a huge acceleration of volume. It's a slight uptick in vol. I suppose the move from a 12.1 to a 12.6 IVR is something that we could theoretically discuss. For next week's Fed meeting here, I think maybe perhaps it's worth just anchoring that conversation a little bit. The market's pricing in close to a 90% chance of a cut right now. And it's not like this is a market that's heavily reliant on cuts moving forward into the future, right? I see cuts scheduled for December, 51% chance of a cut in March, maybe April, 74%. So that's one for 2026. The second one arrives July, 54% chance. But then no more cuts until potentially April of 2027. So we're heading into next week with a kind of a low expectation here. Maybe that's why there's no vol in this market. No one's really worried about a Fed that's going to be led by a Fed Chair Powell and what they have to say because, heck, tick-tock, 6 months left until a new guy's running the show.
Yeah, I was just about to ask you, is it 6 months essentially? Okay.
May.
It was literally 2 weeks ago we were talking about a wall of worry, and make no mistake, there definitely was. The market was a little wobbly. It came down to overvaluations in AI. It came down to what was going on with the Fed and were they going to be able to cut. And it came down to, Bitcoin, how rough how rough of a patch that it's going through right now. And look, Bitcoin is involved in a lot of different areas of our market. There's a lot of ETFs that hinge upon that. So you better believe when it's having a tough time, the market's going to have a tough time a little bit. But 72% is pretty strong. But that wall of worry is like almost like it's been knocked down just a little bit, not 100%. It's still like kind of a half of a wall, right? But because people are still talking about AI, they're still talking about the circular situation with money back and forth, et cetera. Bitcoin is obviously still weak, but the Fed situation, the Fed rate cut situation completely evaporated as we get largely almost a 90% chance of a rate cut at this point. So I don't know. I think the market has kind of just looked past things a little bit going into that last week, the Thanksgiving holiday, and coming out of it into this week. And I think largely that's still going to be the case unless for some reason something weird happens at the Fed meeting that the market absolutely isn't pricing in at the current moment. I think it's just, anchors away from here to go higher.
There's two things that stick out to me. I did get a question on Twitter earlier. When are we going to get more positioning data? You haven't mentioned it recently. I haven't mentioned it recently because it was affected by the government shutdown. The CFTC COTS reporting schedule shows that we will officially be caught up by January 23rd. So for folks who look at the futures market positioning right now, it's going to be way delayed. It is not a timely indicator. What are we getting at today? So we're getting the data that's over a month old for positioning through October 28th. I don't know what that tells us. I don't know how useful that is. And COT positioning data is already something that, it's like, which way is the wind blowing? You're not necessarily going to act on it immediately. I would then point to something like the AAII sentiment survey, which following the Thanksgiving rally, there has been a meaningful flip in sentiment here. Bearish sentiment drops by nearly 12%. All of it swings over to the bulls, which are up by more than 12%. This sentiment right now in the market is pretty close to the 1-year bullish high of 45.9. So all of a sudden, this is looking less of a market that's neutral. We talk about the wall of worry being in place. It certainly feels like there is one still. But when I see something like this, it tells me that that wall is starting to crumble a bit. And, with no volatility in the marketplace heading into next week, it could be a really easy setup for things to go haywire Wednesday afternoon into Thursday, just like a temporary dislocation where everyone is kind of caught off guard. So I think that my bet for next week, it's a phrase that you like to use with me a lot on Futures Power Hour, reducing your beta weighted deltas. And that is absolutely something. It's not something I'm going to do today, but I have a lot of positions on right now, Jamal, that are working, that are not working. I got to just clear the book out a little bit.
I haven't seen you with this many positions in a while.
Yeah, well, snow is eating my heart, and bonds I had to finally get out of today. But it's low volatility draws me into trade a little bit more. But now that we're going into this event risk, I've got to take my foot off the pedal and just reset the table so that I'm ready to deploy capital perhaps on Thursday, Friday this week.
No, I love that idea. I have quite a few positions myself, but again, a lot of them are in Jan and Feb kind of on purpose. And at least, if I have 20 positions, the main ones of the 7 or 8 are ones that I put on around whenever that was. I don't remember what Thursday that was the Thursday before Thanksgiving, whenever that was, the day the market was down pretty big. It was a day where we did OTCL from the floor, and I put on a lot of long delta positions there.
The 20th, yeah.
I don't feel the need to take those off. They're January, they're February. I don't feel the need to take them off right now. Partly because of what you just showed. Like the sentiment, I believe that. That's kind of what we've seen right now. We see that also in volatility. Volatility's come in some. We see that also in the S&P 500 names above the 50-day moving average. It's just kind of fair right now, but it's way off of its lows, so that's a pretty decent spot. And we see the chart you showed at the very beginning, the S&P 500 and where it is potentially on a launch pad. So I'm just kind of waiting to see that out. And again, because my positions are in January, February, I'm not too worried about it. If I had like December stuff, I'd be moving. I'd be moving stuff further out for sure. And I feel like most of our people probably don't have that within that December time period. But I think anything 0 DTE, you got to be a little nervous about heading into this week because anything could happen. Like Chris said, I mean, volatility is low, but things could quickly change. This has not been the 15 VIX environment for most of this year. We've been in the 17 to 18 VIX. And by VIX, I mean the index, not so much the future, and that's come in some. So we could get a pop back up. This has been an interesting year.
We can mark the close there, Jamal. You get the final word. S&P up by 0.15, NASDAQ 0.4, the Russell up by 0.45. Tough day for bonds, tough day for Bitcoin and crypto generally. Bitcoin off 3.5 and Ethereum off 3.8%. Maybe that's what we'll be watching this weekend because Lord knows I'm not watching the Jets or the Giants play. Jamal, good luck to me. Bad luck to Ryan Sullivan for the Tasty Championship. Hopefully I'll see you on the other side of that matchup, my friend. But until then, we will see everyone else on First Call on Sunday night. We will see everyone else on First Call on Sunday evening. Myself, Jamal, Nick will be there 5:55 Eastern, 4:55 Central. Hope everyone has a good week. And until then, you've been watching Tasty Live.
Good morning, everybody. Welcome to Trade Live.